Roll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stock realm, the healthcare system. Now, this is a city, they've gone there, they've done the research, and their analysis is that hopefully this will peak out in January, and therefore it will not be as big a scare as people might make it out to be. So there's a small silver lining amidst all the gloom and doom today.
Well, whatever it's worth, Chinese markets haven't tanked because of this virus. So while we may be reacting to it, they are down 3% in the last 1 week, which is as much as the rest of the world.
You know, sharpest reaction actually to HMPV was in the Indian context. But I think just one.
Sorry, I'm just saying. I think if Indian correction got coupled with HMPV scare as well as the fact that the banking numbers weren't the strongest.
HDFC is to be blamed along with RBL that day from what I remember.
Therefore, it's a combination of things as well. But hopefully this ceases to be a scare. That's the limited point. But sorry, you were saying.
No, I just wanted to add one more factor, of course, which I'm sure you're going to address in your trade setup as well, is the advanced estimates of GDP which came in yesterday. And I think that'll be a bit of a downer. So you are now likely to hit a 6.4% in this financial year. H2 will be slightly better than H1, but it's clear that we're missing every target that we had set for GDP. This year, in terms of India's GDP growth, is not a good number. The first advanced estimates have shown that. I mean, we have to now admit that. And I don't know how much of a downer for markets, but just in the overall view, where anyway corporate numbers are not great, consumption is a question, you don't have great GDP data.
If again the silver lining up there though, if Shami's findings yesterday are anything to go by, and if there are tax changes that happen, and then if the Reserve Bank of India in its wisdom finds merit in cutting rates because inflation is likely to be lower, there's a Bank of Baroda note which says that the latest print will be lower, then the market will look forward to saying that, hey, the government is doing something to boost consumption, the RBI is cutting rates, GDP is behind us, we know it's bad, let's look forward. Hopefully the market's having corrected enough at 23,500, give reason for some upside.
I'm beginning to think, I don't know how much I want to believe these reports and these silver lines. In November last year, we talked about Rhythm Desai's Morgan Stanley report, where he said CAPEX should be seeing a big pickup in December. Correct me if I'm wrong.
Starting December.
We've seen not a rupee coming into CAPEX cycle from the government, no big announcements. Whatever you're seeing is maybe a little bit in defense, but in construction and infrastructure, that spending has not picked up. So and I also, a part of me believes that whatever we are seeing right now is a time correction. We've talked about this extensively. This is truly what time corrections look like. The corrections are not sharp, they're not significant, but they test every bull on the street by being in that range, by testing your patience and making it extremely tough to take a trading call on either sides. And this is true to label a time correction in that sense. Well, we talked about how there was a very sharp fall on Monday. What was maybe disturbing was that Tuesday, which was yesterday, saw the markets recover a little bit, but it didn't come with that much gusto. It was very unconvincing, and in fact, we actually closed about 100 points from the day's high. So conviction is what the street is lacking. Volumes have returned back to the markets after being quiet towards the end of December and the early part of Jan. So world markets at whole have missed out on the Santa Claus rally. Now, what is to be seen is if Jan, like it has in the previous many years, been negative for the markets. We also have earnings season that kicks off tomorrow, so markets will want to react to that. Up until that, we'll be reacting to macros and may potentially be in no man's land. It was a tight trading range on the index. We closed marginally about 23,700, if that's anything to take heart from. 23,800 again has proved to be a very important level of resistance that the markets are failing to take out or have failed in the last few days. We touched that 23,795 mark and reversed from that. That was your intraday high in the session to close nearly 100 points lower in the session. As long as we remain below the 200-day moving average, which is at 23,900, the texture of the market remains a sell the rise. So it's not buy the dip, it's sell the rise till we conclusively on a closing basis take out 23,900. Bank Nifty, that could be a little bit of a positive bounce back. It closed about 50,000, so that would be a little bit of comfort that traders would be seeking. We did see on the F&O picture as well that the futures and the open interest was seeing an increase, which usually means a long build-up is what the Bank Nifty would have seen. Couple of stocks, ONGC was your top gainer in trade, largely on back of CLSA's report, which called it a high conviction outperform. Zomato, on the other hand, was one of your big losers in the session, amongst the F&O space really, after Jefferies downgraded the stock. So that was what the setup looked like. As we go into trade today, I think, Neeraj, another day of a tight range. 23,900 is important. A close above that would be sort of bring a little bit of the bulls in. But I think it would be unlikely, largely because we kick off earnings season tomorrow as well. And I know while yesterday's trade, and I've said this, on the benchmark didn't give you much to desire, there were a lot of stocks in the broader markets that didn't do too badly actually. So it remains a stock pickers market. Yeah. So I think PMS guys are the ones buying. Maybe the passive and passive plus guys are sitting out.
Mutual funds are buying as well. DIIs are, you're seeing the DII.
I mean, passive large cap is probably not seeing action. Passive mid cap may not be. So I think, yeah, active stock picking is what's happening. But I think that active stock picking was happening in the broader market yesterday.
Yeah, could well be a year wherein SIPs into Nifty ETFs may not yield results, but maybe well-managed small cap funds or multi-cap funds may actually do well, because independent of what happens to the Nifty, there will be mid-cap and small cap pockets will do well, right?
So fund managers are going to earn their salaries this year.
Oh no, justify their salaries this year, you mean.
Justify their salaries
Also, I
this
think
year.
one more small limited point is that while the last few years has been about a broad-based rally, so anything momentum has done well, I think that nature is also changing. So if you look at some of those momentum funds which have given you 50-60% returns last year are now trading negative. So I think UTI Momentum case in point is down 6%. This is a fund that's done a CAGR of nearly 30% in the last 5 years. So you might want to do a strategic or tactical change on portfolios where you want to manage risk more importantly than manage returns, I would imagine.
Yeah, I think everybody's talking about that. Staying disciplined is probably a lot more important this year than it has been in the past few. Maybe it was very important in the last 3 months of the last calendar as well. So bear that in mind. But yeah, broadly, I mean, yes, I mean, the implied open tells you very, very unlikely, unless there is a sharp reversal today, that we close above that 2300 mark. If anything, we'll probably start off lower. Who knows if we make a dash much lower, because, you know, it's a global markets backed sell-off, or not a sell-off really, but a downtick that is likely today. The only respite is that Dow futures viewers are in the green as we speak, so there is some respite. But if there is a slide, I mean, most experts, and I spoke to a couple of them on the phone yesterday, look at technicals and derivative positions, and they said a slide towards 23,500, if we were to see that, would really bring about a near-term panic bottom in place. We might be close to those levels. So shorting aggressively at these levels after the Nifty is corrected the way it has may not be the best of ideas. And remember, viewers, for everybody who's thinking of where to bet, here's a pocket, primary markets. Look at the kind of subscription to standard glass lining technology. Subscribe 34.85 times. Now, it's not done an Indo-Farm equipment subscription.
Or a Mamta machinery.
Or a Mamta machinery. But day 2, 34 times. You suffice to say this will probably get subscribed over 100 times very easily. Very likely could nudge 150. Who knows, may even go on to 200 times overall. So certainly keep an eye out for this one. The only caveat is that for all the kind of, I mean, the second highest subscribed IPO, Indo-Farm equipment, the listing happened at 22%. You know, for people playing for the pop, 22% is great, is good, but it's not remarkable. I mean, it is okay.
My problem with this whole primary marketplace, and if you think we should do a little bit of an analysis on this, while they all get subscribed anywhere between 50 to 200 times, they get a little bit of a pop-up on listing day. But if you analyze counters that listed between maybe August, September last year to right now, they're about 20 to 30% below their listing price. So Northern Arc, case in point.
Yeah.
Sanantan Textiles, Mamta Machinery, I haven't looked at. Hyundai has remained flat because I don't think it got that flare up. And Swiggy's done okay, but I think 9 out of 10 listings have not been able to generate wealth. There might have been a pop trading gain that you've had, but that's pretty much been it.
Yeah.
Which is again worrisome, right? Because it just goes to show you that the money is transitional. It's not sticky money that's coming
So anyway,
into...
50% of people who invest in IPOs want the pop.
And they don't even know the fundamentals of the company.
And they exit. So
it's a quick buck.
So that's 50%. And
so while the regulator tightened the screw on trading and doing all of that, I think this is another way to make quick bucks.
No, and also on SME IPOs as well. But yeah, big day today for stocks.
Yeah, we've got a few and only a few from my end. So I'll quickly highlight those for you that we should be tracking in those. It's all about business updates, and that's largely been the theme as well for the markets in the last few days until, of course, tomorrow shows earnings and then we focus on earnings. Quick one on Signature Global. Very solid sort of business update coming in. Pre-sales have grown 120%. Now, this is YOY, right? At 2,770 versus 1,260. Collections have also increased about 40%. Company has recorded a 29% growth in number of units sold at 1,518 and a 90% growth in area sold at 2.5 million square feet versus 1.3. So it's looking good for Signature Global. We'll connect with the management to understand which geographies are doing well, what sort of projects are picking up interest, and of course what their pipeline also looks like. Soba, on the other hand, wasn't too impressive. Surprisingly, they've been leading from the front in the last few years, but this one has again become a dip in their case, where pre-sales have actually dropped 28% to 1,388 crores versus 1,951. Average price realization though has grown, so while profitability could be improving, the top line seems to have taken a dip, and this may be specific to the company from what we understand to come in at 1,363 crores versus 11,732 crores. So specific to a company, maybe specific to a project that could be facing delays. It could be more factors that again I would imagine are not strategic in that sense and more like transitional, which may indicate that a catch-up could happen next quarter. Tata Steel, numbers have come in which weren't bad. India production has grown 6%. So while everyone's concerned about, and of course I highlighted this too, that capex is slowing down and business isn't looking great just yet, those numbers are actually reflecting a decent business environment in India. Production is up 6%. Deliveries have increased 8.5% YOY. UK production is flat because of everything that's happening with the facility there. Netherlands production has surged 48% and deliveries have also jumped 18%. So I think the markets would like to view Tata Steel positively. They'll view Signature Global as well positively. It is going to be Soba that may be on the sell side this morning, guys.
Okay, let me come to my stocks on the radar, and if you can pull that up as well. First, auto is going to be in focus. Of course, IT is going to be the big focus of the day in any case. Nasdaq down, TCS numbers tomorrow, IT index was wobbling yesterday, bond yields are up. So, weekday for IT, let me put that up for you. In general, that entire pack, but specifically I would look at autos because a couple of things that have happened overnight. M&M has announced its pricing for its new electric vehicle, and Maruti has said it will unveil details of its first EV as well at the Bharat Mobility Expo, which will commence in Delhi. So as far as M&M is concerned, they've announced pricing with a range of 26.9 lakhs for the top variant of the BE6. And for the XEV9e, the top variant will be priced at 30.5 lakhs rupees. Bookings will start from Feb 14th and deliveries are expected by March 2025. Now, the pricing is why you might see M&M doing fairly well and could be in focus. I mean, all of the players who have a very strong EV play will be in focus. Dr. Reddy's is the other one, thumbs up here because of the Nuvama note, might see some pop today. They've upgraded the stock to a buy from a reduce and set a target price of 1553. They've said that the management has mapped out strategies to mitigate the impact of the Revlimid patent expiry. Remember, Revlimid contributes 40% to FY24 of EBITDA. and this has always been one big overhang for a Dr. Reddy's. R&D spend to decrease in FY27 and soften impact on EBITDA from the Revlimid patent expiry. So that's the plan of the management, to reduce R&D spend, key asset launches to fully offset revenue impact and 80% EBITDA losses. They will be raising. So what the brokerage Nuvama has done is they've raised the FY27 earnings by 15%, and they've valued the stock at 24 times FY27 earning per share. RVNL also a thumbs up. They've signed an MOU with Dubai-based GBH International Contracting. They will be exploring business opportunities in civil infrastructure and that sector across GCC countries, and that could be a bit of a positive on that stock.
Well, the stock of the day to my mind could well be Ashiana Housing. Very strong Q3 update amongst all the ones that have come out. The total area booked stands at 6.75 lakh square feet versus 3.35 lakh square feet. So they've virtually doubled the sales or the area booked. But the value of total area sold is even better, 454 crores versus 173. So not only have they seen an uptick or doubling in the total area booked, but the quantum has also gone up in terms of pricing, I think, and which is why Ashiana Housing could well have a good day in trade. So keep an eye out for this one. 6 new stocks added to the derivative space. Now, some of them tend to react. I think the ones where the activity is very brisk is NBCC and solar industry. So watch out for that, but don't rule out a Gland Pharma or a Torrent Power either. So these are a few others that you want to keep in mind. And from amongst the brokerage notes, that one that stood out for me was the HSBC note on Airtel. It's a buy and a target price of 1940. So they've maintained the target price, but they're saying that they expect the dividend to rise by 114% to 17 rupees per share in FY25 and expect dividend to quadruple to 34 rupees in FY27. So dividend yield seekers, this might interest you, but they also say that the growth levers are intact, which is the rising mobile ARPU, expanding home broadband subscribers, and rising free cash flow. The interesting point that they make is that the parent may need cash, and therefore the parent will ensure, or rather the promoters will ensure, that the company pays out healthy dividends because they would need that dividend as well for other businesses. So bear that in mind. Could be an interesting one. Airtel, if it reacts, you know why it is reacting in trade today.
Okay, IT in focus this morning. They're all set to kick off the earnings season this week. In fact, tomorrow you'll hear from TCS. Rucha joins us to tell us what the street is penciling in from the pack. Rucha.
So yes, TCS kicks off the third quarter earnings season by reporting tomorrow. Let's look at what to expect from the IT space. Number one is BFSI, that is the banking sector, is expected to support revenue growth. Now remember that most of the management were talking about how banking is reviving. Number two is the wage hike, which could affect margins of companies like Wipro, Infosys, as well as LTI Mindtree. However, Infosys, whether they will come out with the hikes this time or postpone is what we have to look out for. However, depreciation of rupee against dollar is expected to help margin. Remember that rupee hit a record low, so this could also aid the top line of IT companies. But furloughs are expected to impact the top line as well because of lower number of working days. So this one might negatively affect. So we'll have to check whether furloughs are the same as the same time last quarter, or a little bit of more is what we have to watch out for over here. But let's move on to what are the particular elements to be watched out for in the companies. Infosys HCL Technologies guidance for FY25. Yes, this one is to be watched out for. Third quarter guidance of Wipro, demand trends as well as discretionary spending uptick. Remember that discretionary spending was still under pressure as mentioned by Accenture. So yes, what the Indian IT companies are talking about, this will be a key thing to watch out for. But also green trends in the BFSI space, of course, but green shoots in consulting business. Now, this one will be important for Wipro because remember that Accenture mentioned about how consulting is picking up for them. So, this might be very important for Wipro. And lastly, yes, hiring, wage plans, as I had talked about, and management's perspective on how Trump policy changes would affect them. So, this is what we'll have to hear from the management, what they are expecting and what could likely be the impact for them on the top line and the bottom line. This is a key picture of the earnings calendar. TCS tomorrow, HCL, Infosys and the other companies next week. HCL, Infosys on the same day, and Tech, Mahindra and Wipro as well on the same day. So busy week, busy time next week is what we expect from the IT season.
Starting off tomorrow, actually, so it's going to go hectic. It's going to go all tech. And of course, it's going to be all about earnings. There's been so many moving parts for the sector, right? Apart from specific earnings, company-specific problems, it's also what happens in the US in terms of commentary, in terms of how the dollar has been reacting. So all that and more, we'll try and understand from Moshe Khatri, MD of Equity Research of IT Services and Payments at Wedbush Securities. Hi, Moshe. Good morning. Thanks for joining, or rather, good evening. How are you feeling about this quarter? Are we in for disappointment? Are we in for a surprise? What would we gear up for? How would you view the Indian IT sector this quarter?
In general, the sentiment is probably a bit more positive. A lot of this is a function of the fact that you have a new administration that's coming in. They're probably going to be a bit more business friendly. So the sentiment is important here. The quarter should be fine, and obviously you have some recent movements on the FX side that should help margins. These are going to be tailwinds for margins. That's going to be a positive. But you're dealing with other things, right? There's some debate about H-1B visa programs. What does that mean for the sector? Are we going to go through a cap? That could be an issue down the road. The macro itself remains pretty fluid, right? In terms of economic activity, the policy of the new administration. So, as you said, there are a lot of different factors that you really have to kind of incorporate into the sector to kind of get a feel on what happens during the next 6 to 12 months. But I would say net, despite this fluid kind of situation, I would say, compared to last year, we seem to be in better shape in terms of pipeline activity, focus on discretionary spend. These should be, I would say, favorable for the next 6 to 12 months.
Anticipation then for the quarter ahead, because for now, going through all the reports that we've seen so far, it seems like it's going to be a mixed bag. So on one hand, you have a persistent, you have an HCL Tech persistent. It seems like they are going to lead actually on the sequential growth front, but you have Wipro that could be a laggard. You have guidance on HCL Techs that could be up, but Infi on the other hand could lower guidance. How are you splitting the basket?
Well, first of all, you can't really bundle all of them together because they're a bit different. I would say companies that have more exposure to discretionary spending will probably continue to struggle. Companies that are able to process and ramp a lot of the cost takeout deals should be fine. So I think, a lot of this really depends on the mix of revenues. The revenues that are coming in from the different verticals. The last thing you want to do is bundle them together. So each company is going to have its own thing to kind of focus on. But net, again, remember the December and March quarters tend to be seasonally weak for the sector. I would say the focus will be on guidance. Guidance is going to be a big deal. General commentary about the environment, that's what everyone's really going to be focusing on at this point. And the background of all this, you have Accenture that reported numbers a couple of weeks ago. They raised guidance. So that's kind of the backdrop here.
Moshe, hi, good morning from where we're sitting, of course. Just trying to understand how you were seeing some of the biggest players specifically, and you made a valid point that we need to look at these companies individually. So if I asked you to raise or down a little bit on, say, a TCS, because TCS reports tomorrow, let's start there, and then a Wipro and Infosys, what would you be looking out for in each of these?
In my view, the tier one offshore vendors are in a pretty decent shape, just given the fact that they have a significant amount of exposure to cost takeouts. The pipeline has been looking pretty good, with the exception of Wipro. And in general, we've seen a peak number of deals that came through the pipeline, and these have been ramping. So these should help sequential growth. That's number one. Number two, as I said, you have the margin tailwinds coming in from FX. So that should also help. So that's why I'm not really worried about the quarter. The real question here is what management teams are going to say about, the general kind of spending environment, what clients are telling them. Where are we in the budget cycle? Are budgets going to be on time? Are we going to see some delays? That will be kind of an interesting data point or data points that will give us a good feel on what happens during the next 6-12 months. So I'm less focused about the quarter, and I'm more focused about the general kind of commentary and the demand metrics that the companies will be talking about. And I wouldn't be surprised if, in general, the sentiment is going to be relatively positive.
Just on that point about FX tailwinds, and if you look at the Accenture numbers also, that was a big part of it. Of course, the outlook was getting a little better. Do you see that now as a positive booster continuing into the next couple of quarters? You said that's the padding that we have for this quarter, but how far do you see that advantage continuing?
Well, first of all, not all of it's is going to get passed through in terms of profitability. I'm assuming what we've seen in the past is companies will be taking some of that profitability and reinvest it in the infrastructure and in people in general. So, historically, management teams have been very disciplined in terms of what to do with the incremental profits from FX. So I don't think you're going to see this being passed through totally, and you'll see a pretty good mix of reinvesting in the business versus, seeing that in better profitability for the sector.
Moshe, good evening. I was wondering when I talk to management, should I ask them about whether budgets are getting finalized in January, or will companies in the US in particular take the decision post-Trump swearing in and some glimpses of what the first 10-15 days do? Could it be a possibility that what usually used to happen, presumably in Jan or by the first week of Feb, could get delayed a little bit to maybe mid-Feb or end Feb in terms of clients finalizing the budgets because of this January 20th event? And could that kind of impact the year-on-year growth that IT companies could show, either in terms of reported numbers or in terms of the commentary for Q4?
That's a great point. And in fact, we've seen budget delays for the past 2 years consistently because of that uncertainty. Now, the real question here is whether management teams are going to feel comfortable enough that, as I said, this seems to be a more business-friendly administration, that you'll see budgets ready this time. I would say 50-50 in terms of that probability, right? So that's something that we're always looking at.
Just one last point, Moshe. We talked a bit about commentary on business outlook, but we've avoided the elephant in the room, or the big T in the room. Your take on what a Trump administration is actually going to mean for Indian IT? There's a sort of mixed view out there. Wondering what you think.
I think you have elements within the administration that will be pretty much leaning towards, leaving the H-1B visa program as is, just because internally in the U.S., we do believe that there is a need for skilled labor. So I don't think they're going to do anything to impact that. And I think in general, if you have a more business-friendly administration, this will be, I would say, a positive in general for spending. IT services spending, tech spending, discretionary spending. Remember, we've had 2 very tough years on the discretionary spending front. I'm not suggesting that we're going to go back to where we were during the pandemic in terms of peak levels, but it seems that we're headed towards, I would say, a better picture for that, or better scenario in terms of spending.
All right, thank you so much for that, Moshe Khatri there. Always a pleasure to speak with you. Time for a very short break. On the other side, we get you the top trading ideas for the day. Stay tuned for all that and more.
On my face. Chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is on my face. How do you define a disruptor?
The idea was,
welcome. You're watching India Market Open. We're gearing up for a rather muted morning. Remember, yesterday's recovery as well on the street was not very convincing, came in on big volumes, but the Nifty has failed to close about 23,900, which is your 200-day moving average. Bank Nifty was a little bit of a standout trade, managed to recover bow levels of 50,000, so that could have been giving some hope to the bulls on the street. That's what the picture looks like on the Nifty 50. Jan futures are trading at a 90-point premium. There's also a little bit of increase in OI, which means that we could be expecting, or rather seeing currently, a long built up on the Nifty 50. Bank Nifty, after making that move yesterday, is seeing a decline in OI but an increase in, of course, the premium. That looks pretty healthy, up about 213 points on Nifty Bank futures. So again, a mixed picture playing out in terms of Bank Nifty. Even though the rally may continue, it may be capped at higher levels. In terms of the calls and put action, it's here for everyone to see. So you've got 24,000 and 24,200, which seems like it's seen the maximum amount of addition in OI, very clearly indicating that that sort of becomes the cap or the resistance the markets will be facing in the next couple of days of trade, or at least today for sure. So 24,000, 24,200, that of course followed by 24,300 is where we are seeing activity. On the downside, support would be sitting at levels of 23,500, so that's all the way out, about 600 points out, or 400 points out from where we are this morning. That becomes important support, followed by 23,300, which is where you've seen enough and more addition in terms of OI. So that's your trading range really, 23,500 on the downside, followed by 24,000 on the upside, where you've seen quite a bit of activity on the call side. Well, we have with us Avni Bhatt now of Max Health. joining in with the top trading ideas. Avni, before I go into specific counters and trading strategies, how are you feeling about the index? There has been an increase in OI, Nifty futures are trading at a premium. Do you feel like there could be a little bit of a push from these levels as we get closer to maybe a 200-day moving average?
Good morning, everyone. Yes, so as you rightly pointed out, there has been a good bounce back yesterday, but it lacks confidence. It formed a small bodied doji pattern yesterday, an inside bar, and overall there was no major long addition in futures, just about 1% in Nifty. So basically the confidence is lacking, and the area of around 23,800 to 850 is very, very crucial. Only once it crosses that level, then we may see Nifty head towards around 24,000. And on the downside, the support is at 23,500. From a short term to intraday trading perspective, I think 23,630 should be washed out for today. In case if that level breaks, then we are heading towards 23,500. So basically, it's going to remain volatile and indecisive between the range of 23 to 23,850. And once it crosses 850, it may head towards around 24,000. But we can say that Nifty will be out of the woods and without any fear of another round of sell-off. That would happen only once Nifty closes about 24,250. So on a broader perspective for this month, this is the range. Within this range, I think it's going to remain pretty volatile.
Well, Avni, you've got a call. Let's start with Tata Motors first, right? You want to take our viewers through what is the strategy on Tata Motors. You're recommending buying the 800 call at 22. And of course, you're expecting an upward move on Tata Motors. You want to take us to what the levels are that one should watch and initiate trades on?
Yes, so Tata Motors, if you look at the move right from the lows of 420 to the highs of 1180 on the monthly charts, then it has completed the 61.8% retracement of that entire move. And now, after 2 weeks of consolidation, the stock has given a breakout above the congestion zone of 775. And I think there's a good volume pickup in the stock. There's a lot of unwinding, massive unwinding seen across strikes from 770 to 800. So it looks likely that in this month, in January series, we may see the stock move up to around 830 to 840 levels. But we are not expecting a one-way move on the upside. It may consolidate, it may spend some time and then keep moving. So the bias is positive. And that's why we are going for a bull call spread strategy and not a vanilla call option, wherein we are buying 800 call, which is almost ATM. It closed at 793 yesterday. And we are selling 830 call, which is the resistance that we are expecting. The difference between the premium outflow is around 11 rupees. We are expecting it to expand up to around 19 rupees. That would translate into a target of 10,400. And you can keep a stop loss of 5,000. That would be in case if this premium outflow shrinks to 4 rupees, will trigger a stop loss.
Avni, very lastly, what is your trading call on Max Health? You're constructive on the stock too, but limited risk.
Max Health has been a very silent mover and not many eyes on the stock. But yesterday, it has formed a bullish engulfing pattern on the weekly charts. And minor retracement was seen day before yesterday. But yesterday's move, it negated the entire negative setup and giving a fantastic move on good volumes. There's long addition in futures also. At the same time, there's significant unwinding in the call writing positions at 1200 call. So this stock, I think it's going to be a momentum play. It's going to give a very quick move on the upside up to around 1240, 1260 levels. And that's why we would go for a vanilla call option of ATM again for January series, 1200 call. It closed at around 47 yesterday. We can accumulate in the range of 42 to 45. And on the upside, it can be almost a doubler. 80 rupees would be the target and stop loss can be kept at 30 rupees.
For the Ravni, so two constructive calls coming in. It's good that you sound a little more positive than the rest of the market has been in the last few days. So a glimmer of a little bit of a hope that the markets may see some upside, even if it may not be a runaway rally over the next few days. So that's the call coming in on Max Health and Tata Motors, both on the long side from Avni. But well, on that note, Neeraj, Tamanna, I'll hand it back to both of you.
Well, why is it that I felt that Avni was essentially echoing what we were talking about in the morning? A bit of a downtake, but maybe a rally from lower levels. Let's wait and watch.
A bit of a downtake, but maybe a rally from current levels.
But
that's how we've got to trade it, right? It is a tough market.
No, but more importantly, we as journalists shouldn't be giving out trading opinion any which ways. But yeah, the feel is that experts are saying that there could be a downtake, 23,500 could be a support, and we are very close to near-term bottoms in place.
And until then, I guess it still is a sell on rise if you're playing that 100, 200 point on the index.
Very likely, yeah, very likely. Anyways.
Okay. The other stock to watch this morning is Ola Electric. They've received a SEBI warning over a disclosure violation. The regulator pulls up the EV maker for announcing expansion plans on social media first and not on the exchanges. Tushar joins in with more details. What exactly is this violation that SEBI is talking about, Tushar?
So, hi Tamanna. So on 2nd December, the Ola Electric founder Bhavish Agrawal posted on X, formerly Twitter, that the company will be expanding its sales and service network fourfold from 20th of December. That it was only in the afternoon that BSE as well as the NSE were informed in an exchange filing about these expansion plans, and this hasn't gone down well with SEBI because SEBI said it's in violation of multiple clauses under the Listing and Disclosure Act that the market regulator has. So it's kind of a stern letter that has gone out to Ola Electric. While this will not have any impact on the financials of the company, but it has to watch out for such announcements that the company makes on social media. To be sure, the expansion didn't happen on 20th December either. It happened on the 25th of December, where the company opened about 3,200 outlets in one day alone.
You know, I'm just recalling the story that you did, in fact, Tushar, about key, top deck and key personnel stepping down, and then the timeline of that and when the disclosures came in terms of SEBI notice. And this is not just an Ola thing. I think a lot of new age companies which are used to communicating with their consumers on social media have extended that same way of communication to their investors as well. But you can't really bypass the exchanges. You have to stick to, I suppose, what the regulatory requirements are, and that's one example of this. Ola Electric in focus this morning. Anyway, keeping up with the auto space, a lot of action there. Maruti Suzuki is set to unveil its made in India for the world e-born SUV. This is what they're calling it, the e-Vitara, at the Bharat Mobility Global Auto Show 2025. Puneet is joining us with more details. Puneet, the reason why this is exciting is because, for years we're waiting for that rightly priced electric vehicle which can go to mass. Is this the one, and what does this mean for Maruti?
Well, definitely. And I think while Maruti has been late to the party, it's better late than never specifically. While the pricing is one of the major things when we speak about any kind of launch from Maruti Suzuki, this might be more of a premium launch on the SUV side. That's what's expected. And while we've seen other launches which you discussed in the morning of M&M as well, with the Born Electric EV starting at around 18.9 lakhs, the curve is at 17. MG is a price between 13 and 17. So somewhere in the middle is where Maruti would want to find its sweet spot. Apart from that, the company's also unveiled E4Me, which is a vision for their electric vehicle future in the country as well as for the world. This will be, of course, a comprehensive infrastructure also for its electric vehicles, and this is what is expected from something like a Maruti Suzuki, because they not only build a car, they want to build a whole infrastructure around it, and that's what's expected from this particular launch as well. This was, of course, this will be the first strategic showcase of the the electric SUV in the country. Just for some context, Suzuki Motors had unveiled this first electric SUV e-Vitara in Italy, in Milan Auto Show. This, of course, is expected to go for mass production in spring of 2025. And the eVitara has also developed a new platform which has been developed by 3 global companies, which is, of course, Suzuki, Toyota, as well as Daihatsu Motors, all 3 of us from Japan as well. Now, this will be, of course, competing, as I mentioned, with the Tata Curve, as well as the Mahindra and Mahindra, the Dawn Electric, as well as the XEV9, as well as MG in a very big way. And it's also expected to rival, Hyundai Creta, which is also expected to launch in this particular time. But as you rightly said, the pricing will be one of the key factors to watch out for. And while Mahindra has mentioned that they are looking to have roughly about 5,000 units
have any idea, Puneet, of what the pricing could be?
Well, pricing might be a little difficult, but it's going to be essentially not, it doesn't seem to be a sub 10 lakh car. That's what I think the expectations are from the market.
If the Grand Vitara is not.
Yeah, Puneet, if the Grand Vitara hybrid is about 25, a safe assumption that the EV would be northwards of that?
Well, it would be somewhere, it seems very unlikely that this might be above 25 lakhs, but if it is, it's going to, because, you have players like Tata and Mahindra having starting launches from somewhere around the 17 to 18 lakh mark. So, if it's extremely priced at a premium, it would not entail, because Maruti is anyway very late to the party because of the last 2 years we've seen the growth as well.
They can't afford to price above 25 lakhs. That's interesting. Thank you so much for that, Puneet. And the pricing is the whole game, isn't it?
Yeah, but I still think, I may be wrong here, but I still think that they would price an all-out EV at a premium to the hybrid version. It can't be the same because otherwise it cannibalizes.
Yeah.
So it'll probably be at a premium to the top end of the hybrid version, which is about 24-25 lakhs. Let's assume you give discounts to 23. So this has to be northwards of 24-25 at the very least, the base version, and then the premium versions could go higher.
I don't know how competitive it remains then.
Yeah, I mean, so it will go in. So maybe Maruti is starting off with the premium EV, and then goes down to the cheaper EV, which will go via the small car or a hatchback format.
Swift, etc., if at all.
Yeah, or a Desire or what have you, right? Because, see, I think it will, so if the positioning of the Grand Vitara is at about 24-25, and if the MG is available at 10, 11, 12, you can't bring the Vitara down to compete with the MG 10-12 lakh rupee car. So you have to introduce another model for that. This can't be the vehicle to take on MG and the Tata Nexon. That will be something else from Maruti's stable.
Yep. Interesting stuff to look out for. And January is the month for a whole host of launches in the auto sector as well. All right, let's get to the watch list now. Here's what's on the Profit watch list this morning and what we're tracking. On the positive, in terms of news flow, Signature Global pre-sales are up 120%. That might see an up move. Tata Steel, all the business updates are coming in. Steel production up 6%. Jindal Worldwide has recommended a 4:1 bonus issue. Ashiana Housing is one to watch out for. Value of area sold is up 161%. Dr. Reddy's has got an upgrade to a buy from Nuvama. And M&M, Jeffries has upped the price target.
And KC International is the one to watch out for as well, has gotten orders yet again worth 1136 crores. It's been on an order winning spree really, KC. Sobha, the pre-sales numbers left a bit to be desired. The stock might correct a bit. And two-wheeler companies, Jeffries has cut the price targets on Bajaj and Hero. So watch out for those.
Well, we have with us now Mayuresh Joshi, Head Research, MarketSmiths India, joining in with a quick word on the markets before we, of course, talk about what's happening on the macros. Mayuresh, very quickly, how are you feeling about the markets this morning? We're going into earnings season starting tomorrow. But more importantly, like Neeraj, Taman and me were discussing this, I'm beginning to feel like this is a classic case of a time correction that the markets are going through, which we've talked about so much all through the last quarter.
Mix, I think it might be a possibility and a big possibility at that, because as the earnings unfold, the expectation is largely that earnings for a large part of the market might be very, very soft. Couple that up with what is happening on the geopolitics front, I think that is going to keep the market on tenterhooks. So I completely subscribe. It might go through a time correction, though I think we just witnessed a follow-through day as per our methodology on markets with India. And our belief is that the markets might get stuck in a range because our status has got upgraded for the Indian markets to a confirmed.
Okay. Mayuresh, just one quick word. If indeed the markets were to dip 200, 300 points or more, would that be a tactical buying opportunity, or right now you're not wanting to really put all eggs or, the entire piece out, if you will?
So we are being a little bit more selective, but what we are probably seeing in terms of the overall construct, in terms of the sector positioning as well, we are not seeing too much of weakness creep in, except for a few sectors, including FMCG to a large extent. But I think barring that, I think the broader markets are largely holding up, at least now, till the result season is well and truly on. And therefore, I think our portfolios have not seen major tweaks happening, either in terms of removals or significant additions. So being a little bit more selective here, Neeraj, at this juncture.
Okay. The other big factor that the markets may or may not look at, and you have the implied about 19 points down, so not a big downtick there. But an important one is India's FY25 advanced GDP growth forecast, which has come in at 6.4%. It's the lowest pace in 4 years. This is as per the government's first advance estimates ahead of the union budget. Pallavi joins in with more. So, Pallavi, where is the overhang on GDP coming from?
Right, Tamanna, like you've mentioned, the advance estimates have come in at a 4-year low. So the last time that India grew at a slower clip than this one was when we were in the middle of the pandemic. So 6.4% is what we're looking at, and this is compared to a provisional estimate of 8.2% that we had seen in FY24. Now, broadly, this was not entirely a surprise. It was in line with expectations. In fact, a Bloomberg poll of economists had estimated GDP growth at 6.4% as well. But it is a tad lower still than what the RBI had last projected. Let's remember that the RBI's latest estimate is at 6.6%, which is anyway a sharp revision to the 7.2% that they had projected at the start of the year. GVA is also projected at 6.4% for the ongoing fiscal. That's compared to 7.2% we'd seen in the last fiscal. Now, the purpose of the advance estimates is, of course, for the preparation of the budget, and nominal GDP, which is the base for the upcoming budget, has been estimated to rise by 9.7%. What's important to remember is that the budget for this year had actually pegged the nominal GDP at about 10.5%. So there will be some implications there as well, especially on the fiscal deficit front. Now, 5.4% was what was the figure we'd seen in Q2. It was a bit of a shocker, largely led by the decline in manufacturing. So this estimate is not entirely a surprise, but we do see some improvement being expected in terms of both government expenditure as well as private consumption for this fiscal from the last fiscal. So that is definitely some relief there. Like we'd spoken about in terms of the nominal GDP being lower than what was being budgeted, what this could mean for fiscal deficit is, clearly the government has clamped down on spending as well, which means that fiscal deficit might still be at par or maybe a tad below than what was being projected by the government for this year.
Thank you for that, Pallavi. This, of course, marks the slowest growth rate since the pandemic, really reflecting what industry has been talking about, where there is moderation across key sectors. Agri, though, is set to see a notable rise in growth to 3.8% compared to 1.4% last year, while most other sectors are expected to report lower growth. Manufacturing as well will see its sharpest decline. So worries, and these worries are real, which will soon be reflected on those numbers. We'll take a break. We'll come back. We'll focus on pre-open and gear you up for trade today. So stay tuned.
around my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Welcome back. You're watching India Market Open. We're gearing up for a rather lukewarmish kind of session. Range bound is probably what it's going to be ahead of earnings season tomorrow. Implied Nifty indicating to 25-point decline in early minutes of trade. Chandan Tapari and Sudeep Shah both join in with their technical view for the markets as well. We are going into pre-open trade. So Chandan, I'll start with you. How are you feeling about the Nifty and how are you feeling about Bank Nifty? Fortunately, Bank Nifty did close above 50,000 yesterday, so a little bit of hope there. But the Nifty's recovery yesterday is very unconvincing, in my opinion.
Good morning. Thanks for having me. So yesterday, Nifty opened positive, but failed to surpass 23,800 zone. Remained range bound for most part of the day, post 10:30 a.m. especially. The good part is that after the selling pressure of last 2 days, index managed to hold near 23,700 on closing basis. But the concern is it is not surpassing beyond the key hurdle of 23,800, 850 marks. So again, tug of war is clearly visible, and we have noticed that in the month of June, we see surge in the India weeks and market reacts in a different manner. And this is the track record from last 10 years of the month of June. So I believe roller coaster ride could continue. Some day will be very volatile, then few days will be very choppy, and major trend will be missing. But here the only concern is that bounces are being sold and market is trading below its key moving averages. Index is hovering near its 200-day exponential moving average, while Bank Nifty is trading below the same. So as of now, 23,850 could act as a hurdle, and we believe that if Nifty manages to surpass, then only the stability will be weak. Otherwise, with hurdle of 23,850, it can retest the recent support of 23,500 marks. Looking at Bank Nifty index, Bank Nifty has seen a volatile move in last 2 days. Yesterday also it witnessed a spike, but failed to surpass 50,500. So 50,500 could be a key level. If it manages to surpass, then only stability. Otherwise, it can drip down to retest the support of 49,750 to 49,200 kind of level. So weakness persists in both the indices, but some bounce could be there, and then bounce could be sold, and some different types of swings could be there in the market, and we need to deal with the option strategy rather than buying future or being with option activities.
Sudeep, hi, good morning. It's a bit of a tricky time because global cues negative this morning, implied showing a slight downtick. But the bounce back that we saw on the Nifty yesterday was a bit encouraging. What would be your trade? And let's start with Nifty, Bank Nifty, and then get to your calls for the day.
Yeah, good morning, Tamanna. I echo the same voice with Chandan that yes, at higher levels, 23,850, 23,900 zone, it is getting difficult for the Nifty to surpass, and that crossover is essential for us to at least be convinced that yes, some kind of a bottom is being formed. So on the downside, 23,550, 23,600 still remains an important support. Yesterday, the indices have formed an inside bar candlestick pattern. So that shows that some kind of the selling pressure is being absorbed. But yes, it has to cross 23,850, 23,900 on the way up for a sustained up move. And I believe it's important that one remains a bit of stock specific in such kind of a market rather than trading too much into the indices. There are a lot of stock specific opportunities if we see in the last few days, despite the index being sideways to choppy. So the individual stock specific opportunities have been there.
And your picks for this morning, Sudeep?
My first pick for this morning is AMI Organics. We've seen in the last 4 or 5 sessions, while Nifty has had a selling pressure, a lot of mid caps have been beaten down. But this stock has been trading at a higher trajectory where it was in the last 15 to 20 sessions. And in fact, yesterday it has broken out of its 4 or 5 day consolidation. The stock has given a strong momentum yesterday, and we feel that from the current levels of 22,100, this could be bought with a stop loss of 2170 and an upside target of 2300, 2350. The trend is quite strong on the weekly as well as daily charts. The second pick is BSC Limited. Now, what has happened is that we all know that in the last 6-8 months, this stock has outperformed. However, in the last 4 or 5 days, there was some kind of a profit booking in this stock. And yesterday, while the indices just took a breather, there was this first opportunity and the stock bounced back and at least created a bullish engulfing candlestick pattern here. So I feel from the current levels, BSC could be bought with a 50 to 80 stop loss. Rather 5300 stop loss, and on the upside the targets would be 5500, 5550 levels in the coming few sessions.
Then what about you? What are you recommending? Your ideas for trade on the short or long side?
Selected a few sideline counter with the view that volatile swings has to be dealt well. So first trade is buy on number. We have noticed that stock has given a fresh breakout on the daily chart. Technically speaking, a pole and flare breakout which has a bullish implication. Supports are gradually shifting higher. Major trend and momentum is positive. The stock is holding well even after the market swings. So one can buy Amber with support of 7,800, and this stock can head towards 8450 level. Second trade, that is buy on NH, Narayana Hardale. Somehow we have noticed that selective pharma related counters could be in focus due to the market scenario. So NH has given a consolidation breakout of last couple of days, and in fact a breakout of almost 45 weeks on the weekly chart setup. We have seen a surge in the trading volume, and it has given a decisive close about 1314 marks. So NH one can buy with support of 1315, and here we have target towards 1420 zone in counter.
Okay, so top picks from Chandan, Sudeep. Another stock in focus is M&M we talked to you about, and let's get you an exclusive interaction. They're upbeat about their new electric vehicles, the B6 and the XEV9e. They've announced prices for the top variants, and they're priced on the premium side. BE6 top variant close to 27 lakhs and the XEV9e top variant at over 30 lakhs. Now, Anirban Mitra caught up with Vijay Ram Nakra of M&M to find out the rationale behind the higher pricing.
There has been this whole movement towards premiumization and sophistication where customers want the best today. So as we took all of this input in, we just thought what made sense was to go to the market with what we call the Pack 3, which is the top variants, which are fully loaded in terms of feature 1. 2, it comes with a larger battery pack of 79 kilowatts, so that addresses one of the biggest barriers in the category, which is range anxiety. So the objective was democratize technology, remove range anxiety, and that's what drove our strategy to say that we want to take the top end variant to market. Now, as we did that, we also were mindful to say if we want to democratize this and get maximum customers to own it, then we need to make it affordable even in terms of purchase, and hence the pricing. And number 2, equally important, when 85-90% of vehicles today are bought on finance, what we ensured is we came up with a fantastic finance package offering from Mahindra Finance that allows the customer to buy these products, the Pack 3, at the same EMI as you would pay to buy the entry level Pack 1. So you get the high-end product with all the features, the best range, but at a very affordable EMI, which you would pay for Pack 1.
Well, affordable EMIs, yeah, that's always a hope and a misnomer. There are no affordable EMIs. It's a myth, isn't it? It's a myth. There are no affordable EMIs. But yeah, but well, still, it's an interesting thing, and frankly, with all that M&M has done and the pricing that they've gotten, these cars and the initial response that we heard from people for the first take on the cars was very, very positive. So let's wait and watch. It's certainly a key driver for the M&M stock as well, which has done very well, by the way, related to some of the other auto companies. Ignore the latest jump in Maruti that we've seen. But before we talk about M&M though, it's also time for the big brokerage call on a day when the indices are starting off flattish in the pre-open session. Bharti Airtel is at stock. HSBC has retained a buy rating on Bharti with a target of 1940, 22% upside. Harsh Johnson with the rationale for that. Harsh.
Well, it's a very interesting note, Neeraj, and picked it up because a couple of interesting points made by Jefferies, and those points stand out. What doesn't stand out, the first part of that is the tariff hike expected to continue in FY26 and ramp up in FY27. They're expecting ARPUs to touch 301 rupees, which is a largest kind of increase, and they expect ROIC improvement to continue, which is return on invested capital. That number will continue to improve over the next 2 years. They're expecting subscriber migration to higher buckets with regard to data plans, and that's due to higher data usage that is coming through. You're also expecting gains in high value postpaid subscribers, and therefore all of that will lead to an ARPU increase to 301 rupees. The home broadband is also expected to do well. It's expected to grow at a CAGR of around 24% FY24 to 27. That's the 3-year period where it will likely double. That's the expectation, and thus they're expecting EBITDA and EPS CAGRs of 15% and 75% respectively. EBITDA 15% CAGR and EPS CAGR of 75%. All of this will likely lead to higher dividend as well. So your dividend is expected to double up, and this is where the view stands out. 17 rupees per share is the expected dividend which HSBC is penciling in. They are expecting this also on the back of the fact that the holding company of Bharti Airtel also needs to service debt, and that will come into focus in FY26-27. This is a view which really stands out versus some of the other brokers, and they are therefore suggesting that dividend will actually double in FY26 itself on the back of higher free cash flow. This slightly differentiated view is why we've picked this up.
Okay, thanks for that, Harsh. So keep an eye out for Bharti Airtel. Not that it's had a big bang start, but could be interesting for sure. As we open, or as we get ready to kickstart the markets in about 3 or 4 minutes, keep in mind that IT may be a bit sluggish, but the indices have started off marginally higher, if you will, about 0.15% higher in trade. So that is something to keep an eye out for. Equinox, which was up 20% yesterday, is likely to open up another 9% today. Big jump seen in Ramco maybe, so that could be very interesting. And stocks like Galaxy Surfactants, Phoenix Mills are amongst others that are moving. Phoenix, remember, makes its way into the FNO space, so that's something that you keep in mind as well. Mahesh Joshi, very quickly, Equinox, anything on this one? Because up 9% today after a 20% up move yesterday. Have you studied this fundamentally?
No, not really.
Okay, so we'll leave that out, no problem. Sudeep, the top 2 gainers on the Nifty 500 at this point of time seem to be Equinox and Ramco Cements. Any thoughts on either of these?
Neeraj, Ramco Cement, if we see, it had a very good run in the month of October, posted its quarterly numbers right from 830 till 1060, but post that around the 30-35% correction of that entire rally. And I guess now the stock is very close to its important support zone, which is around 935, 940. So from the current levels, from an investment or a medium-term trade perspective, this can be bought. But yes, from a trending perspective, as a trading call, it would warrant a buy only about 973, 975 levels once it sustains above that.
Okay, Chandan, 2.5 minutes left. You've seen the pre-open rates as well. If I were to ask you, while you've given us your 2 calls, but now that for people who can't do the pre-open adjustments and can buy only at 915, yeah, what would be your top bet? Would it be one of those 2 at the opening prices, or would you look at something else? Chandan, you're on mute, I think.
Yeah, thank you. So I think selective stock will do well. I'll repeat one name which I recommended, but one more stock can be added here. NH, I'll repeat again with support of 13.15 for an upside target was 14.20. And JK Cement could be the other name where I'm expecting 3 to 5% rally. Stock is at the verge of the fresh breakout. Major trend is positive. Selective cement stocks are doing well. So with support of 47.20, JK Cement can head towards 5,000 levels.
Okay, JK Cement can head to 5,000 levels. Keep an eye out for that. Sudeep, your top call for the morning.
Sorry. Yeah, my top call apart from this would be an Arcade. Now, this is a recently listed company, and here we are seeing the stock doing well in the last 15 to 20 days, sustaining around at support of 165, 170 in every first opportunity. Yesterday also, we have seen some kind of a decent buying from the lower levels. So from the current levels, 180 will be 177 will be the stop loss on the downside, and the first target would be 191 and 195 levels.
You know, I'm just wondering very quickly, Sudeep, how are you looking at a TCS this morning?
TCS, if you see the stock has given a breakdown below 4100 and has sustained below that zone for the last 2 sessions. So from a reversal perspective, the stock has to cross and sustain above 4100, 4120 zone, which is its 200 DMA, and then only we'll get some kind of a decent tempo. On the downside, the support is around 3970, 3950, where the recent swing lows have been there.
Okay, gentlemen, stay on. We'll take in your opening thoughts. Post-market open, about 15 seconds or 20 seconds left for the markets to kickstart. Remember, a bit better than what the US markets close would have had you believe last night, because we're starting off marginally in the green. The question only is, will that get sold into, or will we kind of take over from where we left off yesterday, which is that we were in the green? So that is the key thing to monitor. Of course, also on the cards will be what happens to some of the upstream oil companies, considering that they were in momentum yesterday and crude prices have only inched higher. But this is how we are starting off. About, well, actually very, very flat. Bring up the Nifty IT, I reckon will be flat. Mid caps and small. Nifty IT is actually down 0.4% ahead of key earnings. Mid caps flat, small caps flat. Let's get the heat map up on the screen and see what IT stocks are sulking. Actually, not too much. Interesting. The Infi probably won. The top loser is IndusInd, Shriram Finance. So a bit of financials coming off too, but nothing too dramatic. Even Stevens on the gainers and the losers. Are there any big gainers? Dr. Reddy's, yes, of course. Because of the early resolution, there is a Noah note out there giving a thumbs up to this one. So that is the top gainer. ONGC gains yet again, 1.6% higher. One, a lot of brokerages have turned constructive. Two, oil prices are doing okay. So that is one. Reliance follows suit, 0.75% higher. A couple of brokerage notes today. Power Grid 0.7, iShare 0.5%, Cipla 0.5%. More red than green now. The index too has slipped marginally in the red, but nothing too dramatic. On the whole, couple of financials sulking, and oil and gas in particular, and Dr. Reddy's doing okay for themselves. The move in ONGC is quite stunning. We should ask our experts after we're done with the stock spotting about what to do with this stock, because it's gained quite a bit in the last 2 days.
Yeah, so that brokerage note has definitely helped ONGC, and of course crude prices inching upwards and could continue to do so. Dr. Reddy's as well on the brokerage note, as we mentioned in our stock spotting list. Let's pull up and just take a look at what the mid cap and small cap indices are doing before we get to the sectoral heat map. It's okay. It's a bit of a down day, but nothing dramatic and nothing to be worried about. Fairly flat to negative. And if you look at the sectoral heat map as well, it's only the oil and gas index which is showing action, and this is largely ONGC, Pharma because of Dr. Reddy. So it's those couple of stocks, those handful of stocks that are moving in the market right now. On the lower side are metals, as we have seen for the last few days. IT continues to languish, and I think this is important. Is this an opportunity ahead of the numbers coming in? If we are expecting a decent quarter, I suppose would be the key question over here. But let's look at some specific stocks that we're tracking this morning. I'm curious to see what is happening with Zomato, because they're relaunching 15-minute delivery after 2 years, and this is after competitors have launched. Remember, down day for Zomato yesterday after a brokerage note has downgraded them, and that continues. Clearly, Street not very excited about this 15-minute delivery today. I want to see what Soba is doing. The business updates were a little underwhelming, not too exciting. Stock is down 1%. The reverse for Signature Global, actually about nearly 1.5% up this morning. RVNL has tied up with a company in UAE for a foray into GCC countries. The stock is mildly up. Tata Tele has an MOU with Tele Chips. That's not working for Tata Tech this morning. Some others that we should look at. KC International, another order win, but you see order wins every few days, and then the stock runs every few days as well, 2.5% up. I want to look at some of the F&O candidates, those that have been announced as entering the F&O bans. All of them up in the green. Castrol, Gland Pharma, Phoenix Mills, Castrol leading that pack over them. NBCC as well, Solar, Ind and Torrent. Let's see if Torrent Power is up there as well. So those are working well this morning. So the spot of green as would have been expected, but otherwise a fairly quiet morning, I would say, Samina.
And quiet may not be such a bad thing. You'd rather have quiet than a weak market, right? So you've highlighted most of the counters that are doing okay this morning in trade. The Nifty 500 is as flat as it gets. Trading in line with the index. Brent is above $77 a barrel, and that is good news for ONGC. So, which rally that began yesterday on back of a very strong report coming in from CLSA, crude supports ONGC this morning further, adding to a significant up move of over 2% on a day like today. RIL is the other beneficiary on back of a reaction to crude prices, is looking higher. OMCs, on the other hand, are seeing weakness as they, of course, don't like a higher crude movement. Apart from that, you've got surprisingly Castrol is doing well on a morning such as this, is up 4%. Dr. Reddy's is up 3.5%. Honasa continues its upward move, 3.8% higher. KEC International, it was on back of those orders. We've talked to the management this week. The stock looks good, 3% on that too. Tata Tech may be ahead of the IT sector earnings kicking off. The counter is seeing some bit of gain. So while the benchmark may not be giving you an indication of what is really happening in the markets, there are lots of counters even this morning that aren't doing too badly in trade. Tamanna has highlighted a few, but these are of course counters that are reacting despite any sort of news flow for them to move on. Anantraj, Signature Global, UTI Asset Management, take a look at how BSC is doing. There was a stock recommended as well. Ami Organics, these were counters that were recommended by Sudeep this morning. We'll get an update on that. The stock is down actually in trade as we see it. On the sell side, you've got ITI. It's been a very strong run for ITI over the last couple of weeks. It's doubled down to say the least, and the stock is seeing a little bit of profits being taken off the table, down 5%. Kalyan Jewelers, PTC, Dixon, Sapphire, Devyani, KPIT, Soba are some of the other losers. So that's what we have this morning. It's lukewarm-ish. Bunch of losers and a handful of gainers is probably the best way to describe it, but the benchmark as quiet as it can get. Chandan, you want to come in on this? 5 minutes into trade, have you spotted an interesting bet?
Like Nifty is not finding support, and in fact, if it fails to hold the current zone, then some selling pressure could be seen. We need to closely watch Bank Nifty with 50,000 marks is a key level. If 50,000 is not respected, then 500 to 700 points decline could be there in the Bank Nifty. So both the indices are finding sustained selling pressure at higher levels. But if follow-up selling happens, then there will be concern in the market. Looking at the trade setup, I'll focus on Maruti. It may be the one counter where some stability may be there in heavyweights. So with support of 11,550, one can look for a recovery towards 12,200 kind of level. We have discussed about NH and Amber. These could be other name in the market where some stability will be there. But need to understand that advanced decline ratio is slightly negative. So better to be light and look for some further follow-up activities to get any decisive and aggressive stance on the market.
Chandan, get a view from you on the F&O band entrants, Gland, Castrol, Phoenix Mills, and you'll see more activity, of course, because they're now in the F&O band. But what would be the advice here on the charts to anyone who's holding or who wants to come in?
So like if I look at the new entrant counter, whether we look about Gland or Torrent or NBCC, as of now, I don't see major change in the trading setup. In fact, most of the counters are finding some supply at higher levels. Usually it happens that when counter comes in F&O, liquidity remains high. People can do the hedging activity as well. But looking at these counters, I don't see any momentum. Let the open interest activity settle. and built, then only we can understand the price movement as per the derivatives data and the open interest activities.
Fair enough, fair enough. Sudeep, any views on a Tata Tech bouncing up now about 2.5% up? So the fundamental news is that they have signed an MOU for new software, which they will of course use in vehicles. That's the core business. But this is a stock that doesn't move very often and doesn't move very aggressively. So if you're in Tata Tech, would you use this opportunity to exit?
Yes, if you see the overall trend of Tata Tech in the last 2 to 3 months, the stock has been strongly into a downtrend, lower top, lower bottom formations in every week. So here, this is the first time that we have seen in the last several sessions that the stock post opening positive is sustaining. So one thing is that it's in a downtrend, but from the lower levels in the last 10 to 15 sessions, there have been some consolidating activity. And once it crosses above 915, 912, 915, which is the previous swing high. I feel post 915, the stock could head up to 950, 970, but that is the zone where there could be some supply. So 960, 970 is the zone where I'm anticipating some supply. A quick short trade could be about 915 buy with a stop loss of 895.
Nifty IT is suffering the most this morning in the first few minutes of trade. The index about 0.5% down, and we should pull up the components for who the biggest losers are. Mayuresh, I know you've spoken about IT and the results overall, but would you be saying that there is some kind of play here if the numbers are better than expected, guidance is better than expected, opportunity here for today?
So Tamanna, morning to you as well. I think selectively Midcap IT might continue doing well because what we probably heard from managements in the quarter gone by seem to be very, very optimistic on all counts, whether it's revenue growth, whether it's the EBIT performance that they're expecting, and no pricing pressures that they're seeing, at least at this juncture. Having said that, as we head into Q3 numbers, which is seasonally and traditionally a very, very weak quarter, the expectation now gets built up on management commentaries and how they are perceiving the client environment probably to play out over the next few quarters. But just going by commentaries, I think if the commentaries are good enough, as you rightly said, if the pricing remains in their favor, you obviously heard Trump again reiterate the fact he's going to cut taxes to a large extent. Even on the corporate tax front, if that probably starts happening, you get that much of budgeting space on discretionary spending as far as mid-size or even large-size corporates are concerned across segments, including BFSI, retail, manufacturing. And that would largely abet a large part of order flows coming in. And therefore, earnings probably being maintained in spite of valuations being on the higher side compared to the standard deviation means over the last 5 years. So I think selectively mid-cap IT can do well. Emphasis is one stock that we have on our radar. We continue holding it. But again, I think it's consolidating and making a good base. So I think emphasis is one stock that we can keep on emphasis.
Right. Chandan, two stocks, a quick word on. ONGC, it's had a good run. Yesterday was good. This morning is also good. And Zomato on the sell side. Sold off yesterday on back of the brokerage call and also seeing some weakness this morning. So on both those trades, is there an opportunity?
Yeah, ONGC looks good. In fact, positive on the ONGC from last 3-4 days as this stock has negated its lower top, lower bottom on the weekly chart. So counter like ONGC and All India both are witnessing some sort of recovery, and we believe buying interest could continue. Looking at the levels, 261 could act as a major support to drive this swing towards 282 marks. Talking about other name, Zomato, I think some selling pressure could be seen as has been making lower top, lower bottom, but multiple supports are visible near 240. So as of now, 240 could be a key level, but if 240 is broken, then there will be concern. So as of now, look at the range in between 240 to 258 in the counter to trade.
Yeah, Chandan, we'll take a moment to thank you for joining in today. I really appreciate your time this morning. So Sudeep, I want your view on these stocks, but first let's mark these stocks. I think you could argue that this is the GDP impact being felt on stocks like Trent, on stocks like DMart, essentially consumption names being hit a little bit in the session today. That's a 3.5% downtake or Trent on open. DMart is about 0.7%. I wonder if V2 Retail, VMart, etc. are also sulking a little bit in trade, marginally lower. Remember, these are not high volume stocks per se, but VMart certainly is okay, but down about a couple of percentage points as well. So clearly there is some bit of an impact being seen there. Keep in mind, the small cap index is now down 0.75%. It started off 0.2% higher, so it's had an intraday downtick of 1% in the first 15 minutes of trade, and the indices too are now firmly in the red. Sudeep, a word on some of these names, Trent and others, and the retail counters, or stuff related to consumption which is looking slightly weak today.
Neeraj, if you see all these names that we've just discussed, DMart was already in a downtrend. Trend after that big move till 8,000 in October. Now we have seen some kind of tapering off from higher levels, and there are sharp cuts from whenever the stock starts trending lower, there are sharp cuts. And now specifically in the case of Trend, the stock is now below its November lows also. So what I feel is that there's a breakdown here coming, and till the time 6750, 6800 does not cross on the upside, the stock is headed up to 6300, 6350 kind of levels, which are very close to the November low. So I feel yes, no point in bottom fishing in these counters right now. Just one needs to wait and bide its time, and then just add this lower closer to 6300, 6250 zones.
Mayuri, just a quick word from you on the GDP impact, because I'm looking at the Nifty Consumer Durable Index and looking tough. Look at a Dixon Tech, for example, 5.5% down. Kalyan Jewellers also hurting. Acera, Voltas, Titan. So clearly there is some theme over here. When you're saying the GDP number possibly for this financial year, I would say quite significantly lower than what was penciled in. What is the kind of equity impact you see, and how does that affect your strategy?
No, so Taman, I think consumption is slowing down. There is no two ways about it. And that is clearly evident in terms of how Q2 has played out. A lot of commentaries that we've seen and some advanced earnings releases that have come from a few FMCG companies as well. So that's clearly pointing out that consumption as a pocket is slowing down. Now, is it a structural slowdown or is it a cyclical slowdown? I think that's the question we need to ask ourselves. We don't think so. It's a structural slowdown. I think certain pockets of consumption are still growing at a decent pace. So if you probably break down the entire basket, the higher priced SKUs are still probably getting sold into. Let me extend that points into higher premium cars, what we were discussing in the morning as well. I think higher premium cars are still getting sold out into the market. As well as some of the consumption items, both on the durable and the discretionary side, which are still seeing stable demand coming through. I think the question here is when the rural demand comes back at the beginning of Q3, extends well into the next few quarters, and that offsets to a large extent the slowdown in the lower priced consumer or urban consumption demand that has fallen off. I think we'll come to know in the next few weeks and months. But in my opinion, again, I think the government might do something and will have to do something in terms of boosting consumption, at least through budgetary means. Either you're looking at tax cuts coming through, or you're probably looking at some amount of increase happening on the revenue front. We've seen a large part of capital allocation happening over the last few years. And I'm not talking about subsidies here, but a large part of the revenue allocation that can actually boost rural consumption, urban consumptions in tier 2, tier 3 cities. And that, if that probably comes through, along with some rate cuts that we're expecting in the first half of this calendar year, we're expecting some element of consumption pickup happening as we head into the first half of the next financial year. So not overly perturbed at this juncture, Tamanna, but I think if the government makes the right moves through budgetary allocations or otherwise, I think you should see some element of pickup happening from the first half of the next financial year.
Yeah, absolutely. Just very quickly, Sudeep, I just saw that your target on AMI Organics this morning has been hit. So great call this morning. And what now on AMI Organics?
I feel, see, once the target has been hit, it's quite apt to book profits, because these markets are not buy and hold right now. Although we have chosen the right stock, which was outperforming, but yes, from higher levels, even a lot of these mid caps are facing selling pressure. So one needs to book profits. And overall, if someone is an investor, then yes, once again could re-enter at lower levels. The medium-term targets are quite higher, but since this was a trading call, I would recommend to book profits.
Book profits target hit this morning. Sudeep told you this morning, Ami Organics, and yes, that target is already hit. Fantastic. All right, thank you so much, Mayuresh. Thank you so much, Sudeep, for joining us this morning. Let's now turn our attention on the banking industry and what we're expecting from Q3. Bernstein is seeing potential green shoots following a set of Q3 updates which were less than exciting, let's be honest. Harsh is setting up that conversation we're going to have in a few minutes with Bernstein. Harsh, Q3 updates on one side, a little underwhelming, but Bernstein sees green shoots.
Well, you're right, Tamanna. So let me actually pull this a little bit or zoom out a little bit, look at 2025 as a whole. What can we expect actually from 2025 as a whole before we talk about Q3? One, asset quality issues that have cropped up at the latter half of 2024 calendar year that will likely sustain into 2025 calendar year. The question is, for how long will those asset quality issues sustain? That's the one big question. Second one is your loan to deposit ratio. Your loan to deposit ratio has become a problem with regard to impact on loan growth. How much of that reverses and how quickly does it reverse? Can the system loan growth sustain? We've seen a taper in Q3 already. Does Q4, do we see a bit of a bounce back? Seasonally stronger quarter as well. And how should we see FY26 in terms of loan growth? Can it sustain double digit plus, maybe even in the teens? That's the big question that I would look out for. And margins and ROA might shrink if the RBI were to cut rates. And therefore, that will be the big question. Which banks to pick in that environment? What the Q3 business updates now tell us, more specifically on Q3. Loan growth slowing, especially in the PSU banking pocket. Deposit growth pressures also seen in selective pockets. You're seeing LDR shrink in one or two cases by 300 basis points. Huge shrink with regard to loan to deposit ratio, and that caps loan growth to a certain extent. Margin contraction will likely be seen in certain pockets as well in this quarter, and you want to look out for that. And asset quality, liquidity as well as loan to deposit ratios will be a key concern in this quarter as well.
Okay, thank you.
Right.
Thank you for that, Harsh.
Yeah.
All right, now we'll take that conversation forward with Pranav Gundlapalli, Senior Research Analyst at Bernstein, who is joining us for more on the outlook for the entire BFSI space actually and for financials. Very good morning, Pranav. Always a pleasure to speak with you here on NDTV Profit. You're saying this is the earnings reset here. When we're looking at the first set of business updates coming in, it's seeming a little optimistic.
See, I think it's important to think of the starting point. I think the banking sector, despite all the concerns around asset quality, etc., is today enjoying a profitability that is higher than where it has ever been in the last 15 years. So you're talking about a normalization or a reset from extraordinarily high profitability levels. And the growth reset has already happened. So we've seen a slowdown in credit growth from 16% down to 11%. Now, what we see happening is growth picking up a bit to 12 to 13% and profitability declining. So with potentially rate cuts coming in the first half and asset quality issues continuing for the next couple of quarters, we expect to see the ROA bottom out for the banks in the mid-year. Now, that sets up the banks nicely for earnings growth looking ahead, where earnings will start to move in line with their balance sheet growth. So, yeah, trends-wise, growth and profitability both might not improve dramatically, but from a high base, I think it's okay.
Okay, let me come specifically to HDFC then, Pranav. What did you make of the numbers? The LDR drop, the growth at 3% year on year. Are you a little concerned about what one of the leading players is putting out?
See, I think HDFC is an idiosyncratic case where they are solving something different, which is to fix their balance sheet, and hence a slower loan growth is expected. I think what is most critical for them is on the deposit growth front, where they have delivered. The second one to watch out will be the earnings growth number, which we'll know on 22nd. I think there the bank does have levers available to ensure EPS growth remains, say, above the 5% mark they delivered last quarter, even if the loan growth was as low as 3%. I think they have the benefit of CRR card, they have potential loan mix, reduction in borrowings. So we do see quite a few levers available to them that will help them to push up the EPS growth number. So not too worried about the headline loan growth number being weaker. I think the deposit number was the key in the headline update, and that came out quite strongly.
Got it. Pranav, good morning. I wonder if HDFC is the idiosyncratic case and if others will be different, would they be different in the commentary for the year ahead as well? Because, I mean, from a market's perspective, because of the supply that has been there consistent from the foreign investors, despite the fact that the earnings growth in a lot of cases being okay, it was not evident in the market cap gains for the banking names, right? So in some sense, will commentary lead for companies to do well on the bourses as well, or is there a difficult call to make because of the consistent supply from or consistent selling from the foreign institutional investors?
So I think I think the biggest overhang from or the concern from investor concerns that we have picked up in the last, say, 12 to 18 months is the fear of not knowing where the bottom is. I think there's a consensus that the current profitability levels are too high and are not sustainable. So I think most investors are waiting for things to bottom out, which is why I think the key commentary to look for this year is to figure out when the ROA hits the bottom. Right? So I think clearly for most of the banks, the current ROA is high. So once we have rate cuts come in and management says, okay, this is probably where our ROA bottoms out, that's probably the cue at which a lot of investors could jump in, both FIs as well as the DIs.
What is your assessment? I know it's maybe a wrong question to ask because you laid out that it is very difficult to know where the bottom is. But because you are in the business of trying to hypothesize what could happen to earnings, ROAs, etc., what factors would lead to the ROA bottoming out? And when in this cycle over the next 12 to 18 months do you reckon that could happen?
We expect the bottom to be in the June quarter, assuming that rate cuts come in the first half. So post rate cuts is where you hit the bottom of ROA, and assuming rate cuts come in first half, it's the June quarter.
Sorry, one follow-up out there is that if indeed there is a spate of tariffs from the US, which is inflationary in nature, and therefore the Fed does not cut rates, and the RBI, despite maybe lower inflation, if the RBI's hands are forced to not cut rates, does this thesis change materially in terms of timelines?
Yes, I think that actually would be a negative scenario for the banks because from an earnings perspective, they will do well because banks are not going to benefit from a rate cut. But this whole expectations of a rate cut and therefore weaker earnings growth ahead will limit any sort of re-rating. So you might just see them time correct like what they've done for the last year and a half. That might just continue for, until the rate cuts come home.
Just in terms of outlook, and I was going through your report, some interesting points there, which I think we should highlight very quickly, Pranav. One is that you say in at least calendar year 25, you're going to see a bit of a repeat of trends. So PSBs, public sector banks over private ones, and ICICI stands out. Why is that? And in public sector banks, which ones do you think will make the cut?
So I think it was calendar year 24 that we saw a repeat of those trends of PSPs outperforming. For calendar year 25, we think the public sector banks will underperform the private sector banks simply because their loan growth will now be constrained by their deposit growth. So the last 2.5 years, they had higher LCR ratios, liquidity coverage ratios, and they had excess liquidity. So they could afford to match the private sector banks in terms of loan growth. Now that the excess liquidity is gone, their loan growth will start to dip, converge with their deposit growth, which remains significantly weaker than the private sector banks. And therefore, we are not too bullish on the public sector banks. In fact, we don't think the slower growth is actually priced in yet. So we are not bullish there. We would prefer the larger private sector banks. Now, within private sector, larger ones because they are a little less exposed to the asset quality issues compared to the smaller ones who've been more aggressive on the consumer front. But otherwise, it's the large PVBs versus the PSBs.
Okay, so within the large PVBs, the large private sector banks, ICICI, HDFC, Axis, what's the ranking?
We like HDFC the most because in the context of a declining ROA for most peers, we do see enough levers that can help HDFC pull a ROA improvement story. And hence, we like HDFC. Followed by IndusInd, where it's largely a valuation call, where nearly 1 times price to book. And with most of the pain being restricted to MFI, we think there's enough room for re-rating to be bullish on that stock. Followed by Axis and ICICI, where we think the asset quality trends would remain in the normal range. We don't expect a big deterioration, and hence prefer those two names as following IndusInd.
In terms of payments, you're rating Paytm better than SBI cards this time round.
Yes.
So SBI cards business updates were pretty decent though. So tell me what you are looking at in terms of the Paytm turnaround story, because all the regulatory overhang is not out of the way yet.
Right. See, I think for Paytm and the overall payment space, what we are seeing is a pickup in the payment margins. I think both a stronger volume growth on the UPI front and stabilization or maybe even an improvement in payment margins is what makes us bullish. And secondly, specifically for Paytm, I think if we are to assume that the asset quality troubles bottom out, then Paytm becomes a better way to play that theme because they will be direct beneficiaries of a pickup in the lending disbursals versus, say, a lender like an SBI card, where one would need to wait out for the credit cost impact to play out and then see an earnings rebound. The pickup in disbursals will show a lot faster, a lot more cleanly in the case of Paytm, and hence our preference for Paytm over SBI cards. And even the longer term, we are more bullish on UPI platforms compared to monoline credit card business.
All right. Thank you so much, Pranav, for speaking with us today. I think one big takeaway is the faith in HDFC Bank that Bernstein has for this year as well. All right, time for our corporate focus. We're talking about NTPC Green this morning, and NTPC Renewable Energy has an order for 100 megawatt capacity. We will be joined by the management shortly. But first, let's get Puneet in to set up the conversation for us.
Well, thanks for that. So, as you rightly said, they are a successful bidder from a tender from the Uttar Pradesh Power Corporation. This is for a 1 gigawatt order or about 1,000 megawatts in terms of capacity, and the tariff has been discovered about 2.56 rupees per kilowatt hour. Now, what's important is that this is one of the key positive news going apart from this as well. They have signed a new joint venture as well with the Uttar Pradesh Rajya Vidyut Utpadam Nigam, where they will hold a 51% stake, along with a MOU that they've signed with the Bihar government. So ever since the listing on the 29th of November of the previous year, they have been active and actively pursuing these tenders as well. Just to give us some capacity, the current capacity, operational capacity as of the listing price and the listing of the IPO is about 3.3 gigawatts, and they have the current visibility of the next 21 gigawatts as well, along with 9.2 gigawatts under pipeline. So the rationale is of course adding more participating in more tenders and joint ventures as well for the company, while the growth path of the next 2 years is already in the making as well. So these are some of the key aspects to track about NTPC Green Energy, and of course take the conversation forward with the management as well.
Right, thank you for that, Puneet. That is, of course, NTPC Green, and with the recent sort of order wins in the solar project space. So we'll try and understand what it means for the company and whether or not the recent discovered tariff aligns with target returns and margin benchmarks. Rajiv Gupta, CEO of NTPC Green Energy, joins in. Rajiv, hi, good morning. Thanks for joining in. Good to have you on the show. Let's start with, what is the expected timeline for the commissioning of the 1,000 megawatt solar project that you've secured and Uttar Pradesh, and the discovered tariff on that? We'll talk about that in a minute, but give me timelines first to begin with.
So this project we have won in an auction, which the UP government had taken out, and we have won a 1 gigawatt capacity here. And the timeline for this is 24 months from the date of signing of PPA, which we expect is to be completed in the next 60 to 90 days.
So, are there any logistical or regulatory challenges anticipated with regard to land acquisition for this project in terms of execution in UP, or all that is secured already?
So all that is already tied up. We are going to execute the total capacity in 2 solar parks, which we have being developed by TUSCO, which is a subsidiary of THDC, which also happens to be one of the subsidiaries of NTPC.
Rajiv, you know, with the discovered tariff of 2.56 per kilowatt hour, how does this discovered price align with your target returns and the margin benchmarks? Is it slightly above, below? Is it in line? What sort of stead does that put you in?
So, to be honest, I mean, we are fairly secured in terms of the returns in this tariff. And if you see, the market has been almost hovering around at this rate for most of its tenders. So this is the benchmark which is there in the industry today. And we believe we'll be able to earn the margins which we have set out for ourselves in this tariff.
And going into the next couple of years with, of course, the new orders that you may procure, give me a sense of what your market share now becomes in the solar developers in the country. And I'm assuming one will be economies of scale and one will be expertise. Would that then improve the margin profile going ahead in the price discovered or discovered price? And that hence, you know, sort of outlies for us that the outlook looks a lot more promising than what we've seen this year, even though it looks good.
So we have a multifaceted strategy to boost our capacity addition program. One, we are looking at auctions. We are also looking at setting up of capacities through JVs with various state governments. And we are also having some C&I clients on our portfolio. So I believe as we move forward, we'll be fairly comfortable in terms of the revenue side and the margin side. So, and as we go forward, these margins are going to get better as we scale up the business.
Rajiv, now talking about these new order wins, and I want to talk about the MOU for Bihar as well. Actually, why don't we start with that? What is the investment outlay for the projects planned under the MOU with the Bihar government? And what are the proposed initiatives you're working with that state government?
So this MOU has been signed on the 20th of December as part of the Bihar, the government of Bihar had launched a program, and under that we have signed this agreement with them, and we are intending to set up ground mounted and floating solar installations, and also collaborate in terms of setting up of BESS capacities and work on the green hydrogen side. So the exact capacities will come as part of the JV, which will sign with the state government pursuant to the signing of the MOU.
Will these wins, or rather, actually, why don't you start by telling me, could you give me a timeline for the completion of the initial projects under this MOU?
So as I said, I mean, we are yet to earmark what projects we'll undertake. So this is going to be a joint effort where we'll identify what are the land parcels which can be allotted to us, where we can set up these capacities, what are the floating solar reservoirs which can be handed over to us. So this is a work in progress as we go along. I think this will crystallize, and then we can bring more shape to this whole MOU.
It's going to be more like next financial year, right, Rajiv?
Absolutely.
Okay.
Absolutely.
Okay. So now with these recent order wins, how does that contribute to the visibility of over 21 gigawatts capacity in the pipeline? You want to just place that sort of the pipeline for me in that sense as well?
So instead of the pipeline, what I will tell you is how we are programming to achieve our capacity addition. You see, this current financial year, we are targeting to add 3 gigawatt of capacity to our existing capacity. Next year, we plan to add another 5 gigawatt. and the following year another 8 gigawatts. So we intend to be a 19 gigawatt company by the end of FY27.
So with all these recent wins as well, would you require additional capex funding?
So we already had a very successful IPO. So we already have the funding with us, which will be sufficient to see us through this FY27.
Right, and anything that comes on stream post F527, then you may consider raising funds or internal accruals, but we'll wait for that.
Yes.
Right. Also, just very lastly, I want to talk to you very quickly about the joint venture between NTP, the joint venture as well that we've talked about, right? Just one last question. Are there any strategic advantages of this JV for sort of accelerating the renewable theme internally and also across states? And do you see that replicating across Uttar Pradesh?
You see, the essential point in these JVs is that the state government participates with equity in form of their land. So the land acquisition becomes a very easy process. So we already have a JV with Rajasthan for 25 gigawatt. We have similar MOU with the state of Andhra Pradesh. We already have a JV with state of Maharashtra. So this is another in the pipeline which we have signed with the UP now. And going forward, as you see, we will be having with Bihar and other states like Odisha, Chhattisgarh also.
Right. Thank you very much, Mr. Gupta. Happy New Year. Good luck. We'll hopefully we'll catch you soon. Thank you very much. In the meantime, the markets are lukewarm, struggling for direction. There is that big earnings expectation that the street is very keenly awaiting. We'll take a break. We'll come back. Next up, we'll get you an NDTV Profit exclusive about what can be on the Finmin's to-do list this budget. And we'll also speak with Axis's AMC, Ashish Gupta.
On my face. Chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Back with India Market Open right here on NDTV Profit. Now, the Commerce Ministry is expected to pitch its recommendations to the Finance Ministry soon with a focus on enhancing the EV sector. No surprise there. My colleague Rishabh Johnson with more details. Rishabh.
One might expect a budget boost for the EV industry in the upcoming budget set for February 1st. What we're hearing is that the Commerce Ministry will pitch to the Finance Ministry for certain sort of key demands from the industry, from the EV industry. The Commerce Ministry believes that the domestic capacity as well as consumption has taken off, but it is the export side that needs to now be developed and prepared to sort of take it to the next stage. What is also there is the apprehensions that also exist in the minds of a lot of EV potential customers is the affordability as well as the efficiency of the EV batteries. So these things still need to be addressed. Some key demands from the EV industry currently include being given the infrastructure status. Now what that means is that the government will deem it crucial to the economy, and that might translate to incentives and other sort of other preferential treatment to to the sector and a few companies within that. What is another key demand is sort of bringing EVs and charging infrastructures under the purview of the priority sector lending framework. Now, that is another major demand that is coming through from the sector. A few days back, we heard from the Commerce Minister Piyush Goyal that the industry is set to take off, the EV industry, and it does not require any sort of new incentives or subsidies. So we might not see a package or something in terms of monetary relief for the sector, but there might be tweaks and there might be a certain sort of push given to the sector in the upcoming budget.
It's raining exclusives on NDTV Profit. New tax regime for individuals could be modified in the upcoming budget. The Finmin might even consider tinkering in personal income tax slabs. Shrimi joins in with more on this. Shrimi?
The union budget is round the corner, and lot of deliberation happening at North Block among policy makers with key stakeholders around the fiscal measure which could get some benefit to the common man and the middle class and the salaried class, and that's what we are getting sense here, that there are discussion and examination on how to further modify the new tax regime for individual. In fact, we are getting sense that there has been deliberation on change and the tinkering in the current tax slabs as well as rates. In fact, there has been discussion on how to sort of reduce the tax rates for those income group up to 10 lakh rupees. So remember, this particular new tax regime has been set as a default option for taxpayers, and about 72% taxpayers already moved to new tax regime. In fact, in July budget, there has been tinkering in the both tax slabs and rates and in also the standard deduction, and taking cues from that how people are taking benefit of the new tax regime. Government is now again considering to further modify it. Of course, the focus is that how to sort of increase spending of taxpayers and also to have a more disposable income in hand of taxpayers. Remember, there has been a concern on the consumption, lower consumption, and overall advance estimates also showing the slowest growth here. So that's why the fiscal measures are under consideration, but these all are under examination mode and nothing has been finalized as yet. But there are deliberation happening as far as tinkering in the new tax regime is concerned.
Well, all eyes on the budget, and everything now until then is going to be all about what those expectations are, and of course what the street is also going to be penciling in. Well, Lou, moving from macros to micros, quick food delivery app Zomato relaunches a service that is 15-minute food delivery. It scrapped its 10-minute food delivery service in January 2023. This comes after Zomato's Blinkit launched its 10-minute food delivery service, Bistro, last month. My colleague Agni Dev joins us to give us more details about this exciting new launch for Zomato, even though the street may not be reacting positively to it.
It's that Zomato has launched its 15 minutes food delivery across select locations in cities like Mumbai and Bangalore. Now, this service comes 2 years after the company had already sort of moved away from its 10 minutes offering called Instant. So the company has not come out with an official announcement on how this 15-minute delivery will work. But from what we can see on the app, from your delivery address within a 1 kilometer radius, restaurants are offering you select items on their menu, which they say will be delivered to you within 15 minutes. So Zomato is trying to use its dominance in the food delivery space to make alleys into this fast developing quick food delivery service segment also. It's competing against Swiggy's Bolt, Zepto Cafe and Magic Pin's Magic Now services. It's interesting to note that Zomato had also launched its 10-minute bistro service through the Blinkit quick commerce arm. Now it's only going to improve, this fight is only going to improve forward of how food delivery companies capitalize on this quick service format.
Certainly something to watch out for. Now, thanks Agni for that. Now, NSE is going to introduce F&O contracts on 6 new securities. Harsh Johnson with the list of stocks entering the space. And Harsh, we've spoken about this, but anything interesting in any of these names?
Of course, the introduction of F&O will likely, the lot size, etc., will come through only on the 30th of January, Neeraj. You'll also have the contracts available for the 6 securities from the 31st of January. Just quickly listing down the securities: NBCC, Torrent Power, Gland Pharma, Castrol, Phoenix Mills, and Solar Industries. Now, it's a move to boost participation in some of these stocks as well as in equity markets in general. That's why F&O is generally brought in. You're expected to see an improved price discovery on some of these counters, and you're also expected to see some amount of trading efficiency starting to creep in. It's the larger additions give more options to traders as well as market players to play in some of these securities and to try and hedge some of their positions in these securities.
And Harsh, just stay on because I want to talk to you. I mean, because Nuvama has upgraded Reddy's, Dr. Reddy's to a buy rating, right? Tell us what's the rationale. Is it the development that happened recently? Yesterday, that is?
So Nuvama largely has upgraded to a buy, Dr. Reddy's, because first off, of course, the development helps. The other piece is also with regard to the fact that you might also expect to see Nuvama. Neeraj, can I come back to you on this, please?
Harsh, but I can try and fill in a little bit on this thing for you, because Dr. Reddy's was, of course, the biggest winner when the market started off and still trading about a couple of percentage points higher. And they spoke about an early resolution really being the kicker for Dr. Reddy's on this. Of course, it's come off from the highs of the day, but still doing okay. Now, let's move on from Dr. Reddy's and let's talk about stories. Now, we broke the story of how Reliance Industries picked up the biggest or one of the largest parcels of industrial land in Maharashtra for peanuts. Our correspondent Agnidev went to ground zero to find out what the actual rates are. Here's that report.
Right now, we are outside the office of the Navi Mumbai Integrated Industrial Area, a company that holds a 5,000 plus acre land parcel in this rapidly developing zone. Now, there's the Jawaharlal Nehru Port nearby, the Trans Harbour Link Road is right across from here, and even a new airport is coming up. Despite this tremendous potential, NDTV Profit had reported that Reliance Industries has bought a controlling stake in this land parcel for just rupees 2,200 crore. So today we are here on ground to find out what this land looks like and what it's actually worth.
The Navi Mumbai industrial area used to be a joint venture between CIDCO and 3 other entities. 74% was held by a consortium of Reliance Group companies, Anand Jain's Jacob and Skill Infra, a company currently under insolvency proceedings. The remaining 26% was held by government entity CIDCO. The body has been appointed as a special planning authority.
Okay, well, a clutch of things happening in the markets, of course, by and large. Now, look at this. If you just look at the kind of cracks that have come into select stocks, not that it's very high on the indices per se, but Nifty IT is sulking really bad. And small caps are down about 1% as well. So Nifty IT is down 0.7, 0.8%. Yes, 0.8%. Small caps are down about 1% as well. So there is a bit of an issue that is happening at the large cap end of the market and the mid cap end of the market. Large cap specifically specific sectors, but small caps certainly bearing a little bit of brunt. The good part, if any, of all of this is that we are entering the results season relatively light, because we are entering the results season at arguably the lowest point in the last few weeks. Can the results season deliver a surprise? Can we see a good start to 2025 because of Q3 earnings or not? Ashish Gupta, CIO of Axis AMC, Johnson, for his version of the Outlook 2025. Ashish, great having you. Thanks for joining in. And at the onset, to you and your team and everybody else, a very happy 2025.
Same to you and your team. Thanks for having me on the show.
Pleasure is ours. Ashish, how do you see this? Is it a glass half full? Is it a glass half empty? Or is it somewhere in between there when it comes to prospects for equity markets in 2025?
So I think 2025 we will actually we should be looking it really as a tale of two halves. I think our expectation is that first half of the calendar year will continue to be challenging. I think if we see the trigger points that came through in the last quarter, and the market has corrected about 10 odd percent in the last quarter, and couple of key drivers to our mind, there have been a, a a moderation in earnings growth momentum, along with the economic slowdown, as well as global factors, particularly US yields going up again and foreign outflows continuing. And at least in the first half, we see these trends continuing. I think our focus, as you also just mentioned, is on the earnings season that will kick off in the next couple of days. And the only positive here is that we are going into the earnings season with muted expectations, because I think the estimates are that this quarter as well, earnings growth for the market will only be to the tune of 5-6%. And that's been the disappointment year to date, that market earnings in the first half have grown only about 7%. And actually, as of now, the consensus expectations for the second half are much stronger at about 16%. But I think after 3Q earnings, there will be some more moderation in the earnings forecast for FY25 at least. And we are seeing kind of a flat earnings trajectory across multiple sectors. Some of the key sectors like auto, banking, cement, which are more domestically driven, will also report flat earnings growth, and it won't just be sectors like metals, oil and gas, which are the global cyclicals that have been showing the slowdown in the last couple of quarters. I think we expect a flat to negative earnings growth even for some of the key domestic sectors. So I think that's the big challenge ahead for the market. Hopefully, as we go into the second half, we see the earnings growth coming back into the double digit, and that should support the market better.
Ashish, hi, good morning. Tamanna here, and great to speak with you after a while, and here on NDTV Profit. Just want to get a sense, when you're seeing the GDP numbers coming in, the advanced estimates came in yesterday, this whole question about profitability for companies, consumption, etc., is it worrying you?
So I think more than till now profitability, I think the driver of the slowdown has been the weakness in the top line growth. So I think in terms of profitability margins, most sectors till now have been able to hold on to margins. And what we need to watch out for here on is that if the top line slowdown continues, does it drive more aggressive pricing, discounting, and we start to see pressure on the margins. So the market has built-in slow top-line growth. The margin pressures are probably where the risk lies.
So margin pressures will come in this crisis. Let's get a little bit specific. We've all been looking at the business updates coming in. We're speaking with you just as Q3 is kicking off, Ashish. Most of the companies that we've spoken to through the year are saying H2 is going to be better. Will Q3 maybe put a question mark on that claim?
I think so. And if we start to look on a macro basis, what have been the reasons that in the first half we saw the slowdown, and to our mind there have been really three drivers. The first one was the pullback in government spending that happened due to elections, and that seems to be normalizing now. The second was tighter monetary conditions, and really the third, which is partly related to the second, is the slowdown in credit growth. While the central bank policy has become more neutral in the recent months, the challenge is that with continued strong outflows and consequent RBI intervention in the forex market, liquidity conditions have not really improved. And if you see the month of December, the average liquidity deficit in the system was more than 1 lakh crores. So I think we need these macro factors to turn supportive, not just government spending, but monetary conditions, and most importantly, credit growth needs to pick up. I think it's difficult to expect that with a 10-11% kind of credit growth, nominal GDP growth can be much faster than 10-11%. So we need a stronger credit growth to help drive the economy.
Okay. Ashish, pending that, and if until signs of that are clearly visible, do you think the markets stay in a sideways or a time correction mode? And even if that is the view, could specific pockets still do well? And by that I mean larger pockets. A lot of talk around how defense orders will get bunched up in Q4, railway orders could get bunched up in Q4, and for those are pockets that might do well. If indeed IT budgets open up post Trump swearing in, maybe those stocks could do well. So could there be specific large pockets which could be winners in an otherwise sideways market, or will it largely only be smaller pockets which could shine?
So I think it will be, we believe the dispersion in the market will actually increase because if the macro is more sideways, then not every company, not every sector will do well. There will be more specific companies that will outperform, and some of them you have listed out. In addition, there are sectors like real estate, EMS, travel that continue to do well. So I think there are specific pockets that will probably do better than the broader market earnings trajectory. Unfortunately, I don't see them to be very large components of the total market. Secondly, the expectation there are already high. So the valuation differential between these sectors and the sectors that have seen flatlining growth over the last 2 quarters has widened. The third thing we have to keep in mind is that what is happening on US rates, right? And you would have seen overnight again, US 10-year bond yields went up from 4.6% to close to 4.7%. So I think that will continue to be a major headwind. Really, I believe stronger action in the market or even in pockets in the market will come through only when we see global cost of capital start to moderate again.
What are the factors, Ashish, that you see things changing for the Indian markets? And if FII interest returning is one key point, then does banking, IT and spaces like that look like they will struggle through the year?
So, as I mentioned, we expect these sectors probably to come back in the second half, both because hopefully by then some of the cooling off in global yields and the dollar will start to come in. And secondly, the growth numbers in banking will also start to look much better. I believe either this quarter or by next quarter, some of the asset quality stress that we have seen build up in small pockets like unsecured loans should start to plateau out as well. So I think that should lay the foundation for the better growth from these companies in the second half. And if that coincides with global yields cooling off, that could drive performance.
Okay, fair call. Ashish, now specifically on this whole I was talking to somebody who was saying that on last count, according to them, there were about 58 sectors in the country. Some of the sectors might have only 2 or 3 companies, but there are large sectors now getting formed. Primary market activity is probably at its peak right now, right? Yes. You've written extensively about some of these things, small caps, primary markets, all that stuff. Has any of it hit bubble zones, or because the market caps of India have gotten enhanced so much in the last 4 years, and as a percentage of market cap, some of those numbers like the SIP flows, for example, are still around the same percentage of market cap that they were in 2019. So have any of these statistics hit bubble territory, or are we still some time away from there?
Well, I don't think it's hit bubble territory, and I think in a market, in a true market, there are self-correcting mechanisms, right? So the equilibrium gets established. So yes, domestic liquidity was very strong and partly driven by SIP flows, but even other DIIs as well as retail flows. And that meant that when valuations went up, you saw the increased supply of paper, whether in terms of primary market activity, IPOs, QIPs, or in the secondary market, stake sales from private equity. And if you see the numbers for calendar year 2024, you actually saw net inflows into the mutual funds coming at about 4 lakh crores, but the total supply, the IPO plus the secondary stake sales was actually higher at about 5 lakh crores. So I think these are kind of self-correcting mechanisms that kick in, that kind of diffuse the bubble-like tendencies that are there in the market. Of course, that is not to say that small and mid-cap space is not overheated. In fact, it's quite interesting that in the last quarter, even as the market has corrected, the Nifty has corrected by about 10%. But as of now, the mid-cap and small-cap have corrected less than that. So mid-cap and small-cap index are down about 7%. And typically in every correction, you would find mid and small cap correcting more than the large cap indices. So I think there is certainly those pockets of overvaluation that continue to exist. But given that there was a very large increase in supply that came through over the last 18 months, I don't think these bubbles got formed.
Ashish, what do you think you are excited about buying right now? In the sense, when we look at, and here it is, we were speaking this morning that fund managers and those who are managing a vast amount of money of Indian investors right now are really going to be justifying their bonuses and salaries this year because it's become a tougher game to pick stock. So what is the strategy that you're adopting, and what are you telling clients who are coming and asking you that are we going to see the kind of gains that we've been seeing in the last 3 years?
So I think our message since last year has been very consistent that do expect a moderation in returns. I think from 21, the market returns have been in the mid-20s. Typically, you should expect market returns to be in line with really earnings growth, and earnings growth to be in line with nominal GDP growth. And over the last 3 years or so, the returns have been much stronger than that. So there is some degree of normalization that is going to set in. And over the medium term, our message to investors is that you should expect return to be slightly better than nominal GDP growth, which should come in at about 10-11%. Within that, of course, I think the task becomes more challenging, but also more interesting in these kind of market because there is higher dispersion. So it is not just the narrative that will work. It's not that whether you should have auto, or you should have banks, or you should have power companies in your portfolios, or PSUs in your portfolios. But within that, which companies are going to fare better than the others? So I think that is what we are seeing. So if you look at our portfolios now, we don't have very stark sectoral skews, so not very stark sectoral overweight, underweight, but within that we try to kind of focus on stocks. So for example, in banking or in consumer, we would focus our weight in a certain way. We believe the visibility on earnings as well as the comfort on valuations is reasonable.
Okay, Ashish, lovely talking to you as always. Thanks for taking the time out. Maybe we'll talk once again post the earnings season is over to just get a hang of what you made of what is seemingly a very critical earnings season that we will be in. So, but looking forward to that. But thanks so much for joining in today.
Thank you.
That's Ashish Gupta of Axis.
Just before we wrap up on the show, just want a quick market check because it's looking a little dismal. Markets now near the day's low and giving up. Actually, there were no gains, but losses deepening. Nifty IT in particular is something that I want to pull up for you. And yeah, Nifty close to the day's low. As of now, Nifty IT taken quite a hit, 1.5%. I think Persistent continues to be the top loser over there. Is it GDP concerns? Are they cues coming in from the US? From the Nasdaq was down about 2% overnight. Could be a mix of both. Higher bond yields as well. Bank Nifty is also something that I'll pull up very quickly. Persistent down 3%. Bank Nifty also down nearly 1% at this point. With that, it's a wrap on India Market Open. But stay tuned. Ask Profit up next.
On my face. Chalo, chalo, chalo.
How do you define a disruptor?
Do you really know the company you invest in? What's the picture behind presentations and claims?
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Anushi Vakharia and we'll take you through the next 1 hour of trade. Hi Anushi.
Hey, morning Alex.
Morning. All right, let's take a look at where the markets are right now. And if you thought that yesterday's session would give you a respite, well, that was the case. But today, once again, you're seeing selling. And you're seeing selling across the board. So cuts of close to 0.5% for the benchmark Nifty 50 and bigger cuts for the broader market. So you have the mid-cap index that's currently trading with cuts of about 1.3% and the small-cap index also about 1.3% lower. So quite a bit of pressure on the downside for the Indian equity markets. Of course, this is the case for most global equity markets. And I think the big talking point globally has been the increase in the bond yields in the US and the strength of the dollar. So the risk-free return, of course, in the US going up has had a bearing on risk assets globally, and that is being visible in our markets as well. We'll have to look at the sell figure for the foreign institutional investors in trade today. Of course, in trade yesterday, you saw selling of only about 1,500 crore, which was matched by the foreign domestic institutions. We'll have to see whether that pans out in trade today. But the stocks that are under pressure today, the likes of HDFC Bank, heavyweights, Reliance Industries recovering a little bit of ground on the other side, so proving to be a counterbalance of sorts for the loss that you're seeing in HDFC Bank. Infosys losing ground, and of course IT is going to be in focus this week on account of the earnings, which kickstarts tomorrow with Tata Consultancy Services, and ICICI Bank from the banking pack also losing ground. But let's also very quickly pull up the sectors because that will give you a sense of what is happening. And IT under pressure is losing about 1.3%,
3% or so and is one of the worst performers, if not the worst performer. Realty as a pack also not doing too well, and Anushi is going to tell you about why in just a bit. But you have the metal pack, which is down about 0.9%, the Nifty Bank, which is down about 0.75% or so, and even pharma and auto are losing about 0.4% each as we speak right now. But Anushi, a lot of business updates coming through. Tata Steel was one that talked about the production numbers, but I think a lot of people focusing on the housing and the residential space. There were a few big winners, but a few disappointments as well.
Right, Alex. So if we see in the start of the week, we saw this update coming from macro tech developers, which started on a very good note in terms of how the numbers were. They reported about a 30% plus growth. But it's Sobha, which is kind of a downer today for the Nifty Realty Pack. We are seeing a pre-sales downtick of about 28%. This is the YOY figure that we are looking at. The pre-sales numbers stood at 1,249 crore as compared to 1,735 crore. Realizations though continue to remain on the positive side, 16.5% growth in this quarter. The another one which is in focus is Signature Global. Now we see about a 120% of a pre-sales growth for the third quarter, which takes their guidance number. They have a target of 10,000 crore of guidance, so they've already achieved 87% of it. So that continues on a strong footing. What is surprising for the street today is Ashiana Housing. Now very strong set of numbers. We've looked at area booked stood 6.75 lakh square feet, which is 101% growth. Value of area sold, that's a pre-sales number, 454 crore of figure, which is 161.2% growth. So interesting business updates coming for the Realty Pack in general. But a couple of other stocks also in focus. We have the likes of Kalyan Jewellers, which continues to see a downtick in trade today. This is despite the City note that we've seen where they've maintained their buy record after the business update that it had just before. KC International, another stock in focus, they received orders up to 1,136 crore across their business verticals. But despite this kind of new orders, which they not just received today, but even earlier this week, we're seeing about, there we go, about 5% of a downtick in trade today. So these are the main stocks to watch for the session in trade today.
I wonder how many people have questions on this, by the way. If we haven't pointed this out today so far, but the two numbers that you see on the screen, up there is the WhatsApp number, and down there is in fact the number that you can use to call us. And incidentally, we've got our first caller for the day. But before I go to Shweta, who's calling us from Hyderabad, let me introduce who's going to respond to your questions today. And we've got Samir Dalal of Natwar Lal and Sons Stockbrokers, and we've got Vaishali Parekh also joining us this morning. Good morning to the two of you, and thanks so much as always for taking the time. Let me go across to Shweta straight away. She's calling us from Hyderabad, and she's got a question, I believe, on Dixon Tech. Shweta, thanks so much for calling us. How can we help you today?
Hi, Alex. Thank you so much for taking my call.
Our pleasure.
And I'm holding Dixon Technologies of 15 shares at 15,839 price. Today I've seen a sharp decline. I think I want to know whether will it continue the profit booking, or should I book my profits and exit?
Yeah, that's a fair
And I
point.
also want to know, but I want to stay in EMS sector. So is it a good time to enter from Dixon to Keynes or Amber?
Okay, so it's a dual question, and generally I do not do this, but considering that you have quite a considerable amount invested in this stock, I'm going to do that. A quick view, Vaishali, on whether today's drop is something to be concerned about from a technical standpoint, and would you use it as an opportunity to exit if you've invested at levels of 15,839?
Very good morning, all of you. So yes, market is actually getting into a new round of selling pressure. And today's candle, it shows a little bit of weakness in Dixon. So I would definitely suggest to book partial profit. And if she still wants to hold, then I think 16,700 acts as a very crucial support, 16,700. So if those levels break further on, that could trigger further selling. So either book partial profit or wait for the stop loss to hit.
The second part of that question, of course, and I think this will benefit a lot of people because Dixon is a popular stock that a lot of people are interested in, but the EMS space as well, right? So the second part of the question was, should you exit something like a Dixon and find opportunities elsewhere in the EMS space? Samir?
Yeah, hi. That's for me. Okay.
Yes,
Sorry.
yes.
So Dixon is actually a good company to have, but the problem is simply the valuation. Now, look, this is a company that has pretty much got orders from every cell phone company to manufacture in India. They have a lot of, like you said, on the EMS side, a lot of orders coming in. The problem is across the board, be it Amber, be it EPAC Durable, all of them are trading at premium valuations. So the question remains is, should you stay with the largest player or maybe try to go to somebody who's smaller and who could probably grow at a faster pace? I think given the fact that India is in a growth space and given that Dixon, which is the market leader with the largest capacity and the largest setup, I think they would probably stand to benefit the most. So from that perspective, I think I would stay put in Dixon. But if you're asking me, I mean, from the entire list of them, but if you're asking me, I find valuations ridiculously expensive. I agree, earnings will catch up because a lot of the order flows that have come have still got to get executed, which means the operating leverage will play to some extent. But you got to remember, these companies work on very small margins. If you see the net profit margins, they range between 1 to 2%. So if for some reason something were to go wrong where they get stuck with something, I think it could take away the profitability. So I'm as bullish as I am on the long term of this space. I think valuation discomfort remains. So for me, I would not be an investor in these at this point of time. But if you had to choose any of them, I would choose Dixon.
Okay, so that was the view for Dixon Tech and a comprehensive view on the overall EMS sector and how it functions. But moving on to the queries now, the first query is from Sarath from Dubai. He holds about 70 shares of Electra Green Tech, and this is at a price of 1,694. Currently sitting at a loss of 18.18 lakh. In fact, if we pull the 6 months of 18,000. So in fact, if we pull out the chart also, we've seen a considerable amount of downtick in the stock price in the last 6 months or so, currently trading at 1,433. Vaishali, coming to you on this one, whether Sarath should continue to hold Electra Green Tech or should he take a exit position in this one?
So according to me, actually, the long-term chart is quite intact. We have seen a good corrective move coming from 2200 and now coming closer to a prominent support of 1400. So now that he has held on for so long, continue holding with a stop loss of 1400, because if the stock moves below 1400, it triggers weakness. But I guess at these levels, it will show a good bounce from here on once we see stability in the market and if 1400 levels are held on. So not in a hurry should he exit at these levels.
Okay, Electra Green Tech, it's a hold on the technicals as things stand despite the recent underperformance. Ramesh is calling us from Hyderabad. Ramesh, hi, thanks so much for calling us, and how can we help you today?
Good morning, panel members. And I have bought like ESAF Small Finance actually.
Okay.
In February 2024 actually, at the price of 68.
Okay.
And the price keep on dropping actually. Okay. I mean, the reason it has been dropped, and can I hold long term or can I average that stock?
Okay. What was the thinking when you bought it? It's a 2,000 crore market capitalization company. What drew you to this? You've bought 5,000 shares, so it's a significant quantity as well.
Like I just compared myself with the big large cap companies actually, Bajaj Finance and other sectors. They were doing well in that industry. I hope this company will be doing the best as per the market. That is the only thing, attention to buy that stocks actually.
That was the intention. All right. Do you have any other stocks in the financial space that you've bought, Ramesh?
Currently, no, actually. That is only one I do.
And do you have another few stocks in your portfolio?
Yeah, I do have other stocks actually.
Okay, got it. Samir, I'll come to you on this one. ESAF Small Finance Bank, a significant quantity bought at levels of 68, lost quite a considerable amount of value. Stock is currently trading at 40 rupees. View on the fundamentals, would you hold?
So let's address the first question that he asked is, why is the stock falling? The stock is falling because of the micro loans that they have. The entire microfinance segment is going through a tough period because of the delinquencies increasing post the RBI guidance of the problems that exist in the sector. You have massive over leveraging where borrowers have borrowed from 4 and 5 different lenders. So now I haven't studied in great detail of why, if ESAF has, their borrowers have multiple loans or not. It's difficult for me to give at this point of time. But what I can say is that this space is going to remain under some amount of pressure. Secondly, if I were to be an investor, I would rather pick a larger player in the similar microfinance space from in the banking also, which is also a bank which has more comfort on valuations rather than being an ESOP. They're not expensive. It's trading at about 0.9 times book value. So it's not expensive, but I think if you compare across the board, given the size that they have and given the deposit base that they have, I think there are better opportunities. So for me, I would not hold on to ESOP but move out. If you want to take a call, I think Bandhan Bank is seen extremely low levels. It's a very similar kind of business model, microfinance being a big chunk, and that is why that has also fallen. So that is maybe something you can make a switch. I believe that could move up to 200 in the next maybe 6-8 months once the microfinance space turns. But if you really want to have a very, very good call with low risk, I think IndusInd Bank is the play to be making. For the simple reason that, look, they also have a large microfinance book. They also have seen a slowdown, and the stock has corrected from all the way from 1,500 down to below 1,000. So you're seeing a good 33% correction. They are well diversified. Their microfinance doesn't become the largest portion of their loan, but it's some part of it. But they are able to grow their other book and ensure that growth is there. So over time, I feel IndusInd would probably be a better bet. So that would be my advice. Take the loss in this one and move to a bigger, better counter.
I just want to point out that Devi Prasad from Bengaluru had a question specifically on Bandhan Bank. He's bought at levels of, let's pull up the chart. He's bought at levels of 173.7 on average. The stock is at 152, so it has lost a little ground. But based on what Samir has said, it's one of the two banks that he likes that operate in the microfinance space. So bear that in mind, Devi Prasad.
Right, but let's keep a focus on the banking space. We have another query. A lot of interest from this side of all is holding. Next viewer is PJK Raju, and he's holding 10,000 shares of Bank of India, and this is at a price of 100.10. He wants to understand the long-term view for this one. So again, coming to you, Samir, on this one, you already gave a comprehensive overview on the banking space, but what is your view on something like Bank of India as well, if you can elaborate more?
So Bank of India in the PSU space is a decent bank. Valuations are not overly challenging or not overly expensive. But if I were to have a pick in the PSU, Bank of India is not the top pick. Bank of Baroda is my top pick at this point. SBI ideally would be the best bank to be in the PSU space. But given the fact that valuations are much higher compared to some of the other PSUs like Bank of Baroda and PNB, which have, I won't say similar size, but are large sized banks, there is more upside in Bank of Baroda for me. If you ask me, the stock has seen a good correction from 280 levels down all the way to 230. Make that switch if you like. Otherwise, Bank of India also, you can stay invested. I'm sure it will also do well, but it will be moving. I mean, you'll see when you see the rally in the PSUs, I think the larger PSUs like Bank of Baroda and PNB will probably move first, and then Bank of India will follow.
All right. I believe we got the next caller. Ratesh is calling us from Kerala. Ratesh, good morning. And thanks so much for calling us. How can we help you today?
Hello.
Hi, Ratesh. Please go ahead.
Yeah, I have around 40,000 units of Suzlon, which I bought around 13 on average actually.
Okay.
So I've been holding on it for some time. So looking at the current trend, it's going downward. So what is the prediction for Suzlon for next 1 year, looking at the renewables? Whether should I be holding on to it or should I be selling it?
So allow me to take a technical check on Suzlon, Ratesh, because ultimately you've made the right call on the fundamentals and you've bought at a very attractive level. So what you're more concerned about is whether more erosion can take place in the stock price. And considering that you've got 18.5 lakhs as a profit, you want to protect that as far as you possibly can. I've understood your question. Let me go to Vaishali on the charts on this. Vaishali, attractive buy price 13 rupees and significant quantity 40,000 units. What would you do? Would you book partial profits?
Well, actually, I would say it is very tempting to book partial profit, but I think long-term trend is still intact. there's no damage to the trend. But keep a stop loss of 53, because if 53 levels break, then that could call for weakness. So continue holding, because overall, even in a market being so choppy right now, this stock is holding strong. So I would say stop loss should be 53 and continue holding.
Okay, very quick view, Samir. I don't want to spend too much time, but I know that a lot of people will also be interested in Suzlon. I know you've said at 70 plus levels that the valuations were extremely stretched. I believe we spoke it when it was around 80, if I'm not mistaken. Is it more comfortable now, or would you wait for more time to deploy further?
So it's definitely more comfortable, but like you said, I would like to wait a little longer, because look, people have factored into that the growth is going to be for the next 3 years, and they started projecting on FY27 and 28. So I think it's the opportunity is very good. I like the space, but for me, 48, 50 levels would be a good buying opportunity. Unfortunately, technically that becomes a selling point, but as a fundamental investor, anything below 50 would be a great buying opportunity from the next 2 to 3 year perspective.
It's a hold?
I would say hold on,
okay.
Yes.
Okay.
Okay, so a hold is what we are looking for, Suzlon, in terms of where the fundamental check is. Now, the next query is from Santosh from Hyderabad. He's bought 26 shares of TVS Motors, and this is at a price of 2,528. He's just bought it a month back and is and wanted to hold it for 1 year. But considering the stock volatility in this last 1 month, he wants to understand whether he should continue to hold it or whether he should take an exit on this one. Vaishali, coming to you, in the last 1 month period, we've seen about a considerable downtick in this stock price. So what is your view for this one?
I think the damage is pretty much done with. The corrective move has been done with. So now that he's held on for so long, continue holding, because I guess we are coming closer towards the bottoming of the market, selling pressure. So a little bit of erosion can take place, but I think we should hold on for a good bounce from here on.
Hold on for a good bounce is a call on TVS Motor. Chandrasekhar is calling us from Bengaluru. Chandrasekhar, thanks so much for calling us, and how can we help you today?
Sir, I have purchased IRFC 5,000 quantity at the rate of 160.
Okay.
Already loss of 10%.
Yes.
Is that price will be averaged?
Okay.
Or no?
And what is the time horizon that you have, Chandrasekhar, when you bought it? Obviously, you bought it because the prospects in the railway space are significant. But did you think that you would hold it for the long term?
4 to 5 months outlook, sir. 6 months.
4 to 5 months outlook. Okay, 6 months outlook. Okay, at the very on the further end of the spectrum. All right. So it's a short-term question. I'll come back to you, Vaishali, on the charts. Then 10% down right now. He's holding. Would you hold? Would you average? Would you buy more at this juncture? What are the prospects on the upside?
I think he should average out once the stock comes closer towards 133, 135.
Okay, and what are the targets on the upside?
So I guess once we see a reversal coming in, the first target on the upside would be around 155 levels. Above that, we can see around 166, so on. So 166 should act as a crucial hurdle. If we see the stock moving past that, it would get into a strong, good uptrend.
Okay, so that is the view for IRFC. Now the next query is from Ali from Hyderabad, and he wants to understand the view for Zomato. He's bought it at a price of 276 and wants to understand whether there is growth from these levels going forward. Samir, I'll come to you on Zomato. In this last couple of months, we've seen a little bit of downting as to where the stock price is. Some of the brokerages have also come out wherein they've now started downgrading the stock. What is your view on the fundamentals of Zomato?
So the fundamentals are very good, right? The growth opportunity is very strong. We believe that the quick commerce space will grow. We believe that the food delivery space will grow. But the problem is the competitive intensity that is coming up in the home delivery for the quick service, that is going to increase. And that we've already seen, because Swiggy obviously is there. You have Zepto expanding quite quickly. You have Amazon that is going to be making us entry into the home, the quick delivery for homes. You have Flipkart that is talking about it. So with more competitive intensity, I'm not saying the market is not large enough to have all five. I think it is large enough. But if the competitive intensity increases, obviously it makes it a little harder to return to profitability as quickly as probably previously envisaged. So that is one of the reasons that you've seen the stock languishing, I think, over the last 3 months. Plus, you also have to realize that the stock has run up unchecked from all the way from 55 more or less to 300 rupees. So we are seeing the first round of correction that is happening in Zomato. And we've been maintaining for a while that, look, it's going to be difficult to make money on Zomato from the 280 when we spoke last time in the near term, meaning in a 1 or 2 year perspective, because earnings need to catch up in a big way. We need to see Zepto be, the quick service business of theirs, which is, I forget the brand name, but at the moment, but that needs to start picking up quite quickly. And that is not going to happen according to us. So we felt 200 would be a fair price. If the stock continues to correct, if it comes closer towards 200, we would definitely recommending a buy from a long-term perspective. But at this point of time, we are still midway. So I would stay put.
Yeah, Blinkit is the name that you were trying to recall. Swiggy and Zomato both under pressure today. And of course, the update from Zomato post yesterday's downgrade from Jeffries was that it has restarted its 15-minute food delivery service. I'm curious about what you guys think about that service. Would you be ordering food 15 minutes away? Or would you be willing to wait for the regular, I think, half an hour or so? Half an hour, 45 minutes?
40.
Yeah, all right. I think that half an hour is a decent amount of time to wait for food, right? That's how much time I would take to make my own dinner. Let's get Shankar's question in. Shankar is calling us from Chennai. Shankar, thanks so much for calling us. How can we help you today?
Good morning, sir.
Good morning.
Sir, I'm Shankar from Chennai.
Yes, please go ahead, Shankar.
Sir, I just 2 days back bought Z Entertainment shares, 806 shares at the rate of 124 rupees. I am ready to hold till 2030.
Okay.
That means 5 years.
Right.
What is the technical outlook and maximum target for that chart?
Okay.
I want to know it, sir.
So you're asking for a technical outlook for 5 years, but then there is a lot that can change on the fundamentals till that point. So is that also something that you have looked at, the fundamental aspects of the company, the fact that there's quite a bit of churn on the management side, everything to do with the merger that didn't come through? You've watched all of that, Shankar?
Yes, sir.
Have you checked all of the developments about the company in the recent past?
No, that means past 1 year, share price continuously dropped. And I came to understand one leading newspaper recommends its column by Z Tele, famous newspaper, business newspaper, for 5 years target of 700 rupees. So I want to confirm it from your side.
Okay, that's an interesting reason to buy. Vaishali, therefore, I'm coming to you. 5-year target. I'm not sure how many times you've been asked this on the technicals. Would you hold? 124 rupees is the buy price, so he's making a bit of a pop. But should he hold for 5 years, and what level would you see?
Well, so I would go step by step because he has always mostly disappointed us. So right now that he has bought at very good support levels. So I would say keep a stop loss of 120 and let it cross 150. If it crosses 150, we are looking at the next target of 190 to 220. So 220 is quite achievable in times to come. But if this stock moves above 220 and if 5 years is the horizon and if the stock goes as per our calculation, this can go towards 400 to start with. So this is how I would look at it for a longer term perspective. But I think he has to follow discipline. Let's see, 120 has to be taken as a strict stop loss. And let's see the levels that I've given you. These are the resistances. Once we see the stock moving past these levels, we can take the further up move.
All right, so that's a view on Z Entertainment. I've been counting. We've discussed 12 stocks already, and these are stocks that a lot of you are interested in. We've got more that we will do. Hopefully, we'll be doing more on the other side of this break. So do stay with us, Samir and Vaishali, and we'll be back on the other side to take more questions. Viewers, do stay tuned.
On my face.
How do you define a disruptor?
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is on my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared.
Hi, thanks so much for joining in. You're watching Ask Profit, and we've taken quite a few stocks already. We've discussed quite a few of your questions. We will do more of that. And the first question on this side of the break is a short-term query, relatively speaking, on HFCL. And we've got a question coming in from Shrinu, who has bought at an average price of 143 and is incurring a loss, therefore, because the stock is currently trading at 107. Is it a good idea to hold, or should you sell with losses at this juncture, is the question. Vaishali, on the charts, what would you do?
Well, it is in a downward trend, and if 105 levels break, then it can go towards even 195. So that is a call he has to take. Either hold with today's lowest stop loss, 105, or just book the losses.
Okay, so book losses for HFCL, that's the technical view on HFCL. Now the next question is from Sunil Kumar from Cochin. He's bought HDFC, 300 shares of HDFC Bank, and this is at a price of 1,839. Just today we had a Macquarie note reaffirming its outperform rating with a price target of 1,900. Coming to you, Samir, on this one, we've already addressed a lot of banking queries. What is your view on something like HDFC Bank?
So it is one of the top picks in the space. It's gone through a massive consolidation, and rightfully so, because they, after the merger, they had to get their high cost borrowings down and replace it with your CASA. And CASA has not been easy to come by. So, they've not been able to get the benefits of the spread increase, which everyone was hopeful for. But going forward, as the deposit base continues to increase, and we see that they have the cheapest cost of borrowing, they would probably be one of the biggest benefactors of the banking space. Valuations are very attractive from a long-term perspective compared to historical. So I would recommend to add and average some more and stay invested for the next 2 years. I think you will get 20% CAGR returns for the next 2 years.
In fact, it did hit all-time highs, but it gave up ground since that point. It's down about 8.5% from that point itself, as you were just seeing on the charts. We've got an interesting question coming in from Jayachandra, who's calling us from Hyderabad. Jay, thanks so much for calling us. How can we help you today?
Hello.
Hi.
I myself, Jayachandra, I have purchased 6,000 shares of Nava Limited at 521.
Okay.
Shall I hold or buy or sell?
Okay. Can you tell me when you bought this, Jay?
Only 9 months back.
9 months back. 8-9 months back. And did somebody tell you about this stock, or did you read about it?
No, myself I have researched.
You researched. And what about it did you like? When you saw the stock for the first time, did you read something did you see something that you liked? What was it?
I have liked fundamentals.
Okay.
Fundamentals, EPS is good and all debt-free company, and that's why I have purchased.
Okay. It is, in case you were wondering, and I'm talking to everybody else here because Jay clearly has done his research on this, Jayachandra. He's bought at a very attractive price and he's sitting on a very significant profit. It is a ferroalloy manufacturing company. It is also present in the energy, mining and agri-business as well as O&M. So it's got quite a few businesses. I'm seeing something about avocados as well. So I'm not sure if, Samir, you've come across this company and whether you've looked at it, 13,000 crore market capitalization. What would you do if you're sitting on substantial amount of profits?
So I know the company, but I haven't studied it in the last maybe 2+ years, so I don't want to comment on it.
Okay. Specific comments are not available on fundamentals, but let me get you a view nonetheless on the technicals. Vaishali, what would you do with this stock?
I would say continue holding because I think the stock has just been consolidating. And once we see a new round of momentum setting in, I think this can go towards 1350 to 1500 levels. So according to me, this should be a hold.
Okay, so a hold is what we are looking in terms of where Nava Limited is substantial gains for the caller that was present over here. But moving on to the next query, it's from Bedri from Chennai. He's holding IDFC First Bank shares and this is at an average price of 65.4. Wants to understand whether she should average it out or continue to hold it for a longer period of time. Coming to you on this one, Vaishali, what is your view on this?
So I would say actually IDFC has been quite a laggard all this while. It gives a bout of momentum and again fizzles out. So I would say at this juncture, rather when market is giving you a chance, we are seeing a little bit of a corrective move. So once you see that, I think better get into ICICI or HDFC Bank.
HDFC Bank, even on the technicals, is a buy. Samir Kulkarni had a question on HDFC Bank and we've addressed that at quite a bit of length. In fact, Samir has also said that it's a buy at this juncture. Dheeraj is calling us from Hyderabad and he's asking about another HDFC group company, which is HDFC Life. Dheeraj, thanks so much for calling us. How can we help you today?
Well, good morning to actually.
Good morning. Good morning.
Actually, bought HDFC Life, 650 of them at 620.
Okay.
Ideally, I'm looking at short term maybe at 650, 660 levels, but the stock has been fluctuating quite a bit.
Okay.
So just wanted to have a short term outlook on the stock.
650, 660. And what is the maximum time frame that you have in mind?
I'm looking at a period of 1 to 2 months.
Okay. All right. So relatively short term time horizon. Vaishali, on the charts, is 650, 660 possible on the upside? And what levels on the downside would you watch out for? What's your stop loss here?
So actually, I do agree with his view because insurance stocks, SBI Life and HDFC Life, these two stocks have really corrected very well as far as technical parameters are concerned. So I would say, and it is consolidating at these levels. So 600 should be maintained as a stop loss. And I think very likely he will meet with his targets in these 2-3 months.
Okay, so that's the view for HDFC Life. Now the next one is from Balaji from Chennai. He's bought shares of GNFC, 100 shares of GNFC at a price of 715. Let's pull up the chart for GNFC. Currently trading at about 525 or so, 552 in fact. So sitting at a loss of 16,000. Wants to understand whether it should average now or book losses for this one. His holding period is for 6 months to 1 year. Vaishali, coming back to you on something like GNFC, what is your view?
No, I would say exact bottom fishing is not possible, but I think the stock has really given a good corrective move, and these are the levels. Actually, technically, 520 acts as a very good support. So either start accumulating from here on at every dip for a longer term horizon, or wait for a dip to come towards 520 and buy.
Okay, Sushil Kansurkar has got the next question and asking about Motherson Sumi. And he's got, I believe, I'm not sure actually, let's pull up Motherson Sumi all right, I'm not sure if this is Motherson Wiring or is this the other company that he's talking about. Why don't we get a fundamental view on both then? In this case, because okay, so I think he's talking about Samvardhana Motherson, which he's bought at a level of 169. So Samir, on the fundamentals, would you hold this? He's incurring a bit of a loss right now.
Yeah, so the fundamentals are very good and the growth opportunities continue to remain very strong. But the problem is he's probably picked it up at a much higher price than what we have comfort with. So if you think about the stock used to trade around 120, 130 about 6 months to 8 months back, and then it ran up all the way to about 210. At 210, we thought the valuations had reached far higher than the next maybe 3-year earning multiples. So we were not very positive. Now the fact that it's come down to 152, it's looking a little better. But I'd like to say that, look, if you're a long-term investor, stay put. And if it comes down closer to the 130 levels, you should add on. But at 150, I mean, there's little downside, more upside. So stay invested. But your upside will be a little less from the 160 levels that you have bought at, for the simple reason that you had paid a bit of a premium. So the upside, our target for maybe the next year and a half is closer to about 190 to 200. If you can on corrections, please do average out.
Okay, average out on corrections. That's the view for Samvardhana. Next, we have a caller joining us. So this is Ravi Chandra from Hyderabad. Hi Ravi. How can we help you on the show today?
Yeah, hi. Good morning, everyone.
Please state your query.
Yeah, actually, I want to buy a fresh shares of ONGC and IOCL. And is it a good time to buy?
Any particular reason that you plan to enter in this segment?
Actually, I mean dividend, because ONGC and IOCL has a better dividend.
Okay. Let me take it across to Samir then. Samir, what is your view on something like ONGC and IOC? Is it the right time to buy?
And okay, let me add to that question, because a lot of people would be interested in buying dividend stocks, right? Particularly those people that look to build this over a period of time. Would these be the best, or would you add to those if you were to build a portfolio of stocks that were to give you good dividend yield over the long term?
So if you want dividend yield, then either you buy in the private sector Vedanta, who's paying dividend left, right, and center because the parent company needs money, or you invest in the government companies like an ONGC, Oil India, IOC, HPCL, BPCL, which are all paying out dividends. There's PFC, REC. I mean, most of these government entities which pay out big dividends are there. But one of the counters that I like, okay, let's first talk about ONGC that we discussed. So we do believe that the prospects for ONGC in the near term are good, given the fact that Donald Trump is talking about making sure that the oil sector gets a boost. Now, the problem is that when he gives an oil sector a boost in the US, it means shale gas getting a benefit. So we need to see how oil prices move. But in effect, what he's trying to say is he wants to encourage and promote more of oil and gas space. And if prices move up because of that, ONGC will stand to benefit. Government has now removed that, scrapped that tax, which was, if prices moved up, government would take some amount of money. That tax is gone. So any price increase would benefit ONGC. Dividend is good. But the one stock I would like to tell you, since you've asked me that as an extended question, there is a company, LIC Housing Finance, which is semi-government, so it's owned by LIC. LIC is owned by the government, so it's through and through. But LIC Housing Finance pays out a very strong dividend. The company is growing at a decent pace, very strong fundamentals. We believe the next few years is going to be good for the company. We have a 1-year target price of about 700 on the stock, so we're talking of 20% upside. Plus, pays a dividend of almost about, if you look at 560 price, pays a dividend of about 4%. So you're getting 4% plus the 20%. That would be one of the other counters that I look at. And like I said, if you're looking at private space, Vedanta has been paying out as much money as they can for the parent company. So that is one more stock you can make for a dividend purpose.
Wow, that's quite attractive. 4-5% dividend yield is certainly something to look forward to, and hopefully that answers the question that you had specifically on ONGC and IOC as well, and gave you a bonus, of course, if you're looking to build a dividend yield-led portfolio. NBCC is the question we're talking about next, or the stock we're talking about next, and Siddesh has got this question. He's bought at levels of 128 and the stock is currently trading well below that at 89.9, and so I'm guessing that he has missed stop losses that might have been suggested. He's asking whether he can hold. What is the next target that you would give on the stock? And Vaishali, if you can also specify what the stop loss would be from this point on.
I would say actually 85, 86 is a cluster of support levels. So I would say now at this level, no point exiting. Continue holding. If 85, 86 levels break, then it could call for further erosion. But till then, I think it's ready for a takeoff. There's not much of a downside. It's quite oversold. So I think it can give a bounce, and you can look at a near-term target of 95, 96 and thereafter around 105 levels.
All right, so that's a technical view on NBCC. Sanjay Pandya is calling us from Gujarat. Sanjay, thanks so much for calling us, and how can we help you today?
Yeah, good morning.
Good morning, Sanjay. Please go ahead.
Yeah, I have Apex Frozen
Foods
Limited. My buying price is 257, 1,000 quantity.
Right.
How can I do? I have a one year horizon.
Okay. Can you help me, Sanjay, in telling me what was the perspective when you bought it? Did you like the fundamentals of the company, or was it the price movement that attracted you and said that this looks like a bargain, I will buy at this point for a short-term time horizon?
Yeah, that's I to see that the stock is already bought by the near-term good FIIs company like Massachusetts, USA, and then I take the call and I saw the results of the company. But his problem is using the fund is not proper, but otherwise the results are good.
Okay, so you've studied the results as well. You're incurring a little bit of a loss. Let me go across to Samir on the fundamentals. Samir, frozen foods companies, at one point of time, these companies were the flavor of the season, if you can call it that, and they've lost out a little bit since then. Would you buy more at this point? Would you hold for 1 year?
So, I mean, it's more shrimp based than frozen foods per se, if you ask me. I don't have active coverage, but I don't want to, so I don't want to get into the details of the company. But yeah, I mean, you can try to take a technical view on that.
Let me do that exactly. Vaishali, what would you say about Apex Frozen at this level? Would you continue to hold if you're seeing a little bit of a downside? I mean, cut in the value that you're holding?
Actually, no. I think the stock is just oscillating. There is no clear trend as such. But I would say 235 should act as a crucial support. If these levels break, then I would say it calls for some weakness. But I think for now, 235 and 280 is the range that we are looking at. Either ways move would give us a clarity in the trend.
Okay, so that's the view for Apex Frozen. Next stock in focus is PN Gadgil. Urvish holds about 300 shares at a price of 739. Wants to understand whether he should continue to hold on to this counter or average it at currently facing a loss of 19,000 on this one. So coming to you, Vaishali, on this one, what is your view for PN Gadgil?
So is it 672? The cost is 672?
The cost is 739.
No, but the current market price. Let's pull up the current market price and see where it's currently trading, please. Let's pull up the chart and see where it's currently trading.
Okay, yeah, it is 670,
Yeah, so it's currently at 672,
Well, so I would say hold on with 650 as support because it's just range bound. This too doesn't have any clarity. Hold on with 650 as support unless and until the stock moves above 710, 720, there isn't much to say.
Okay, there isn't much to say on PN Gadgil. The stock is down about 2.7% at this juncture. Sanju is calling us from Gujarat. Sanju, thanks so much for calling us. How can we help you?
Yeah, good morning. I'm Sanjay from Surat. Yeah,
good morning. Good morning, Sanju. Please go ahead.
Very good morning. Yeah, I am holding Biocon 900 quantity at the rate of 150.
Okay.
and I have been holding this stock since 2020, I think. Maybe more time, but I am not sure.
Okay.
And I got one share bonus. One by one.
Yeah, okay, you got a bonus
yeah.
as well, right?
Yeah. So my question is, should I be continue with this stock or book profit? And if I hold it for more 12 to 15 months, what kind of appreciation should I expect?
Okay. But you bought it based on the fundamentals, right? You bought it for the long term, right, Sanju?
Yeah. As per my knowledge, this company is in the pharma and research. Pharma research, yeah.
Okay, so Samir, let me go to you, since he's been holding since at least 2020 in his opinion, and he's got a very attractive price. Would you continue to hold, and what are the prospects on the fundamentals over the next 12 to 15 months?
So I do believe the fundamentals are quite strong, right? Look at the fact that biosimilar space in the US is expected to grow. They have a few launches in the pipeline where they have the tie-ups in place. So once those launches start taking place in the US, we will see good growth in the top line and profitability. This business has a very strong operating leverage, but it works on both sides, positive and negative. So if something doesn't work out, it works negatively. But we believe that the opportunity for biosimilars is quite large in the US. They are in the right space. The stock has actually been kind of a underperformer if you really look at it over the maybe 1 year or so. Yes, from the longer term perspective, it's done well, but in the last 1 year, it's not been one of the high return generating stocks. But the way I look at it is the next 2 to 3 years will be very positive for the stock. Earnings are expensive. I mean, valuations are expensive, but like I said, earnings are going to catch up. So I would stay invested in the stock.
Okay, stay invested in Biocon. Now, next we have a caller joining us. This is Jay More from Kolkata. Hi Jay, how can we help you on the show today?
Yeah, ma'am, I have a query on the UPL. I am holding it for last 1.5 years. I purchased it at 700 rupees, and since then there was one-time adjustment in the balance sheet, and since then the stock has gone down to somewhere at 450. And now it is trading at 550. So whether we should hold it or sell it for the, I'm having the horizon for the next 1 year.
Okay, you bought this 1.5 years ago. What was, do you plan to add more to this, or you want to understand the future prospects?
No, I don't want to add more to it. Okay. I want to see whether how this company is going right.
Okay, Samir.
And whether I should hold it or not.
Right, so we'll go across to Samir for your query. Samir, what is your view on something like UPL? He does not want to add more to this position, wants to understand the future prospects of the business and what could he do with this stock now?
So first off, just to answer the second part, he should stay invested in UPL. So UPL has gone through a lot of tough, difficult times recently because of the dumping that happened from the Chinese market in the chemical space, especially the fertilizer, the inventory destocking that happened in the US and in Europe. All of those things have hurt the top line and bottom line for the company. Now, this company had a huge amount of debt on its book when they made an acquisition along with the private equity. So they put in X amount of money and the private equity put in some amount of money. But now, the company had given certain targets of deleveraging, which they are obviously working on. They finished a rights issue. They've raised some other amount of equity. They're selling stake in one of their seed businesses, which is also going to allow them to. So once all of these activities happen and the debt starts coming down, we believe the interest cost will start coming down. So profits from that side will start to see a bit of an uptake. Secondly, we believe the destocking from the international markets is over, and we are closer, I would think, to the end of the dumping that is happening from the Chinese in a lot of the chemical space. So we believe that the profitability and the margins will start to improve for UPL. So stay invested. The stock's valuations, if you look at it on a normalized earnings, are not so expensive. If you look at the last 1 year, they look ridiculously expensive because of what the pain they've gone through. But if you take a slightly longer term, if you look at the last 4 years, 5 years, and if you assume those margins can return, which we believe will happen, then the stock is quite attractively priced, and the stock would probably run up to 800 over the next 2 years.
Okay. All right. So that's the comprehensive view on UPL. It's time to hit the rapid fire round, and this is, or is it? Do we take one more? Okay, it's rapid fire. All right, we've got 2 minutes where we throw as many questions as possible at you, Samir, and you, Vaishali, and hopefully we can take as many as we possibly can. So the first question is from Munir, who's writing in about Kalyan Jewelers, which he's bought at levels of 686. 81 shares, needs a short-term outlook. Would you hold or sell? Vaishali, on the charts?
Sell.
Sell. All right, next one is on Sona BLW. Would you recommend a buy at the current level? The current market price of 574 looks attractive to Harjeet from Mohali. Samir, would you buy?
Yes, buy.
Okay. Birla Soft. Somi wants to know what is the right entry price if you would suggest one. Vaishali, on the charts, is this something that you like?
Currently, yes.
Okay, it's a buy. KC International is the counter that we're talking about. I do not know the name of the. Kanan wants to know actually. Would you buy the stock at this current level? Vaishali?
Wait.
Wait. All right. Hold off. JSW Energy is the name of the counter. Soumya wants to know 654 is the buy price. Would you hold for the short term? Vaishali, on the charts?
Well, I would say yes. Hold.
Hold. Capital Small Finance Bank. Okay, I'm not going to take that one. I'm going to take the next one. Mazgon Dock Shipbuilders. Buy price is 2,390. We got Rajesh from Bengaluru wondering whether to hold or sell. Samir, on the fundamentals?
So on fundamentals, it will be a sell at the moment.
Sell at the moment. Okay. We've got one more. Ratan India Enterprises. Average price is 71.8. Niva from Chennai wants to know, would you hold or exit? Vaishali, on the technicals?
Oh, Ratan India, I think I'll just have a look 1 minute.
Ratan India, 61.57 is the current price. 71 is the buy price.
Hold.
Hold. Radhakrishnan from Madurai wants to know about Spandana Spurti. Would you buy at the current level and what stop loss would you give? Vaishali, on the charts?
Well, so it is make today's low as a stop loss. Well, it's quite a bit because it's already run up 14%.
Yeah.
So if that is what you can do, at least keep a stop loss of 420 and hold for a target, buy for a target of 500.
Got it. I threw quite a few curveballs at you. Thanks so much, Vaishali, for answering all of that. And Samir, as always, thank you so much for taking the time. That brings us to the end of this particular edition of Ask Profit. It's been an absolute pleasure bringing it to you, and we've discussed, I lost count at the end because of the rapid fire, but we discussed more than 30 stocks, and hopefully it's been beneficial. Do stay tuned, lots more coming up over the course of the day from Anushi and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. This is NDTV Profit.
On my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Hello and welcome. You're watching KYC, which is Know Your Company. It's a show where we're going to take you through today. The company is Tega Industries. Interesting one. Established in 1976, headquartered in Kolkata. It offers a wide range of abrasion and wear-resistant lining components made of rubber, polyurethane, as well as steel and ceramic components. So infra is essentially the play here. They have 10 manufacturing facilities, so quite a large setup in terms of their manufacturing as well. In terms of where they are on the market cap front, around 10,500 crores in terms of market cap, and trading at a price to earnings ratio of around 62 times. Domestic, smaller relatively, 25%. The geography mix more tilted towards international. 75% of their mix comes from international. So that's the setup on Tega. But you know, as we always do, let's quickly look at the factors which influence decision making of investors. And the first off we'll look at is income statement. Then we look at order book position for this one, more linked to infra. Balance sheet check. We'll also look at return ratios. Thereafter, we'll look at the cash flow, the shareholding, the street cred, and the street coverage, as we always do for most companies. So we'll be good breaking this down. Tega Industries have with me Anushi joining, who covers infrastructure quite extensively, and therefore we'll be good breaking this down. Anushi, let me allow you to start with the income statement and also the order book position for the company. Please give us perspective.
Right. So we spoke about Tega. One just quick point that I wanted to mention, that it is mainly into mineral processing, screening, grinding, and material handling business. That is, you spoke about the 10 manufacturing facilities. Now, if you look in terms of revenue, 3-year revenue CAGR has been on a strong footing, a 23% of a growth. That is what we are looking at. In fact, let's see the FY22 to 24 figures if we can. The revenue growth from 22, it was 18%, then 27% of growth in 23 and 24, 23% of growth that we are seeing now in FY24. Margins have more or less remained in the 21 to 22% of range, and the management has indicated that they continue to do so in FY25 as well. Net profit, which what stood at about 116.9 crore in FY22, is now standing at about 193.8 crore as of FY24. But let's get the first half perspective as well. The first quarter, we saw some large orders that had spilled over in the revenue of that, which led to a growth. But in Q2, there were some deferments and some delays, which resulted in a downtick. So overall H1 picture, if we look at, we saw about a 7% of a revenue growth and 693.3 crore as compared to 645.5 crore last year. Margin stood at 14.2%, so a considerable downtick from what we discussed in the FY21 to FY22 to 24 picture. This is in comparison with the H1 FY24 figure of 18.8%. Net profit saw about a 36% of a downtick. So this is the income statement check that we are seeing for the last 3 fiscals as well as the first half of this fiscal year. As far as where the order book positioning is, order book stood at about 605 crores. This is as of the September 24 picture that we are seeing. But we are not considering large term orders like the NMDC order. That is something that we have to take in account for. So yeah, so that is the overall order book and the income statement check that we have on the business.
Okay, so those are 2 factors that we've looked at. Let me move on to the third one, Anushi. Let's look at the balance sheet. Now, the balance sheet looks decent. You're looking at 1251 crores of equity plus reserves. You're looking at borrowings, which is a small fraction of that equity. You're seeing around 107 crore worth of borrowings on the balance sheet. The short-term borrowings are around 112 crore. The payables, which stood out for me because your short-term borrowings were 112 crore and your payables were 180 crore. And therefore I've highlighted that as well. So some of the short-term current assets current liabilities look slightly inflated in that sense, which is why I've highlighted it. Payables, 180 crore rupees worth of payables currently sitting, as I did mention. Now on the current assets side, important to analyze that as well, given that we've analyzed the current liabilities. We're looking at inventory of around 401 crore and cash balance, which also looks decent at 96 crore. So healthy overall in terms of its balance sheet. Borrowing is far and few. And of course, the segment that it operates also is niche. So difficult to compare this with other players in similar sectors. or in a very similar sector, and therefore going to be difficult to determine whether this is materially adverse. But at least right off the bat, when you're looking at some of those numbers, they don't look bad at all. Equity reserves of 1251 and borrowing of just about 100 crores. So definitely a healthy balance sheet. Let's also look at the return ratios we're working with. You're looking at the last year or so, return on capital employed of around 19%, and that's been the band in which they've worked with. Over the last 3 to 5 years also, they've been in the 17 to 19% kind of band where return on capital employed as well as return on equity is concerned, and therefore healthy return ratios. Anything in the late teens, definitely a positive where return ratios is concerned. But the other important metric to track is cash flow. And Anushi, why don't you break that for us?
Right. So we'll talk about cash flows from what has happened from FY 23-24 and as of September 24, what figures we are looking at. If you look at cash flows from operations, what stood at 178.5 crore at the end of FY 23, that moved to 252 crore as of FY 24 end, and now subsequently around 113.5 crore is the figure that we are looking at. So overall, a decent amount of net cash flows from the operating side, that is what you're looking at. But if you look at the net cash flows, do note that the company has taken and is also taking a lot of capex. This is for a lot of projects in consideration. This includes the Shile plant and the Dahej plant as well. So do take that into consideration as well. If you look at the net cash flows, that stood at about 7.74 crore as of FY23 end. Which increased to 46.2 crore as of FY24, and currently it stands at about 3.02 crore. That is the cash flow picture that we are building for the company. Dividend payout, if we are seeing the dividend yield, stood at about 0.1%, and payout was about 7% of the profit figure that we had. So this is the cash flow and the dividend picture that we are looking for the company. But let's also talk about the shareholding, Harsh.
Yeah, so interesting that you bring up shareholding, because it's a deeply concentrated shareholding where promoters are concerned. You're looking at 75% promoter ownership, and therefore very, very healthy in that sense. In terms of consistency of promoter ownership, and that's something you would always want to look for. It's fallen just a wee bit from 79% to 75%, and thereafter it's largely been between 74.5% to 75%. That's largely the promoter ownership. Where FIIs are concerned, they've sold a bit of the counter. They clocked a high in terms of their ownership in June 2023 of 2.5%. Currently sitting at 1.8% is the FII ownership. The DIIs also have not exactly sold, but have in fact gone ahead and bought this counter in a big fashion. 9% was the DII ownership in March of 2022, currently sitting at 19%. And it's a phased kind of increase in terms of their shareholding as well. So it's an interesting kind of chart in terms of the way shareholding has evolved. You're also looking at public, which holds now just about 4% of the company. The number of public shareholders have compressed quite dramatically. The total number of shareholders at the start of calendar year 22 was around 127,000 shareholders, which currently is just 53,000 shareholders. So the number of shareholders has come down quite dramatically. But your promoter ownership is healthy, Anushi, and that's one thing you want to look at. And the other thing is your DI ownership has gone up. So there's some bit of comfort where shareholding is concerned. So definitely a thumbs up on this count.
That was quite interesting that you've laid it out as far as where the DII and the promoter holding goes and how the public has played into the picture. But let's also talk about how it has performed on the street. Now, in the last 6 months or so, we have seen a bit of a downtick as far as where the stock performance goes, 8% of a downtick. But the long-term picture, if we see, it has remained on the healthier side. 36% is what their one-year share price return was. And if you take the 3-year stock CAGR, that stands at about 39%. So a healthy growth in terms of where it has been doing for a long-term perspective side. That is reflected by the kind of fundamentals that we had discussed earlier on the income statement and the balance sheet check that we had done. So yeah, that is the street cred on how it fares. So this one is a thumbs up.
Right. So street coverage now, because that's important, because when you're looking at governance, typically the number of analysts which cover a stock will tend to give you more comfort that it's a well-governed company. Here there are 5 analysts covering the stock, so reasonably less in terms of the number, but 80% have a buy call, and there is 29% upside with regard to where the upside is concerned. So one is, analysts are constructive overall with regard to the company. They're positive on the company, but just about 5 analysts covering the stock, and therefore we've given it a bit of a neutral rating here, because the breadth in terms of the number of analysts covering the stock is very, very low. But in that sense, there's also some bit of positive bias with regard to the fact that 80% have a buy call, which is 4 out of 5 analysts, and there's a 29% upside to it. But more importantly, FY25, what's the outlook that they've given for FY25 and beyond? Anushi.
Right. So we spoke about the FY22, 23 and 24 picture, and we saw more or less about, if we go back and check the figures, we saw about 27 to 23% of a growth in the last 2 fiscals predominantly. The management for the FY25 scenario, they have built in a revenue target growth of around 15% for this year. Now do note that in the H1, they had clocked in about 7% growth. This was in Q2, there was some deferments and delays in orders that we should definitely be addressing. So revenue growth stands at about 15%. EBITDA margins, if we see in the blended range, that will remain in the 20 to 21% as before that the company has been posting about. What we should be understanding is on the outlook on the certain delays in shipments and deferment of orders that took place in Q2. If there is an improvement from this level from the next half onwards, what is the scenario that we should be building up for that? And EBITDA margins last quarter had taken a hit. This was due to a contract accounting related change which led to a one-time expense of around 17 to 20 crore. So margins would also be something that we should be focusing on. But what is interesting is the project updates that we have. The Tega McNally integration is on track. How that would fare for the equipment business growth for the future, that is something we should be watching out for. Construction of the Shile project has commenced. The commercialization target in Q1 or Q2 of FY26 is something we should be watching out for. The capex drive for the same is in the range of $35 to $40 million. This is including the Shile and the Dahej plant. So a lot of factors in consideration. Huge road for capex as far as where the Shile project is and how this would lead to incremental revenues for the business.
Right, let's, so interesting, and we'll try to cover some of those in our conversation as well. But let's quickly pull up the assessment of all the factors that we've already looked at. Income statement, check, definitely positive. Growth has been very strong. Order book position slightly muted in that sense. Balance sheet check, very, very solid in terms of how the balance sheet is lining up. Return ratios are well in the late teens and therefore positive. Cash flow is a neutral. Would want to see some bit of growth on that count. Shareholding is a positive. Street cred is a positive. And street coverage is again a neutral because of just not enough breadth available in terms of that street coverage. So it's a 6 on 8, a healthy one in that sense for Tega Industries. But let's try and break this down, get more perspective. Let me welcome on board the management, Mehul Mohanka, who is the Managing Director and Group CEO at Tega Industries, to talk to us about how the company is expected to fare going forward. Welcome, Mr. Mohanka. First off, I want to understand how business environment is evolving. What's the kind of growth clip you're targeting, just for perspective of viewers? What's the kind of confidence you have to meet those targets?
Morning. Thank you for having me on the show.
Good morning.
From our perspective, as you know, that our business is in the critical to operate consumables business in mineral processing. So for us, we're quite delinked from where the commodity prices are at any given time. And our mainstay ores are copper and gold. So those still remain quite healthy in terms of pricing, if you look at, and the growth vis-a-vis FY24 over 25 in terms of prices of the commodities. So we still stay bullish in terms of our growth prospects. And as we had mentioned in our previous earnings calls as well, at the end of the second quarter, that we maintain our predictions of a 15% growth over the previous year for this year as well.
Hi, Mr. Moinga. This is Anushi joining in. You've talked about maintaining a 15% of a revenue target for this year. Want to understand, this is the FY25 picture that we are seeing, but from FY26, the Chile plant commercialization will begin. Expect incremental revenues from there on. So for the next 2 to 3 years, if you want to build perspective on what is the kind of growth that we can expect, because we are looking at incremental revenues at the size of 800 crore, if I'm not mistaken, as per our last conversation. Can you indicate the revenue growth from these levels from the FY24 picture, if you can see for the next 2 to 3 years?
Yeah, so the Chile plant will take about 2 to 3 years to completely ramp up. It's not that we're going to be at 800 crores incremental revenue from year one. So that's the installed capacity of the plant, and it will take us about at least 8 to 10 quarters to be able to get there from the time we commence commercial production, which will be around FY26.
Okay, so in terms of how much of that will come on stream in FY26 versus FY27, what's the sense like?
So we would expect anywhere close to about 40 to 50% of that coming on stream in FY26 and the balance in the subsequent years.
Okay, so that is the outlook for the growth perspective from the Chile plant that we are looking at. Now, Mr. Moinka, I want to break up the H1 performance and the H2 performance that can be anticipated. Now, in H1, the first quarter, we saw some strong set of numbers in terms of revenue. There was some spillover, while in H2, there was some delays in terms of where the ordering and the shipping related challenges were there. How is H2 building like? Are we seeing some bit of improvement from these levels? What would be the margin scenario? Because in the second quarter, we did see about a one-time expense also impacting the margins that were there. So 20 to 21% is the range that we should be looking for FY25?
Absolutely, as I mentioned earlier as well. So we're maintaining our growth estimates as well as our margin estimates. So EBITDA would be at north of 20%, and we've always guided the markets accordingly. So the one-off adjustments have already taken place in Q2, as we mentioned earlier. And while there continues to be some delays on shipments, but they're on track as far as our growth estimates and guidance is concerned.
Okay. So would it be fair to say that FY27 will see maybe 400 to 500 crore rupees of incremental revenue over FY24? And thereafter, the full 800 crore ramp up will happen. And across the board, you'll maintain 20% plus margins. Is that the right way to look at the next 2 to 3 years in terms of just trying to sum everything together?
Absolutely. And also to further mention that we do have also some incremental capacity expansion happening in our plants in India as well. So that will also play out by FY27.
And how much would that contribute to top line, Mr. Mohanka?
So it's a small capex that we're doing in India, and that should bring in about another 200 odd crores of incremental revenue growth for us.
Okay. And with regard to all the capex that you're doing, all of that is internally funded, because I don't see much on the borrowing side. You seem to have a decently clean balance sheet in that sense.
Yeah, so we are a cash surplus company, so we have very low leverage, as you've seen on our balance sheet, and we've got to continue to maintain a healthy mix of debt and equity. So most of it will be funded through internal accruals, and we will also look at some debt options from a tax gain perspective.
Fair point. And does this therefore mean that your cash flow, which you're going to be using to fund fresh capex, how much of that capex is expected over the next 2 years? Because you seem to have front-loaded a large part of the capex over the last couple of years.
So our total outlay over the next 2 years will be close to about $40 million, basically over Chile, India expansion, and some maintenance capex. So our maintenance capex tends to be about anywhere between $4 to $6 million a year. And the balance of that would be on capacity expansion in Chile and India.
And that should leave you with a considerable amount of free cash flow as well. In your books, what do you do with that cash?
So we're going to use the cash mainly for further expansions. I mean, this is not the end of the road for us from a capacity perspective. So we do expect the market to continue to grow, and we also look at other opportunities from an inorganic perspective as well. So this big a great war chest for us for future or inorganic plays as well.
Okay.
And anything above and over that stays, we'd be happy to give it out as dividend to our shareholders.
So that is as far as where the capex and the cash flow pictures goes for the business. Now I want to come to your order book. Your current order book stands at about 605 crore. This is as of the September figure that we are looking at. From here on, what is the kind of picture that you build for the order inflows expected over the next 2 to 3 years? If you can get a sense on the total order book, and what is usually the execution timeline? This is excluding the NMDC order that I'm talking about. So if you can give a sense on the NMDC order as well as the current order book that you have.
So as of September end, as you rightly mentioned, it's about 605 crores. This is over and above the project orders. So we haven't accounted for that in the 605. Our normal execution time for non-project orders is about 3 to 4 months. So that's the order to cash cycle for us. And from a quarter to quarter perspective, maintaining a 15% growth, if you do the math, we would expect a good order book of about 700 to 800 crores per quarter at any given time.
Okay, so that's on the perspective of order book. Now I want to understand more on the segment performance. Also, you have divided your business in the in the two verticals that you have, which is the consumables and the equipment business. Now, equipment business, the Nelly integration is on, Tega Mech Nelly integration is on track. I want to understand the future prospects of that one. How do you plan to lever that for the business going forward? What is the kind of mix that we should be looking forward, as right now the consumable side is the dominant one? So can you give us more perspective on the equipment side of the business as well?
Yeah, so consumables for us is dominant from a size perspective, but we see and anticipate that over the next few years, the equipment business will always also have, from an absolute perspective, a dominating position as well in terms of our total revenue mix. So our equipment business is also expected to grow at a CAGR about 15%, 15 to 20% going forward. McNally's been a one-year-old vintage for us as of now, and we are still busy trying to integrate the business. It's progressing well for us, and it's going to be our future growth bet going forward. So the equipment business for us is a backward integration, and it helps aid the consumables business as well. So from a strategic perspective, we are very, very bullish about how the equipment business will play out in terms of our growth story going forward.
So will that lead to any sort of EBITDA margin expansion also? Because last time you had indicated that there's some 200 to 300 basis point of an improvement that we can look from that side of business also. So the 20 to 21% of the margin picture that you have for FY25 from 26-27, if you want to see, what is the kind of uptick that we can expect?
So the equipment business and the consumables business will always have different margin profiles, So the equipment business, which is more capex oriented, will be at an EBITDA margin of anywhere between 13 to 14%, while the consumables business is always going to be around 22 to 23%. So that's the difference in the margin profile. So in absolute terms, I would say over a period of time, the EBITDA contribution would be a higher number from the equipment business, but from a percentage perspective, it will always be more muted compared to the consumables business.
Mr. Mohanka, for our better understanding of your business, talk to us about what your clients are like. How do demand cycles work for you? And what are the risks like in terms of demand? Because currently you're anticipating, or at least it seems like demand is strong. How does one judge a cycle in your line of business?
So all our customers are major mining companies across the world, globally. So as you know, 85% of our revenues are generated outside of the country. And these are mining majors such as BHP Billiton, Anglo, Barrick, Newmont, Vedanta, and the others. So any major mining company, junior mining, mid-range mining companies, and large mining companies would be our customers. And it would all depend on the output or the tonnages that these mines are processing on a yearly basis. And as I mentioned, these are critical to operate products that we manufacture. Those mines cannot operate, or they cannot extract the metal from the ore without products that we manufacture.
Right, so absolutely critical. And my guess is it's commodity linked. Is that the right way to look at this?
Not at all. Like I said, as long as the mine's operating, they need our
Fair.
product. So it's not really linked to the commodity price.
Fair. Okay. Mr. Mohanka, I'm going to have to let you go on that note. Thank you so much for all of that perspective that you've given us today. Thanks for coming in and speaking with us.
My pleasure. Thank you so much for having me on the show.
Right. So that was the management of Tega. We've spoken about Tega. I think we've broken it down, and hopefully this was valuable to you. But from Anushi, myself, everyone who puts the show together, thanks so much for watching. This was KYC, and we focused in on Tega. But with that, out of time on this edition of the show. Stay tuned to NDTV Profit. More action on the other side.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Hello and welcome to Markets at 12. I am Puneet Zaveri. Let's look at a very quick market check of some of the key stocks as well as the indices that are doing very well in trade today. Let's pull up the Nifty 50 first. We're seeing some pressure from the start of the day on the stock. It's down 163 points. The index as a whole trading currently at 23,545. Let's also look at some of the key other indices such as the mid cap 150 and the small cap 250 as well. We want to see the similar trend to what's happening in the Nifty 50 as well, while the small cap is also under pressure. So across indices and the broader markets as well, we are seeing some pressure in trade today. Let's quickly pull up the advance and decline ratio as well, see what is the key difference. And there you go, a very, very steep decline, and it's, while there was a little bit of recovery in the middle, it's continued to be a negative trend during the whole day as well. But there are a lot of stocks that are moving in trade today as well. Let's pull up the BSC 500 index, advances and declines. And while this is, of course, the Nifty contribution, we are seeing a bunch of stocks, specifically the banking space, something from Infi as well. The company is expected to report results over the next week as well. While some players like, M&M as well as Reliance are seeing some positive. Reliance, of course, having a bunch of brokerages come out with positive notes as well on the company. Let's also just quickly pull up the contributions of the Nifty 500 as well to look at the key winners as well as losers in trade today. We are seeing MMTC being one of the biggest winners. And what's interesting is that, stocks like Credit Access Grameen seeing very big, it had a very disastrous Q2 as well. But Credit Access Grameen seeing very big moves in trade today. We also see a lot of positive moves on something like a Spandana Spurti as well. That's almost up 14% at an intraday high today. But on the losing side, we are seeing some pressure on stocks like Dixon Technology. We also had Amber also that's trading down almost 5% in trade today. Paytm seeing some pressure as well. Symphony being another one. Let's also quickly pull up, Spandana Spurti as well, which I was talking about. Credit Access up 9% in trade today. Spandana is another one, almost up 15% now in trade today. The other one's also Fusion Microfinance. So all these smaller NBFC names are gaining a lot of traction in the market today. There you go, another 7.2% up in trade today. Let's also just quickly check what's happening with Airtel as well, because we saw HSBC coming out with a brokerage note. They have a target price of 1,920 rupees per share. Seeing some pressure today in trade as well. The other one's Ashiana Housing that I just wanted to address as well. It was one of the biggest gainers. It had a very big update coming for this particular quarter. Value of area sold is at 454 crores versus almost 173 crores in the same quarter last year. So another 6% move for the company. And just finally on car trade as well, another stock that was boosted up by the brokerages as well. We had BNK initiating coverage on the stock. While it is certainly down from the day's high of about 1629 rupees per share, seeing some positive trend as well. But let's also move on with the show and look at what are the other stocks that are buzzing in trade today. The first one's Ola Electric. The company has received, a SEBI warning over disclosure violation, and the regulators pulled up the EV maker for announcing expansion plans on social media first and not the exchanges. Tushar joins in with more details on this.
Good afternoon, Puneet. So exactly what has happened was on 2nd December at about 9:58 a.m., Ola's Electric's founder Bhavish Agrawal put out a message on X, formerly Twitter, about the expansion plans of the company to grow the number of stores by fourfold by December 20th. But the stock exchanges were informed about 4 hours later in the afternoon. That has not gone down well with SEBI. The market regulator actually said that this is in violation of the listing and disclosure norms that the market regulator has. Remember, Ola Electric listed only earlier this year in July, and it's only been a few months since it has become a listed stock. But again, these are the certain criteria that every listed company has to follow in India. So that's something maybe the company has to learn. In a related development, Ola Electric has received relief of sorts from the Karnataka High Court about sourcing of the document that the CCPA had asked from the company. Now Ola Electric has received about 6 more weeks to give these documents to the CCPA as per the Karnataka High Court. So a good news and a bad news, but we see that the stock is reacting much more to the bad news relating to the company. Puneet.
Well, thanks for that, Tushar. But let's also pull up the 6-month chart of Ola Electric. It looks like very close to its issue price as we show it on the screen, around 76, but it's fallen from its highs of about 157 rupees per share that it hit a couple of months ago. So from there, it has seen a sharp reaction as well. There you go. In the last 3 months as well, the stock has been under pressure ever since its listing on August 9th. The other aspect of Ola Electric is that it's also lost a lot of market share in terms of the electric scooter segment. It's become the number 3 player. In the December sales. Bajaj has taken over as the first position, with TVS retaining the second position at around 23% market share. Ola has fallen to 18% market share. The stock has definitely seen a lot of pressure. But let's stick to the auto theme and look at another stock that's buzzing as well as Maruti Suzuki. Now the company has unveiled, it's set to unveil its made in India for the world electric born SUV. Which is the e-Vitara at the Bharat Global Mobility Show. Now, what's interesting is that, the company has, of course, made its EV foray. They had, showcased the SUV in Italy at the Milan Auto Show. But with this update, the company has also mentioned that they're taking a comprehensive approach to EVs. Why is that? Because the company not only believes in manufacturing an electric vehicle, but also creating an ecosystem around the same. And that's why it's one of the key things to look out for, because they've taken the time to enter the particular segment. While players like Tata Motors, Mahindra now has entered the same, and MG has taken quite a strong foray as well. What the other interesting part is that, the company is also expected to mass produce this from the spring of 2025. So expecting in the next 2 quarters for the production to start of the same. While this, of course, the platform is developed by Suzuki along with Toyota and Daihatsu Motors, all 3 Japanese car makers as well. It would be, of course, competing with the likes of Tata Curve and Mahindra. That's something to watch out for as well. But overall, we are seeing the company, the stock is, of course, buzzing, and we will be seeing the launch of the same at the Bharat Mobility Show as well. Another key aspect was the December sales for the company as well, because we did see a lot of positive momentum coming in at roughly about 1.78 lakh units that the company sold. And that's one of the key positives as well. So watch out for this stock in trade today as well. But, moving on, again, looking at the auto theme as well, because we had a very big brokerage note. Jefferies is bullish on the auto space and has retained buy on several stocks. Anushi joins us with more on the same. Anushi.
Hey Puneet, so a lot of names and focus, so as what Jeffries has pointed out, firstly we are looking at M&M. They've retained the buy call on this one with a target price of 4,075. This is as compared to the 3,700 target earlier, so 28% of an upside is what we are looking at. Even iSure target price revised to 6,600 versus 5,500 earlier, so 20% of an upside there as well. The cuts are the significant ones. Firstly, on Hero, while they do have a buy call rating, the target price has been now moved down to 4,900 compared to the 5,500 mark that they had earlier set on, which implies an upside of about 15%. And for Bajaj also, they've lowered the target price to 10,350, a significant cut in this target price as compared to the 13,400 mark earlier, which again is a 15% of an upside. What they've said in their note is that they reiterate their preference for the two-wheelers and the tractors in the Indian auto space, and expect two-wheelers and tractor volumes to grow at a pace of 13 to 15% of a CAGR, which will outpace the 5 to 8% of growth that is pegged in for the passenger vehicles and the truck segment. M&M continues to gain market share across tractors, cars and light commercial vehicles, and TVS has also gained market share in both the domestic and the export side. So M&M, iSure and TVS remain as the preferred buys for the company, and Jeffries has is seeing about FY26 to 27 EPS at 3 to 14% above what the street expectation is. So this is the overall expectations that they see for the Indian auto side for the business.
Well, thanks for that, Dhanushi. Let me just pull up the chart of Eicher Motors. The last 3 months has been very stupendous for the company ever since its quarter two listing, since quarter two results as well. We did see the first half of the company, but let's also pull up the 3-month chart as well, because that's where we'll see the stark positive reaction. There you go. Ever since the listing of the company, it has the Q2 results of the company, pardon me, has been very positive on the stock. They have, of course, enhanced their strategy to focus more on sales going forward rather than looking at the EBITDA margin. That's been one of the key changes for the company. Let's also just pull up Hero's 3 and 6 month chart as well, because Hero, on the other hand, while it's the cheapest stock in the auto space, trading at just about 16 times price to earnings for FY26, the last 6 months of the company hasn't been very strong. They are looking to enter the electric vehicle segment in a much better way. But you can see the negativity on the stock post this correction that we've seen across all two makers starting October as well. And that similar trend has been visible in Bajaj Auto as well. And Anushi did cover that the stock price target has been reduced by something like a Jeffries on the same. But let's shift focus to other segments as well, because the Commerce Ministry is expected to pitch its recommendations to the Finance Minister very soon, with a focus on enhancing the EV sector. My colleague Rishabh joins us with more details.
What we're hearing from sources in the Commerce Ministry is that there is a belief that domestic capacity and consumption with respect to EVs is ready to take off, but what needs to still be developed are the export capacities, and all the components around the EV ecosystem as well need to be addressed. Apart from that, there are still apprehensions regarding affordability and efficiency of EV batteries as well as the vehicles themselves. So these are some of the key focus areas that the Commerce Ministry is pushing for to sort of remedy in the upcoming budget. Now, what we're hearing, what some of the key sort of demands of the EV industry have been in the run-up to the budget is the demand of giving the EV sector the infrastructure status. What that means is that the government will deem the EV sector as crucial to the economy, and that would translate to certain tax incentives and certain other manufacturing incentives. Another key demand of the sector has been to bring electric vehicles as well as the charging points under the priority sector lending framework. So that would also give them better access and easier access to capital. Again, all of this comes even as the Commerce Minister Piyush Goyal last week had stated that the EV industry no longer really needs incentives or subsidies. So what we can expect from the budget might not be a direct monetary sort of a stimulus for the sector, but certain little tweaks and certain inclusions in other schemes that would help get a boost for this sector.
Well, thanks for that, Rishabh. Very well summed up. And that's essential because the new PM e-Drive scheme is also seeing lower subsidies for across the sector, and that's expected to be in the electric two-wheeler segment that we are seeing some incentives. That is also expected to reduce by 50% going forward as well. But overall, we are seeing that the companies have pitched in for a better EV infrastructure. And as my colleague Rishabh highlighted, these are some of the key moves as well. But sticking with the theme of autos, Mahindra & Mahindra is upbeat about its new electric vehicles, the BE6 as well as the XEV9e. Now, the company has announced prices for the top variants of both these models. They are priced on the premium side with the BE6 top variant close to about 27 lakh rupees, and the XEV9e top variant, it's almost at 30.5 lakhs. Anirban Mitra caught up with Vijay Ram Nakhra of M&M and found out the rationale behind the higher pricing. The company is also, of course, also offering attractive EMI options for the new cars, but listen to a chunk of this conversation.
You know, as you rightly mentioned when you started, that 26th, 27th of November, when we brought these two products to market and we launched these two next Indian icons, in the last 45-50 days, the kind of response we've seen, whether it is from the journalist fraternity, whether it is from the heroes from different walks of life, the who's who, and the customers at large. By and large, what we've picked up, and on top of that, you know, there has been this whole movement towards premiumization and sophistication where customers want the best today. So as we took all of this input in, we just thought what made sense was to go to the market with what we call the Pack 3, which is the top variants, which are fully loaded in terms of feature 1. 2, it comes with a larger battery pack of 79 kilowatts, so that addresses one of the biggest barriers in the category, which is range anxiety. So the objective was democratize technology, remove range anxiety, and that's what drove our strategy to say that we want to take the top end variant to market. Now, as we did that, we also were mindful to say if we want to democratize this and get maximum customers to own it, then we need to make it affordable even in terms of purchase, and hence the pricing. And number 2, equally important, when 85-90% of vehicles today are bought on finance, what we ensured is we came up with a fantastic finance package offering from Mahindra Finance that allows the customer to buy these products, the Pack 3, at the same EMI as you would pay to buy the entry-level Pack 1. So you get the high-end product with all the features, the best range, but at a very affordable EMI, which you would pay for Pack 1. That has been our objective, to bring Pack 3 to market to begin with. And then, as we will open bookings, we start test drives for the Pack 3 starting from 14th of January in the top 6 cities. We add another 15 cities on 24th of Jan, Pan-India 7th of February, and we open bookings on 14th of Feb. And in March, we will put out the schedule for the remaining variants which we will bring to market. And when we do that, the pricing that we had announced in Chennai for Pack 1, those prices will hold when we open those bookings.
Now, at the outset, the buzz is really strong. The pricing is too promising, to say the least. But overall, how do you see the market shaping up in terms of response? Do you have any customer interest numbers that we can put forward to the audience?
I think it's a little early for us to put numbers out there. But like I said, if I just look at the last 40-45 days, a good gauge of interest is conversations that happen. And I gave you the anecdotes of the kind of conversations where people from all walks of life have spoken about how an Indian multinational automobile company has created global beaters. The pride that comes with what we have done in terms of talking about Unlimit India through these two iconic brands that we are launching. That's the qualitative side. And even if I look at quantitative, I think the day we webcasted our launch at Chennai, we broke all records on X, erstwhile Twitter, in terms of concurrent viewing of the launch video. And in terms of the digital assets that have gone viral and the viewership that we've seen, I mean, the numbers are very, very encouraging, and I think there are new records that we've created where the digital assets have got video views of 1.4 billion views of the digital assets that are out there. So these are all very positive indications where there is pride, there is excitement, and I think as we take these products out to market now for test drives, we'll be very happy to see all of this culminate finally into what happens on ground.
Now, these numbers surely define the kind of stronghold Mahindra has on the audience hearts and obviously the charts. Talking more into the future of these products, when do we really see them on road? And by that I mean, when do you plan to start the deliveries?
So we start deliveries of these products in March, and we will start, as I said, with the booking of Pack 3, 14th of February. Deliveries will start in early March for the Pack 3.
And a little bit about the projection, because these are really promising aspirational products, but still the price is on the premium side. From Mahindra's end, how much do you plan to sell this?
Well, let's put it this way, with what we are trying to achieve through democratization of technology, take care of range anxiety, move the ownership to say EVs are bought on total cost of ownership, largely a second vehicle or a third vehicle in the family to primary ownership. The task that we are setting for ourselves through the strategy is we would want to achieve a volume of 5,000 vehicles per month in the initial phase of launch.
Definitely, we are also very hopeful. We saw ingenious technology coming into play, the InGlow platform itself. It's modular, but just out of curiosity, do we see smaller cars based on these platforms as well?
Well, I think we had put out a roadmap on InGlow with our first 4 products. We've launched 2 today, and we are true to what we said, what we will launch. So for now, we will talk about, we will stay in the realm of what we've said we will bring to market.
So those +2 products, are we seeing that at the mobility show?
I think we've just launched these products. We would want these to settle in, and we'll talk about those at an appropriate time.
Definitely. Talking about the entire market 2024, how is it for Mahindra and Mahindra going forward in 2025? Where do you see the direction for the market?
Well, I think it's been a great year for us. We've gained market share. We are volume market share, in revenue market share. We are market leaders in the SUV segment. We've had some excellent successful launches in the year. We had 3XO. We launched the Thar Rocks. We had the resurgence in our 700 as a brand. The demand on Scorpio N and Scorpio Classic continued to be strong. So it's been a great year for us in terms of calendar year 2024. Of course, there have been certain headwinds that we had seen through the year, especially in terms of rural demand. But I think a lot of that has kind of eased out and has started moving in place. But having said that, I think our outlook for the year is, as far as our business and our portfolio of products is concerned, demand continues to be strong, and we are bullish about as we get into calendar year 2025 or the quarter 4 of this financial year.
A little bit on the electric mobility, how do you see the entire market shaping up? Is there a bit of slowdown? What is your perspective?
No, I think it wouldn't be fair to say there is a slowdown. I think what's fair to say is that the kind of launches that we had seen so far in the electric passenger vehicle space were largely driven by ICE vehicles which were EV adapted, right? So basically the customer gets the same design, same product, same features at a delta higher price. Now, with some of the recent launches from some of our competitors, our attempt in terms of what we have now done by bringing these products, you can already start seeing the numbers in terms of the newer vehicles, the demand moving towards the electric origin SUV. So I think a lot of growth in a category is driven by how new products shape it. So we are pretty bullish that with these 2 launches that we bring in, we will further add spurt to the segment and category. There are many more new launches that are scheduled by many other automobile players, and we welcome that We welcome that competition into the category because the category right now needs players to come in with really cutting edge technology and new products. That's when the category takes off, and then everybody benefits from that.
Before I let you go, my question would surely be around the Thar Rocks. Almost half a year for the product in the market. What has been the response like? What is the status on the deliveries front?
I would want to keep this conversation today to electric origin SUVs, and we can talk about that some other time, but demand continues to be extremely strong, and we are doing everything that we need to reduce the waiting period on that.
Well, that's Mahindra and Mahindra talking to us exclusively at the launch. What's key is that the graphic that we saw, 92% return that the company has given in the past year, while all other passenger vehicle makers, Maruti, Suzuki, Hyundai, Tata Motors have been suffering. So if you can pull up the 12-month chart for these three car makers, we do see the sharp traction and the difference between both all these companies and Mahindra, led by the new launches, as Mr. Nakra also highlighted to our colleague. And we can see that about 18% has also recovered in the past month, led by the strong sales growth in December. Let's also pull up Hyundai India recent listing, of course. 1 month chart, of course, tells, and let's also pull up Tata Motors, because there we'll see that kind of pressure on the stock price as well over the last 3 and 6 months. From highs of about July of 2024, the stock has corrected almost 25%. And the 12-month chart was almost flat, but from a highs, it has fallen quite a bit. But that's all the time we have on this show. Stay tuned to NDTV Profit for more, and thank you so much for joining in.
This isn't on my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hiral Datia and with me is Rucha Somaya. Rucha, good afternoon. Clearly, if you see in terms of markets in today's session, there is profit booking that is creeping in. The key sector that we've been watching out for is with regards to IT, because TCS earnings kickstart tomorrow, and that's why we had seen cuts in yesterday's session as well. But you have Nifty 50, which is at the day's lowest levels. Nifty IT seeing cuts of almost 1% coming in there. Let's also pull up the heat map with regards to what's happening across sectors and which are the sectors that are losing out and which is holding on. There you go. Sea of red across. You just have the oil and gas index, which is trading in the positive with gains of almost 1% coming in there. But apart from that, all of them, from auto to energy to IT, real estate, banks, PSUs, real estate, all of them that have been trading under pressure. Overall, in terms of key things, in terms of the Bank Nifty as well, let's just pull up that one on the screens and see what Bank Nifty is doing and the PSU Bank Index. There you go. Underperformance coming in on that front as well. In terms of the Sensex, almost a 500 to 600 point kind of a cut is what we've seen. And the broader markets are also seeing deeper cuts. In fact, there is higher underperformance coming in from the broader markets, which Rucha will take you through as well. But in terms of stock-specific action, let's just pull up the gainers. ONGC, the top gainer today. In fact, brokerages have absolutely been positive. In fact, a lot of analysts that we've been speaking to as well have been positive on ONGC from the pack, and that stock is up in trade. Dr. Reddy's is also seeing some smart moves. Reliance Industries, BPCL as well as Maruti are the top gainers, whereas Shriram Finance is a downer, 3.5% downtick coming in there. Trent and Titan, both Tata Group companies taking a beating today. Apollo Hospitals is trading under pressure, and Adani Ports as well is seeing some bit of profit booking up. But clearly, across the sea, we're seeing red. It's clearly red on the sea, and it's the broader markets where there is higher underperformance.
Yeah, that's right, Hiral. Let's look at the Nifty Midcap 150 index, down by about 2%. Yeah, there you go. Even the small cap index is down about 2%. Compared to Nifty 50 though, it is actually doing worse than the benchmark indices. Let's look at the constituents of the Midcap 150. Down in the red, we have Kalyan Jewellers, the top losing name, down 8% in just about a day now. Remember that Citi came out with a note wherein it has maintained buy rating on Kalyan Jewellers with target price implying around 9% upside, but still the stock is tanking. Followed by Dixon, Tech, Paytm, almost down by about 6 to 7%. So huge heavy downside is what we can see over here. But on the gaining side, we have Z Entertainment up by about 3.5%. We have Global Health, Endurance, which is up about 2%. But let's also have a quick look at the small cap names. Down in the red, we have likes of KSA International, Intellect Design. Remember that Intellect Design was actually a gaining stock yesterday, but profit booking is what we could see over here. Affle, so largely the mid cap IT and new names is what we could see over here. But on the supporting side, we have Credit Access Grameen up about 9%. Ujjivan also up about 3%. So yes, mid caps and small caps are down in trade even more than the benchmark indices.
And then clearly, when you mentioned about G1 as well, from the likes of Fusion, Spandana, Spurti, all of these companies which are heavy in terms of microfinance lending are the ones which are seeing some smart moves in today's session. So is there something brewing with regards to where the entire microfinance theme goes? That's something which we need to look at in the next couple of days as well. But overall, let's quickly look at the key themes. The first one, 2024 has been a year of IPOs. Will 2025 see the same enthusiasm? Pranav Haldia will be joining us to discuss the same.
On the second theme, we have business updates of Shobha and the Signature Global. We have Ashiana Housing as well, gaining in trade. But yeah, that is what we'll have a quick highlight on.
And you have IT that will be kicking off the earnings season with TCS tomorrow. What is on the cards, taking into consideration what's come out with an Accenture commentary? We will look at that as well.
We'll also focus on the auto sector, electric mobility, Maruti's EV foray, Ola Electric on SEBI's radar, and other EV sectors' budget wish list.
And you have a Bernstein which is positive on HDFC Bank and Paytm. And what's on the cards for BFSI in the offing? Let's look at that.
We'll also have a quick look at the FMCG sector where Zomato relaunches quick food delivery operations.
And clearly you have a Swiggy that has been trading under pressure as well on the back of Zomato coming out with their quick service offering. But let's first look at the IPOs. India has actually emerged as the leader in IPO volumes in 2024, and they've raised twice as many IPOs compared to the US and 2.5 times versus Europe. What does this actually mean for India's IPO market in 2025? To understand this, we are joined by Pranav Haldia, MD at Prime Database Group. Pranav, firstly, Happy New Year and good afternoon, and great to speak to you.
Wish you a very Happy New Year as well. Thank you for having me.
Pranav, my first question coming to you is taking 2025 into consideration and the data that we've seen with regards to 2024. What is the expectation? Because almost, if I'm not mistaken, 143 DRHPs that have been already filed 2024, that translating into listings in 2025, how is that expected to pan out?
Well, of course, like you mentioned, 2024 was an absolutely a stellar year as far as the IPO market is concerned. You had 91 main board IPOs, which is the highest since 2007, which is nearly 20 years back, and 1.6 lakh crores was raised in calendar year 2024, which is the highest ever. What you saw was an amazing, confluence of both demand and supply. On the demand side, whether from domestic institutional investors or from individual investors, retail HNI investors in India. And of course, on the supply side, you've seen a slew of companies from across different sectors coming to the IPO market, and tremendous amount of activity which is taking place. Even in terms of the offer documents that you just mentioned, I think in 2024, you had a staggering 172 companies filing their offer document, which is highest by far, and many more on the way. So if you just speak of the pipeline as we stand today, there are 28 companies which are looking to raise 46,000 crores, which are already holding SEBI approval. Among these are names such as NSDL, Avant, Ather, Leela Hotels. Uh, Apart from this, there are another 79 companies which are looking to raise 1.3 lakh crores, which are waiting for SEBI approval. So just combining these two gives us a total figure of about 1.8, 1.9 lakh crores. And this, of course, we are not even including companies which would be, filing in the next few weeks and months. Some of which, which are already publicly known. Reliance Jio is one which comes, to top of my mind, given the sheer size of that IPO. Flipkart, NSE, Zepto, Tata Capital. So, I think 2025 looks like a stellar year for IPOs. We have to remember that primary market is essentially a function of the secondary market. And you had a broadly bullish sentiment in the secondary market through most of 2024. Hopefully, that should continue into 2025 as well. And if that is the case, we will see a lot of activity in the IPO market as well.
Okay, thanks Pranav. This is Rucha joining in. Definitely 2025 will be a stellar year for IPOs. But I just want to ask you about the valuations aspect. Well, these new upcoming companies, since they do not have a benchmark to be compared to, say, for example, when Zomato came in 2-3 years back, it didn't have a specific business wherein, the valuations could be compared to. So how do you look at the valuations picture in India, especially when most of the people are talking about very expensive stocks and expensive IPOs as well?
Well, valuations, whether in the IPO market or in the secondary market in India, continue to be on the expensive side. Just considering the sheer amount of growth which is there in the future. With regards to valuations in particular, like you mentioned, there are a few new age companies which may not have listed peers, but a majority of the companies that do come to the IPO market would have already listed companies in the secondary market, which can offer a good benchmark in terms of valuation. Apart from that, individual investors, should specifically look at how institutions are participating in any particular issue to get a broader sense of the valuation. Like I always keep on saying that a retail individual investor, if for company X, which is coming out with an IPO, if the price band is 100 rupees or 100 to 105 or 1000 to 1100, he has no idea if that valuation is expensive or poor. So in that case, it is always a good strategy for him to follow institutional investors and see how they are participating. One more point about the valuations. A lot is said in terms of a lot of IPOs being very expensive, and a lot of comparisons are made with how those IPOs have performed over the next 1 month, 3 months, 6 months, a year down the line. I feel some of those studies or comparisons are unfair. I think to get a sense of whether an IPO was correctly priced or slightly more expensively priced or lower priced, at the maximum one can look at the listing day performance, which is look at the issue price and look at the closing price on listing day, because on the listing day the issue becomes broadly available. to all kinds of investors, individual investors, institutional investors, domestic, foreign,
But Pranav,
short, long.
Pranav, I
And
would
you
want
get
to interrupt over here. I would want to interrupt over here. I agree with what you're saying, but the key over here, what happens is you have to really wait for the listing day, and that I don't think so should be the deciding factor whether you should apply for the IPO or not. The key question that investors then have is taking the valuations into consideration. Sometimes you do see listing gains, but post that the stock's correct, right? Or you do not see listing gains, but taking the fundamentals of the company, you see a slowly and steady uptrend that starts coming in from a performance perspective. How do you expect an investor to decide which are the IPOs that should be considered, number one, and two, whether they should be really looking at blocking money over there?
Well, 2 points I'd like to make. In my view, I think the day after the listing, any IPO company becomes like any other secondary market listed company, whose share price will go up and down on the basis of how its financials are, various kind of corporate developments which are taking place, how the industry is performing, how the economy is doing, how the broader markets are doing. But more interestingly, let me give you a recent study which I did. Let me give you these figures. A lot is said that a lot of these IPOs do not perform over the longer term. If you look at the IPOs which got launched in calendar year 2024, and if I look at yesterday's closing prices, on an average, IPOs have given a 47% return. If I look at the IPOs which came in calendar year 2023, and if I look at an average return of those IPOs, it's a staggering 96%. The same figure for 2022 IPOs is 116%. For IPOs which came in 2021, it is 121%. And for IPOs which came in 2020, it is 418%. This is on an average. So it is at least shown that over the last 4 or 5 years, the IPOs which have hit the market have not just given decent returns on listing, but have continued to perform over the last 3 to 4 years.
Right, Pranav, I get your point about the stellar returns which IPOs has given, but coming back to my questions on valuations, you said that what institutional investors and anchor investors are doing should rightly be a key thing to watch out for, and valuations. So are you trying to say that valuations is not something that weighs on the decision whether to subscribe or not that much?
No, to which kind of investors? See, as the SEBI study also recently showed, most individual investors which are coming into IPOs, in fact, a lot of institutional investors too, are primarily coming in from a listing flipping point of view. Especially as far as individual investors are concerned, you've also seen that a majority of them track, grade market premiums of different IPOs and invest on that behalf. So, one needs to be very clear while investing into an IPO about what your strategy really is. Are you coming in only from a listing and a flipping point of view? Or are you coming in, to invest into the company from a long-term perspective? If you are coming in from a listing gain point of view, yes, you may look at, the gray market premiums, etc., and sell on the listing day. But if you're coming from a long-term point of view, of course, you need to study the company, study its business, its financials, who the promoters are, what kind of corporate governance practices are being followed, who the directors are, etc., and then take a long-term bet.
Very quickly, I was just looking at the data in terms of 24. From the 90 IPOs on board, almost 24 were valued at $1 billion post-listing. Now, that tells you that 1/3 of the IPOs have already got $1 billion valuation on listing. What does that tell you? Do you think that's going to be the trend going ahead, where valuations are going to be at a peak, and that's not going to be one of the deciding factors that you should be considering?
Well, the valuation of $1 million valuation is obviously got to do with the size of the companies as well, right? And what you've seen in calendar year 2024 is, larger sized companies, larger issue sizes hitting the market. In fact, in calendar year 2024, the average issue size was close to 1,800 crores, which tells us that the size of companies which have come to the market in 2024 is also much higher than in previous years. And of course, then commensurately, the valuation of these companies would also be, whether more than $1 million or $1 billion. That's of course subjective to the size of the company.
Right. So I think that's something we have to watch out for as well in terms of 2025. But thank you, Pranav, so much for joining us on the show and sharing your views, because that's a broad-based analysis in terms of what could be on the cards in terms of 2025 and whether valuations are supportive to enter IPOs or not. But staying with the space, Lakshmi Dentals, the IPO opens for subscription on the 13th of January. 698 crore rupees, 698 is the issue price, and 698 crores, I beg your pardon, is the amount that they are raising, and the price band is set at 407 rupees. We also spoke to the management about their business and use of IPO proceeds. Let's listen in.
Yeah, so we are into dental business. It's like we are producing prostheses for the patient, mainly from kids to old age patient we are treating.
So I just would like to add that, so we are from pediatric to the teen aligners to the caps, crown bridges to the dentures. So we say we are in a complete life cycle business of teeth.
Samir, if you can give us a sense of the fundraise that you're doing, 138 crores, what is it going to be used for?
So majority of half of it, close to 68 crores, is going to be used for capex. There is some portion of the debt repayment, and the other is for general corporate purpose.
If you can elaborate on the capex, what kind of capex you're trying to put in here, because you're into dental products. So what kind of capex normally comes into?
So we are going to, absolutely. So we need the growth capital. We are investing in automation. We will invest in plant to upgrade the current plant, add more newer machinery so that we can build more capacity. As you would have seen in the past performance, we have been growing, and that is the reason we are raising this capital to grow the business further.
Rajesh, if you can come in here, you've been able to expand yourself to more than, if I'm not wrong, 22,000 odd touch points which are there. What is the plan forward with respect to expansion beyond the big cities?
Yes, so right now we are treating that 20,000 plus dentists. So plan is to right now stick with this 20,000 dentists, because we have many products to cater the dentists, like aligner, pediatric, crown and bridge, all these things. And many times some dentists give us aligner business, some dentists give us pediatric work, some dentists give us crown and bridge work. So our target is to take a maximum wallet share from the dentist pocket.
Yeah, cross sell, and at the same time, of course, as we cross sell, we are organically have been growing, and we do not see a challenge growing in terms of number of dentists organically in the future as well.
Samir, if you can also take us through the kind of product profiles that you have, and which segment attributes to what kind of revenue for you?
Oh, absolutely. Absolutely. So, pediatric is the segment from pediatric dentistry to the aligner dentistry, and to the crown and bridge and dentures as well. So, pediatric dentistry is in the H1 is about 16 crores, aligners, dentistry together is also doing good, and also crown and bridge as well. So we are total of about 116 crores in revenue in H1, and about 28 crores of EBITDA and 22 crores of PAT.
And how have you changed the entire industry in form of use of products, or change in bringing in digital innovation here?
So I think digital has been a tremendous change. In fact, we are doing really strong in terms of digital. In fact, if you see, the global penetration is about 23% in the world in terms of digital. India penetration we estimate is about 3% in terms of digital, while our digital restorations in India is at 62% in the H1. So we are really leading there, and digitization has tremendous advantages, where it's a great patient experience. So instead of having maybe a rubber-like impression that you take, you can have a digital scanner just moving in your mouth, and you can generate a great 3D scan. Then it can, instead of coming to a dental company like us, say in a matter of 1 or 2 days from different parts of India or different parts of the world for that matter, instead it takes about 2 minutes on an email or through our ERP portal to come to us, and then we are able to make crowns which we can deliver faster as compared to a physical impression. So that helps a dentist get faster turnaround time, great patient experience, and at the same time gives us a lot of operational efficiency in the dental company, and also an improved, faster turnaround time to the patient.
I can see, I'm looking at your margin profile. In FY24, it was the EBITDA margins were around 12.2%, and now it's gone up to nearly 19.4%. That's a very steep jump in margins which we are seeing. Is that the margin profile that you normally see in a mature business like yours, because you've been starting up and scaling it up? So is there further scope for the margins going forward?
I believe so, because if you see, there are some listed peers out there and they are having margins which are northwards of 25%, and we believe that what we have done currently, digitization has only been done to say 62%. Our products are currently only in 95 countries. So there is tremendous potential. Rajesh bhai always says that 100 crore ki abadi hai, 32 दांत है इंडिया में, 140 करोड़ 32
now
दांत
140 crore.
Now 140 crore. And globally also there are so many people, so many teeth, so many treatment options. So I think this is just the start of the dental industry that we are doing in India, and there is tremendous potential in India and across the world.
Rajesh, the dental technologies have also changed over a period of time. From metal, now we are going to metal-free products. Zirconia is one of the fast emerging products for, for replacements as well as for crowning and other stuff. How do you look at this thing, and when from a cost perspective, how is it, how will it impact you?
Yeah, I think Samir is the best person.
He has a sample as well.
Best person to answer this question, and we have a sample for this. And your question is correct. Evolution, and we strongly believe in evolution. So Samir can explain this in detail.
So if you see here, this is like the metal ceramic that you are talking about. There is metal in the back, and you can see tooth color. While a zirconia here is metal-less. So it's called metal-free restoration in the zirconia. So this is where technologies have evolved. In fact, when business started, say years back, say in the 90s, metal crown were a very normal thing to happen. Then eventually it got evolved into metal ceramic, and now the world is evolving into zirconia. And if you ask any dentist around, I'm sure majority of the dentists will agree that zirconia currently is the best crown possible in the patient's mouth, and it's been doing wonderfully well across the world in US and Europe, and it has done well in India, and I'm sure moving forward this category will only do what it has done across the world.
And so you're saying that your margins can, as digitization progresses from 62% to maybe 90-95%, you're saying that margins will improve to global levels of 25%, which is available for some of the global peers.
See, again, so for us, we think it is what we are doing. We are still on the growth part, and even moving forward, the profile will definitely, we will match the peers or do better than the profile that they have. And there is tremendous potential. Again, see, the potential is so high, Sarji, that we are just scratching the surface right now with what we have done.
Rajesh, can you give us a sense of once the capex comes into play, what is the kind of capacity that you will have, and what could be the potential, revenue gain that you can have from here?
Yeah, so with the capex, as Samir says, that we are going to use in automation. So as I said in first, that speed is the product and quality is the game. So with the automation, with this new capex, we can generate digitalizations. So वो सब generate करके we can build a good business
and substantially increase our current capacities.
What is the way you're looking at to go into international markets, because you have some play there in the international market as well as far as aligners are concerned? How are you playing that international market?
Yes. So we are already there in the international market. So we are already there in 95 countries. We are there in US. We are there in Europe. So it's about increasing our penetration in the current countries, and as we have been organically adding in the past more and more countries, the future will keep doing the same.
So you will have facilities
And with this move, we want to tell the world India is coming.
So the point is that are you going to have facilities in those markets as well, or are you going to generate demand and you supply from here?
I think we will evaluate the options as we keep moving forward. Currently, we are in a happy space of what we are doing, but in the future, as the business expands and the business grows, we will keep evaluating how things are, and based on that, we'll take the decision.
So that's the management of Lakshmi Dental. Very interesting for them to say to the global markets that India is coming. And usually the irony is you have a lot of people, NRIs, who come down to India for their dental treatment as well, taking into consideration the expenses out there. But let me welcome in Sharmila Joshi of sharmilajoshi.com. Sharmila, good afternoon and welcome to the show. What would you advise with regards to where the Lakshmi Dental IPO goes?
Well, whatever I was hearing sounds fairly interesting, and given the fact that they are addressing both domestic as well as international markets, I think that in itself sounds very good. And I think it's a very unique concept. I don't think that there is any other listed player which is only like a dental product specific. And I also have seen sort of changing trends as far as dental care goes. So I is that like back in the day you only went if you had a problem, but now a lot of it is cosmetic, and I think they are sort of filling that bit also when you talk of aligners, etc. That is definitely that piece. So I think given the size of our country and their presence globally also, this seems like a good IPO. With IPOs, the only thing I do is that if I don't get in allotment, then I just wait it out of 4 or 5 months and then look to buy.
Right, so that's with regards to Sharmila's view on Lakshmi Dental. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
This is on my face. Chalo.
How do you
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
Headlines you start your day with.
Hello and welcome back. You're watching Profit Buzzers. Our next focus is the IT earnings. Well, the third quarter earnings season will kick off with TCS reporting tomorrow. IT. Well, let's talk about what are the expectations from the IT space. Number one is the BFSI sector, which is the banking sector, expected to aid revenue. And remember that most of the management talked about how the banking space is picking up for them. On the margins front, well, wage hike likely to impact companies like Wipro and LTIMindtree, but we'll watch out if Infosys is set to roll off its wage hike or postponing it by a quarter or two. However, depreciation of rupee against dollar is expected to help margins. Remember that rupee hit a record low, and this will aid margins of IT companies. The other point is furloughs expected to impact revenue because of lesser number of working days, especially in the third quarter. So these are the few expectations from the IT sector. Moving on to what to watch out for. Number one, of course, the FY25 guidance given by Infosys and HCL Technologies, whether they are maintaining or downgrading or upgrading the guidance is what will be the key focus for these two companies. Third quarter FY25 guidance for Wipro, because Wipro largely gives quarterly guidance over here. Other than the guidance, well, demand outlook, especially the discretionary spends. Remember that IT sector was under pressure because of lower discretionary spends by clients, and since we are already into 2025, we'll also see what the management has to talk about how client budgets for this calendar year, that is for calendar year 25, is looking forward like. Apart from that, trends in the BFSI space, green shoots in the consulting business is what will be another focus, because Accenture reported strong consulting numbers, and they also mentioned that consulting is looking good from the client's side. So this one will be important, especially for Wipro, because it has its Capco side of business which focuses on consulting. Other than that, hiring and wage hike plans is also something to be watched out for. And lastly, we'll look at what management has to say about the potential changes in Trump policies. How will the policies changed by Trump will affect the Indian IT companies and spending thereon. Lastly, giving a brief outlook on the earnings calendar, we have TCS reporting tomorrow, HCL Technologies on next Monday, that is on 13th, and Infosys LTIMindtree on the 16th, Tech Mahindra and Wipro on the 17th January. So pretty busy week is what we have right now. But let's move on to the new administration change in the US, which will be beneficial for Indian IT. And we also spoke to Moshe Khatri of Wedbush Securities, who believes that the third quarter will be good for the Indian IT space. Listen in to the slice of the conversation.
In general, the sentiment is probably a bit more positive. A lot of this is a function of the fact that you have a new administration that's coming in. They're probably going to be a bit more business friendly. So the sentiment is important here. The quarter should be fine. And obviously you have some recent movements on the FX side that should help margins. These are going to be tailwinds for margins. That's going to be a positive. But you're dealing with other things, right? There's some debate about H-1B visa programs. What does that mean for the sector? Are we going to go through a cap? That could be an issue down the road. The macro itself remains pretty fluid, right? In terms of economic activity, the policy of the new administration. So as you said, there are a lot of different factors that you really have to kind of incorporate into the sector to kind of get a feel on what happens during the next 6 to 12 months. But I would say net, despite this fluid kind of situation, I would say, compared to last year, we seem to be in better shape in terms of pipeline activity, focus on discretionary spend. These should be, I would say, favorable for the next 6 to 12 months.
Well, we'll also talk to our guest on the show, Sharmila Joshi, about the IT sector. Where Sharmila, thanks for joining us again. We will also have Akshay, who's from JM Financials. Thank you, Akshay and Sharmila, for joining us on the show. Coming to you first, Sharmila, what do you expect from the third quarter IT season? Do you think that the positive sentiment is already priced in because of the recent run-up that we saw?
Yes, I think partly, as you said, a bit of it is already priced in. And I think that going forward, I will just emphasize on two things. I think you already touched upon them. One is, of course, the fact that because US typically their clients will be firming up their IT budgets in this new year as to how their spend is going to look like. We'll get a very good indication from companies that how they are looking at the demand outlook going ahead. So I think that will be a key thing to watch more than the numbers itself, because I think it's a given that there were more holidays and etc. etc. So those concerns are already something market is aware of. So the two sort of new things that could really change the picture for IT or influence the price, the stock price going ahead. One will be, of course, the demand picture, and one is what really the Trump administration does. Because even if it is, let's assume it's not very negative for IT, if it is overall sort of a protectionist sort of a stand, which will have an impact on a lot of export-facing sectors within the country, you could see a negative impact. So I think, to my mind, that commentary as well as this are really the key things that I would be watching for, not just in the results, but in this month going forward.
Understood. Coming to you, Akshay, your expectations from the third quarter, as Sharmila also mentioned that things are priced in and focus will largely be on demand and Trump policy changes. Apart from that, let's talk specifically about the banking space and the consulting business reviving, which Accenture mentioned. So do you think that is actually showing up in the numbers or will show in the third quarter?
If I look at the IT price charts, they have had their fair share of correction in the last few trading sessions. Many of the stocks which had fared well in the last couple of months have seen a round of profit booking in the last 4 to 5 trading days. And somewhere they are nearing at a very strong pivotal support zone. So if I look at the Nifty IT index, somewhere the support is very close to where it is trading. And you can anticipate some kind of a trading pullback rally where it stands currently. So majority of the results with TCS results kicking off tomorrow, I believe there can be a slight bump up on positive expectations. But really, I do not see any kind of a major reversal signs in the IT names. It's going to be a small bump up rally in most of the names, which can be used as an exit if you are trading short term in the IT space.
Right, so that's with regards to IT names, but let's shift focus to a couple of names that have come up with their business updates as well. You have a Signature Global, let's pull up that on the screens. If you see in terms of their pre-sales, that's up almost 2.2 times. The stock has cooled off right now. Collections have been up 40%. Their net debt has reduced and their price realization comes in at around 12,565 crores. In terms of their FY25 guidance as well, 86% of their guidance in terms of pre-sales has been achieved, as well as 53% in terms of the collections has been achieved. If you see in terms of Sobha, their pre-sales is down 28% on a year-on-year basis. The realizations have grown slightly by around 16 to 17%, and the stock is taking a beating with cuts of almost 5 to 6% coming in there. And then you have Ashiana Housing. The area booked is up almost 100%. Value of area sold is almost 2.6 times. And they've seen the sales value, which is up 45% as well. If you have to consider these three real estate companies, Sharmila, what would you have to say? Shobha taking a knockdown today?
Yes, so I think the sort of valuations are expensive for this as a sector, because this has again seen a huge run up in the last couple of years. So I think going forward, you will be tracking this kind of data very closely, because very clearly what we are seeing is that different trends emerging from different geographies, and all these companies are sort of unique to their own geographies. Shobha more in the south, Ashiana in another region, etc. So prima facie, I think though valuations look expensive, Signature Global seems to be the best placed at this point in time. So let's allow the stock price to correct a little with the rest of the market and then look at it. But to my mind, that's the strongest among the three that we are discussing.
Akshay, what are charts indicating for the real estate companies? Because clearly 2024 has been a good run-up. There is some cool-off now that is on the cards, but are you seeing strength, good entry levels, or profit booking now?
Definitely, I would see this as a good entry level point, especially for the names which you mentioned right now. If I were to compare the price charts of Ashiana and Signature and Shobha, I think Shobha is one chart which has seen a negative price development today. It has broken its key support trading zone of around 1500. That puts it on a negative footing on the price chart, and possibly 1300 can be the slight downside in the making. So would suggest to stay away from Shobha. But at the same time, Ashiana Housing is one stock which has a very firm price structure. And if you look at the gap up with volumes which it has registered today, that's a very positive development. So that stock can be looked out from a buying perspective with a holding of 1.5 to 2 months. Return of easily around 5 to 7% from the current levels can be looked forward to.
Right, so that's with regards to where real estate companies are concerned. In fact, one aspect now we need to consider is e-gaming that has been doing the rounds as well, and this is with regards to where the retrospective taxation issue is concerned. Overall, if you go to see, let's just pull up a Delta Corp, because that was one of the companies, as well as the Nazara Technologies. That's a very small portion for a Nazara Technologies, but Delta Corp is the one which is in focus. On the back of that, Nazara Technologies is seeing cuts of almost 2.6 to 2.7%. But let me overall, we'll get Varun, who's my colleague as well, to talk to us about the retrospective tax issue with regards to e-gaming. But before that, let's just look at autos as a theme as well in today's day of trade. Maruti Suzuki, as we know, is set to unveil its Made in India for the World e-born SUV e-Vitara, whereas M&M has announced the prices of BE6, the top variant, and XEV9E's top variant car. Additionally, you have Ola Electric as well, who's actually got a warning over disclosure violations. First, let's start off with Tushar as well. Tushar, with regards to the warning letter, what does it entail for an Ola? The stock is under pressure.
So exactly what has happened was on 2nd December at about 9:58 a.m. Ola's Electric's founder Bhavish Agrawal put out a message on X, formerly Twitter, about the expansion plans of the company to grow the number of stores by fourfold by December 20th. But the stock exchanges were informed about 4 hours later in the afternoon. That has not gone down well with SEBI. The market regulator actually said that this is in violation of the listing and disclosure norms that the market regulator has. Remember, Ola Electric listed only earlier this year in July, and it's only been a few months since it has become a listed stock. But again, these are the certain criteria that every listed company has to follow in India. So that's something maybe the company has to learn. In a related development, Ola Electric has received a relief of sorts from the Karnataka High Court about sourcing of the document that the CCPA had asked from the company. Now Ola Electric has received about 6 more weeks to give these documents to the CCPA as per the Karnataka High Court. So a good news and a bad news, but we see that the stock is reacting much more to the bad news relating to the company.
Well, thanks for that. But let's also focus on Maruti Suzuki, which is set to unveil its Made in India for the World e-born SUV at the Bharat Mobility Global Auto Show 2025. Puneet, join us and tell us more about this one.
Well, thanks for that. And you rightly said, now they've finally confirmed that the electric Vitara is expected to be launched in the, at least showcased in the Bharat Mobility Global Show in 2025. Now they've also unveiled the E4Me, which is a vision for the company in electric vehicle in the future as well, which this essentially is creating an electric vehicle infrastructure around a car model, and that's something that's very true to Maruti Suzuki. They don't just enter into a particular segment without the supply chain and the infrastructure. So that's what the company has mentioned today as well. Apart from that, they've also mentioned that they are also trying to create other innovative solutions around the electric vehicle launch as well. Now, the company is also vigorously engaged in establishing a proper ecosystem, as mentioned above, and they're also trying to get in more suppliers, especially from the domestic side as well, to be eligible for PLI schemes going forward. Now, Suzuki Motors had unveiled the e-Vitara back in a couple of months ago in Italy in the Milan Auto Show. What's expected is that the mass production of the same is expected to start from spring of 2025. So the next 2 quarters are very critical for the company. They've also mentioned that this platform that the car is built on has been jointly developed by Suzuki, Toyota, as well as Daihatsu Motors. All three are Japanese car makers as well. Now, e-Vitara will of course compete with the likes of Tata Curve as well as the MS MG ZS EV and the newly launched Mahindra Born Electric EVs as well. So overall, it's a positive development for the company, but most of the production of course is going to be reflected in the FY26 sales. That's where a growth pivot will come as well, while valuations of the company remain quite healthy at around 20 times price to earnings. So it's quite not expensive compared to something like a Mahindra that's trading at 25 times, and definitely cheaper to the two-wheelers as well. So watch out for these more updates coming from the Bharat Mobility Show for Maruti Suzuki.
Right, so that's with regards to Maruti. But what's interesting is the budget expectation with regards to where the EV sector goes. My colleague Rishabh had the story as well, where he's clearly indicated, where sources have indicated to him that the Commerce Ministry is pitching to boost domestic EV industry in the upcoming budget. And they believe that domestic capacity and consumption is absolutely ready to take it off as well. In fact, the export capacities need to be developed. That is what the ministry has been indicating for EV, and they must address apprehensions regarding affordability, efficiency of EV infra and batteries. In fact, they are demanding infrastructure status, bringing EVs charging infra under priority sector lending framework, and you have the Commerce Minister Piyush Goyal, I beg your pardon, who has recently stated that the EV industry is no longer an industry which needs incentives and subsidies. So let's see how this pans out. Sharmila, your view with regards to auto as a space, specifically taking EVs as well as the new launches into consideration, and what the budget holds for us.
It's a very interesting space, and I think, the answer would be too long. Suffice to say, the way I look at it is that while it's an interesting space, I think the first thing that you need to get off the ground is electric vehicles for mass transport, and then two-wheelers, three-wheelers, once again for delivery and for use in cities and small towns. And that bit, I think, has already started happening. Because if you're looking at the kind of data that you get and the kind of orders that there are for electric buses, as well as the data for electric two-wheelers, and you see the inroads they made in the smaller cities, I think that's going to be a very interesting story going forward. Now, unfortunately, Ola Electric has got off on a completely wrong start. They do seem to sort of run into these issues with both the authorities as well as generally on social media. But that said, I think that's the space I'm more positive on. Where passenger vehicles is concerned, of course, I think it's a great piece, and Tata Motors has really taken the lead over there. I think Maruti has really waited too long. We already have a lot of new entrants that have hit the market over the last couple of years, and the Mahindra variant looks extremely interesting. So I'm watching that piece with great interest. But as I said, I think, Maruti is a little late to join the party, but let's see what their product looks like. But as I said, my focus really, my recommendation really has been Ashok Leyland and the two-wheeler pieces for their electric sort of buses and electric two-wheelers. So it's a developing space. The lot of changes happening, a lot of policy changes happening. So it's something that I track very keenly.
Absolutely, Ashok Leyland does remain Sharmila's topic. Akshay, which is your topic, taking into consideration what the charts are indicating, but because fundamentals, it's a little different ride.
Well, see, from the auto space, every rise is being sold into. Most of the stocks in the in the auto space have been in a negative zone. There have been some cases of pullback, but really every pullback has been used as an exit. So the sector as such per se is still trading in a range bound to a weak territory if you were to look at from a short to medium term perspective. Now, really one stock which I would be keen on buying here is only Tata Motors. And the reason is because this stock has been heavily oversold on the price charts in the last 3 months. A very good strong attempt has been made by the stock at the level of 720. A good recovery has ensured. Long additions are building up in the futures and option space. And with the kind of price setup, it just makes me believe that this is one of the best bet if you are looking from a short-term trading perspective. At the current levels of 786, I'm looking at targets of around 825 to 840 in by the month of January itself. So this is the stock you can bet on. 750 is a good support which it has built, and I'm betting on that the stock should test levels of 825 plus very soon.
Right. Okay, thanks for that. But let's shift focus to the buzzing space, FMCG. Well, Zomato, Swiggy both have come out with new launches. Let's talk about Swiggy first. Launched 15-minute food delivery service via new app called Snack. Look at the stock, Hiral, down about 3.5% over here. But actually, this is an addition to the food delivery segment, which it already has. So
absolutely, it's already got something called as Bolt, if I'm not mistaken.
Correct.
Where they have been offering quick food delivery, and it actually remains separate tab under Swiggy's main app, right? And now the new app launch by Swiggy shows probably a change in strategy, because Bolt, which resides under them, and now you're talking about Snack.
Yeah, that's right. Everyone is foraying into the 10-minute quick delivery. Zomato as well has relaunched its quick food delivery service. Remember that they had scrapped this option before, especially in January 2023, if I'm not wrong. So a lot of new...
So you have a Zepto Cafe, Blinkit's Bistro, Swish, Instamart, Dine Out, Bolt, all of them.
Let's pull out the stock. Well, Zomato is also down about 2.5%, 245 after reaching levels of 290, 300 in the recent past. But let's shift. Let's actually talk about this more from our colleague Agni Dev, who tracks this space very closely. Agni, tell us more about this. Is the street not taking this positively, because of which the stock price is tanking? Agni,
right,
can you hear me?
so I can hear you, yes. So the street is looking at this from a very competitive perspective. So a lot of players have entered this fast delivery space. Zomato came out this morning with a 15-minute delivery inside its app. It also had the Bistro service announced last month. Swiggy has come out with a 15-minute delivery app called Snack. So basically, Bistro will be directly competing with Snack, in the sense that they will be delivering from central kitchens and not from other restaurants. What Zomato has housed within its own app, the 15-minute delivery, will focus on delivery from restaurants within a 1 kilometer radius, restaurants like Starbucks and McDonald's, and Swiggy's Bolt service also offers similar services from other restaurants. Now for Swiggy, Snack is a very different foray, considering that all its other ventures, including Dine Out and the events, are traditionally housed in-house on the Swiggy app. So Snack is the first Swiggy application that is outside the app, and this is quickly turning out into a hotly contested quick delivery space.
Okay, thank you so much. Very quickly, Sharmila, what do you think of Zomato, Swiggy? Any one pick, just very briefly because of crunch of time.
I think Zomato then.
Akshay, to you.
I will look at Zomato. The reason being that there is a very strong price support in this stock at the levels of roughly around 240. This is the futures and options segment. That's the point to buy Zomato.
Right. Thank you so much. So Zomato is what our guests prefer, but because of crunch of time, we'll have to wrap this conversation. Well, thank you so much, Sharmila and Akshay, for joining us on the show. From myself, Hiral, and all the team members who put this show together, thank you very much for watching.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Top Trades. I'm Hiral Datia and with me is Mahima Vachrajani. Mahima, clearly if you see in terms of markets, we are on a downtick. You have the broader markets which are underperforming the benchmark indices, and that wasn't the scenario yesterday. Yesterday, you had benchmarks which were underperforming the broader markets. Okay. If you just quickly pull up Nifty 50 as well as Bank Nifty on the screens, you'll see the kind of trend that we are picking up, and the sectoral indices later on. There you go. We've recovered slightly from the day's lowest levels. We've hit a low of almost 23,496, which is below the 23,500 mark, but we've managed almost 100 points recovery from there right now. Let's pull up Bank Nifty, the PSU Bank Index as well as IT. These are the ones that are on the front run as we speak. And if you have to actually see a recovery in terms of markets, the FMCG sector along with the oil and gas sector, these two are the ones which will have to see that kind of a recovery, and it seems that the FMCG is already starting to help. Oil and gas is another one. There you go. So these are the ones which will have to recover if you have to see a good recovery in terms of Nifty 50 on the closing basis. As per Nifty options data as well, you're seeing a lot of put writing that's happening at around 23,500 and call writing at around 23,600. And you have the Nifty weekly expiry, which is tomorrow as well. So all of these factors that we have to take into consideration. But clearly, Nifty's play in the second half of the session is going to be absolutely important, and it's a very stock-specific action day that we have been watching out for. ONGC, Reliance, Dr. Reddy's, ITC and BPCL, these are the top contributors today, whereas the ones which are contributing to the losses, major one is HDFC Bank, ICICI Bank, and then from the smaller side you have Trent and SBI as well. So clearly the action is absolutely stock-specific. And Mahima, you have the broader markets which are underperforming.
Absolutely underperforming the benchmarks clearly, like you mentioned at the start of the show. Let's pull up the mid-cap 150 and the small-cap 250 and see where they stand at present. The mid-cap 150 is down around 1.7% as we speak, and the small-cap 250 is also within the same range of around 1.7%, down around 1.7%. But in terms of stock-specific action, there are some counters which are clearly bucking the trend. There are stocks like Spandana Spurti, Credit Access Grameen, MMTC, there's TV18, there's Shopper Stop, Boston Renewables. All of these counters are up and above in trade, and clearly not in the direction of where the markets are today in terms of the benchmarks and the broader markets. But again, there are counters like Dixon Technology, Paytm, and counters, all of these counters, in pressure. Dixon is down around 7%, Paytm is down around 7%. There's KC International, Flair Writing, Sobha. All of these are also, kind of feeling the pain. Sobha on the back of its, of course, Q3 business update. So all of these counters are kind of in line with how the markets are doing.
Absolutely. And then you have the likes of a Zomato and Swiggy, which are trading under pressure. Yeah. And this is on the back of the competition that's actually increasing in the 10-minute delivery game. Absolutely. Who will be successful is one. Yeah. Who will be profitable on the back of this is another aspect that we need to consider. But that's what is putting pressure on both these counters as well. But let's shift focus to the gaming companies. They have been seeking relief, and this is from retrospective tax notices, with the Supreme Court set to address the matter this week. My colleague Varun joins in with more on this. Varun, what are you picking up? Because you have a Delta Corp, which is up 4.5%. Nazara Technologies, which has a small portion of their revenues, is still under pressure.
The e-gaming companies are seeking a stay on the show cause notices issued in the e-gaming retrospective taxation case until the top court gives a final verdict in the matter. Now, these companies are seeking a stay on these notices due to a fear of coercive action from the tax authorities, and they contend that a stay on these notices will actually assure them of the fact that no demands are made until the final verdict is delivered in this issue. Now, the top court has agreed to take up the issue of whether a stay should be granted on these show cause notices or not on Friday, and the top court will also likely fix a date for a final hearing in this case on Friday itself. Now, a little background for our viewers. The e-gaming companies are challenging the tax department's stance to impose a 28% GST retrospectively on the full face value of bets prior to the period from October 1, 2023. Now, these companies have been contending that a retrospective imposition of a 28% GST tax rate is equivalent to sounding a death knell to the industry. Now, since a lot of petitions on this issue were pending before various high courts in the country, the top court last year transferred all these cases before itself so that an authoritative ruling can be rendered on this issue.
So that's with regards to e-gaming. Let's see what the final verdict is. In fact, let me welcome in Rajesh Agarwal, Head of Research at AUM Capital as well. Rajesh, good afternoon and welcome to the show. How are you looking at the gaming companies, especially Delta Corp, taking into consideration the pain with regards to the taxation issue?
Good afternoon to you and our viewers. Thank you for calling. As far as gaming companies are concerned, we are not that excited about the recent step they have taken to get a stay on the notice. But going forward, we think this tax issue is going to crop up sooner than later. So it's better to avoid at this point of time until some clarity comes up. If somebody is holding, they can continue to hold with a strict stop loss because there are risk factors associated to it.
All right, so that's the view coming in on the gaming counters. Moving on from gaming to the IT space, Tata Tech signed a memorandum of understanding with Telechips. Rucha joins us with more details. Rucha, what do you have?
Thank you. So Tata Technologies is buzzing in trade on the back of news as it has partnered with Telechips to make software-defined vehicles. Now, what will this collaboration actually do? Number one, it will focus on co-developing innovative solutions for advanced driver assistance system, often called as ADAS platforms. Will also help for automotive cockpit domain controllers and central and zonal gateway controllers as well. So these are the products which will be in focus after this. This will eventually help the OEMs, that is original equipment manufacturers, to address the software hardware integration challenges and also reduce the time to market. But how will this partnership actually leverage Tata Technologies? Tata Technologies' deep expertise is in the automotive software engineering space, and this integration would ultimately leverage Tata Technologies' expertise over here and also allow for integration of next generation technology, especially for turnkey SDV development. The Telechips semiconductor technologies actually focuses on AI vision, ADAS, as I mentioned, the processors over there, and also network gateway processors. So all this is ultimately beneficial for Tata Technologies, but if we go back and have a look at how the stock has performed, well, down about more than 10% in last 6 months, and if we have a look at the last 1 year story, down about 24%. So definitely underperforming since its IPO over there, but we'll definitely see if Tata Technologies leverage this kind of position and come out with more orders as well.
Thank you so much for breaking that down for us. Rajesh, the partnership seems to be, an attractive one, but the stock has not done much since IPO, as Rucha rightly mentioned. What do you make of this partnership? And secondly, what are your views on the counter?
I will take it on a different note. I would say that our views are very positive on this company, despite the fact that it has underperformed the market, as your colleague said, but we are very positive on this. And we are have a projections of around 1,050 odd rupees in the next 9 to 12 months. That's our projection from this. This partnership is going to do very well because, as we all know, that this company is into auto software, and previously a major chunk of the order used to come from Tata Motors itself. That was the group company. Now not only they have diversified their product portfolio, but their client profile too. So that's going to help this. Management is very good. Order inflows are very good, and the kind of changes we are seeing in the auto space as such as a whole, I think this company is going to do well. And despite the strong fundamental, it has not performed, and that's going to catch up in the next 9 to 12 months if the market goes well. So one can buy at these levels with the counter has very low risk profile, I would say.
Right, so that's with regards to Tata Technologies. In fact, SDV is almost a $300 billion industry in the next 2 to 3 years. That is what a lot of research reports are indicating. But moving on, we have Rucha, who's still with us on the back of she's actually doing something on Polyplex Corporation. You have Phillip Capital, which has initiated a buy on the counter. Rucha, why is Phillip Capital positive on a Polyplex Corporation, and what are they indicating?
Definitely, Phillip Capital, as you mentioned, is very much positive because the target price it has given is 1836 rupees, implying an upside of about 40%. And mind you, this is an initiation note. Therefore, it mentions that industry, it has done a deep industry analysis as well, which states that this industry can stand to gain from a stable demand with no upcoming capacity in the near future. So all this could also aid margins. Now, talking about the kind of expansion in domestic as well as international market, this one is expected to reach 70%. Like domestic is expected to reach 70% and international expected to reach 71% of the total installed capacity. It is also therefore anticipating revenue addition of about 19 billion rupees over the next 3 years, that is till FY27. This can also be supported by increasing volumes for the company. Talking about margins, well, on the EBITDA front, it anticipates 13% margins for FY27 as against the current 14 to 15% margin average, which was there over the last 10 years. Let's look at the stock price performance. Well, this one got listed in January 2024, that is almost 1 year back from here on, and it is up about 24% since then. But 40% upside from here on is what Phillips Capital believes the stock will have.
Right, so that's with regards to Polyplex. How are you looking at Polyplex, Rajesh?
It was one of the best performing companies, I would say, 2 years back. If you look at the data and all, it was trading at around 2000 plus levels. And then the entire industry faces problem, and not only Polyplex, but other peer group companies show a massive correction, not only in market cap terms, but also in operational terms. Some of them reported losses too. This was one of the company which used to give dividend every quarter. Now, packaging film as an industry has starting seeing a turnaround. This company has not only expanded its product profile, but is trying to reach to more global destinations. We think this stock can go to around 1800 odd rupees in the next 1 year. We have a buy call in this.
So buy call on Polyplex from Rajesh is the view coming in. Moving on to a different counter, we had a chat with Rajiv Gupta, CEO of NTPC Green Energy, on their new 1 gigawatt capacity plant, which was bought out by the Uttar Pradesh government. Listen in to a slice of that.
This project we have won in an auction, which the UP government had taken out, and we have won a 1 gigawatt capacity here. And the timeline for this is 24 months from the date of signing of PPA, which we expect is to be completed in the next 60 to 90 days. So all that is already tied up. We are going to execute the total capacity in 2 solar parks, which we have being developed by TUSCO, which is a subsidiary of THDC, which also happens to be one of the subsidiaries of NTPC.
Right, so that was the management of NTPC Green. If you can pull up the chart of NTPC Green since listing and see how it has performed so far. Rajesh, your view as to how the counter is doing and what's the way forward for NTPC Green?
I would say phenomenal return it has given after the IPO to investors. And we still believe that is in the long run can give very good return. In the recent past, it's made an entry into nuclear power with Parmanu Urja Energy, which we are signing a JV with a subsidiary. And everything is going in favor of this company, and with the focus of government in green energy and all, long term looks very good. Although in the medium term, there might be some amount of consolidation because of the kind of run-up it has seen post-IPO. But for a long-term investor, one can buy this. Recently, the stock has seen some kind of correction, and this is an opportunity to buy, I would say. 1 year price target may be in the range of 160 to 175 rupees.
Right, so that's with regards to NTPC Green, a positive outlook coming in on that one. But moving on, you have a Dr. Reddy's is in focus. 2 reasons why the stock has been buzzing in trade. It's up almost 1.5%, cooled off since opening. But 2 reasons that we're picking up right now is the Nuvama upgrade, and their arm has sold their US manufacturing unit. And these are the 2 reasons that we're picking up so far. My colleague Puneet is standing by to get us more. Puneet, what is Nuvama indicating?
Well, thanks for that. So, they have upgraded the stock to a buy from a reduced rating earlier and have given a target price of 1,553 rupees per share, which is almost a 15% upside from the previous close. Now, the management has mapped out strategies to mitigate any kind of risk from the loss of revenue coming from Revlimid. Now, post the pandemic, they had gotten a lot of revenues from this particular drug. So, coming off that, it's going to be some loss of revenue, but the company has mentioned to its investors that the strategy is fit to, have revenues from other sources as well. The company has mentioned that, for Revlimid, it almost contributed 40% of the company's EBITDA in FY24, and they have mentioned that, R&D spend would decrease, in FY27. So next 2 years, it's expected to be some R&D increase and maintaining that kind of momentum, but FY27 should see some of that coming off, which will impact margins in a positive way as well. And the other aspect is that, key asset launches is something that the company has mentioned to its investors as well to fully offset any kind of revenue impact. That's what they mentioned. And 80% of the EBITDA losses is also, of course, from the expiry of the patent as well. But they have strategically planned out other launches for the same. So they have, Nuvama has raised their FY27 earnings estimate by almost 15% and valuing the stock of at about 24 times price to earnings on an FY27 EPS basis.
Thanks, Puneet, for getting us the details. In fact, in a separate development, they've also announced that their wholly owned US subsidiary, which is Dr. Reddy's Laboratories Inc., has entered into an agreement with Jaguar Labs Holdings, and this is to sell all issued and outstanding membership interests of the subsidiary, which is based out of Louisiana. It also includes the manufacturing facility in Shreveport, Louisiana, that will be sold for a nominal consideration of $1. Overall, Rajesh, how are you looking at a Dr. Reddy's? And apart from that, your view on the sector?
It's a strong company. Despite that, the entire sector has underperformed. Dr. Reddy's underperformed the market, but going forward, we are very bullish on pharma sector as such. And in fact, if we talk about Dr. Reddy's Lab, the kind of strategic investments this company has made into new markets, introducing new therapeutic products are very good. And recently they have announced the new biosimilars being launched in US markets, new products being launched in Canadian markets. These are positives going forward. We have a price target of 1,550 rupees in the next 1 year. So any dip should be taken as an opportunity to accumulate.
All right, shifting focus to the auto space, Mahindra announces the prices for its latest EVs. Puneet joins us with more details on that as to how Mahindra priced its latest launches and how does it compare to its peers. Puneet, take it away.
Well, thanks for that. So they have announced the pricing of the Pack 3, which is essentially the higher battery, offering a higher range for both the BE6 as well as the XEV9e, which is the electric vehicle cars that they've launched back in November. Now, they have mentioned that it has range of about more than 600 kilometers in the affordable category range. It can't be called affordable, but the 18 to 26 lakh range. They have mentioned that, the top variant of the BE6 will be priced at around 26.9 lakhs, while the top variant of the XEV9e will be priced at almost 30.5 lakhs. So they are offering a better range and a higher battery, but of course comes with a cost. Apart from that, we just did a comparison with that and the listed peer Tata Motors and its launch of the Curve. And it essentially says that because, there's a clear difference in pricing, of course, but that's also led by the battery ranges as well. So, the M&M BE6 as well as the XEV has a higher battery of 59 kilowatt in the base variant and a 79 kilowatt battery in the premium and the Pack 3 variant, which we spoke about. While on the other hand, for Tata Curve, it's around between 45 kilowatt hour and 55 kilowatt hour is the battery size. That impacts the range of both these vehicles as well. So for the range purposes, for the BE6 is almost about 680 kilometers, while the XEV is around 656 kilometers of range on a full single charge, while that for something like a Tata Curve is around 500 kilometers as per tests conducted by the agencies. The other aspect is that, in terms of targets from brokerages is another factor to look at, because Nuvama is estimating roughly 48,000 vehicles to be sold by someone like a Mahindra and Mahindra in FY26, which will only be electric vehicles, and that's close to the target that the management has also given of about 5,000 vehicles per month starting FY26. In comparison, Nomura is expecting for Tata Motors to have roughly about 72,000 vehicles to be sold in this particular FY25, and that will subsequently be increased to about 1 lakh vehicles in FY27. So despite being a late starter for Mahindra, they're able to catch up to the targets of something like a Tata Motors as well, while we've seen competition from the unlisted players such as MG Motors being one of the key ones, which has the number 2 market share in terms of electric vehicles. Finally, in terms of valuation, what's also important that both these companies have raised capital specifically for the electric vehicle venture. which might eventually list going forward in the future as well. For Tata Motors, based on their previous fundraise, the company is valued, the electric vehicle arm is valued at about $9.1 billion, while Mahindra is valued higher at about $9.8 billion. And for Mahindra, we are expecting the company to have a certain fundraise as well. They've already mentioned that BII will be investing 650 crores over the next few months in the company, and over the next 3 years, the company is expected to invest 12,000 crores only in the electric vehicle arm, while they are also investing 15,000 crores in the petrol variant as well. So overall, both these are very close to each other in terms of competition, but Mahindra seems to have cracked the premium car market with its extra features and of course with the valuation as well.
All right, so Puneet, thank you so much for breaking that down for us in such a detailed manner. Rajesh, I'll come to you on this one. How do you perceive this new pricing for Mahindra EVs?
Your colleague said it right. Although it's termed as affordable SUV, 25 lakhs is not at all affordable, I think, for a general public. But still, it's very exciting news. It's on the features are as good as Land Rover, I would say. I've seen the details. And Mahindra as a company is not only a play on passenger vehicles, but farm equipments too. And in the recent management conversation, I have heard through media that they are going to scale up their international business with their existing distribution channels, which they already have. They have moved into EV in a big way, and that's a big positive for the company. But at this time, I think the valuations have already discounted all the positives. If it falls by around 5% from these levels, that would be a good entry point for Mahindra and Mahindra. For long term, it's a good buy in auto pack.
Right, so M&M, a good play in terms of the auto pack as well. But let's quickly pull up the markets. You're seeing a sharp recovery as we speak. Let's pull up Nifty, Bank Nifty, Nifty IT Index as well. There you go, from the day's lowest levels. We've hit a good high, though not in the positive yet. Nifty IT as well is now nearly at the day's highest levels. We were down almost, 23,650 is what we've already touched. We've hit a high of 23,751. So we're just almost 100 points away from the day's highs right now in terms of Nifty 50. Overall, if you go to see, we are not trading below 23,600. So that's the topic that we need to correct as well on the screens. But clearly, if you see in terms of Bank Nifty, let's pull up IT, FMCG, oil and gas, because as we were mentioning, these two sectors were absolutely important with regards to where the recovery goes. There you go. You have the FMCG index, which is at the day's highest level, so contributing absolutely to the recovery. Oil and gas also near the day's highest levels, contributing to the recovery. And let's just pull up mid-cap and the small-cap index as well and see, because there was underperformance as compared to benchmark indices, drooling under pressure still. Small-cap 250 at the day's low, and the mid-cap 150 also at the day's low. It's the benchmarks that are seeing a good recovery. But staying with the markets, and you have a Paytm that is in focus. So if you're looking to play the India payments theme, Paytm might be the stock to go after, and that is according to Bernstein's senior analyst Pranav Gunlapalli. The stock though is down 7.5%. Let's first hear him what he has to say.
See, I think for Paytm and the overall payment space, what we are seeing is a pickup in the payment margins. I think both a stronger volume growth on the UPI front and a stabilization or maybe even an improvement in payment margins is what makes us bullish. And secondly, specifically for Paytm, I think once, if we are to assume that the asset quality troubles bottom out, then Paytm becomes a better way to play that theme, because they will be direct beneficiaries of a pickup in the lending disbursals versus, say, a lender like an SBI card, where one would need to wait out for the credit cost impact to play out and then see an earnings rebound. The pickup in disbursals will show a lot faster, a lot more cleanly in the case of Paytm, and hence our preference for Paytm over SBI cards. And even the longer term, we are more bullish on UPI platforms compared to monoline credit card business.
Rajesh, we just have a buy or a sell answer from you on Paytm because running out of time. The
sell from our side because of the loss of the market.
So a sell coming in with regards to Paytm, but completely out of time. Thank you so much for joining us on the show. It's a thank you from Mahima, the team that put the show together, and myself. In fact, lots more lined up on the other side. Please stay tuned to NDTV Profit.
The world of capital markets and trading post-Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post-Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims?
Well, it's a tough day again today, and weaker global cues likely weighing on indices, being one of the many factors that's weighing on indices. But let's pull up the Nifty 50 intraday, see how we're faring. We're around a 1/5% or thereabouts lower. At least the benchmark doesn't look all that bad. But let's look at the intraday chart on the Nifty. Well, we're off the day's lows. We've seen a bit of a bounce from those lows as well, and we'll try and break that down. Let's look at the contributors on the Nifty 50. HDFC Bank, one of the big losers, and Reliance, one of the larger gainers on the Nifty, offsetting HDFC Bank. Think and wonder what would happen. We'd be down over 100 points likely had Reliance not made that move. But so 2% on Reliance, ONGC doing well for itself as well, 3% higher, second consecutive day where ONGC has done well. So that CLSA note really working in its favor. What's not doing well? A large chunk of the universe, frankly. But you look at some pockets which are doing well. Auto, for example, look at an Oysha, look at a Maruti. Some of those names are doing fairly well in trade. Some bit of FMCG also that I see on the screen. Tata Consumer, HUL, Nestle, some of those stocks also doing well. So a clutch of those doing decently well for themselves. But some of the heavyweights, not so much, and HDFC is languishing, at least at this point, 1.25% lower. And we've seen some pressure on that counter. We'll discuss that as well. Let's look at the broader markets, the advanced decline first. You're looking at the Nifty mid cap down 1.4, so real pressure here. The Nifty small cap 1.6% lower now, so more pressure on the broader end of the spectrum. The advanced decline, if I can look at that before we move to sectors, and there you go, 4:1 in favor of the decline. So the breadth looks extremely weak. Sectors, if we can look at before we go to BSE 500, top gainers, top losers. So the IT index somewhere holding up, FMCG doing well, we spoke about that. Oil and gas, of course, second consecutive day where that one has ended well in the green, 1.6% higher. But the larger universe otherwise seeing a lot of pressure. The top loser, consumer, and also a bit of pharma, 1% lower is where pharma is currently sitting at. So, well, that's how it's playing out. Last off, the BSE top gainers, top losers, if we can look at that. There you go. Those are some names, credit access along with a clutch of other NBFCs, smaller ones, microfinance lenders are doing well in trade, very, very well on a day which is otherwise proving to be quite difficult on markets. But Neeraj, your sense, what do you believe are maybe 2-3 factors that's playing currently with the way the breadth is? It's so very weak, right?
It is looking wobbly, and clutch of stocks, of course, getting really hammered in trade. I mean, we spoke about White Dixon and wonder if a part of the reason out there, amongst other things, maybe the Tata Electronics and Pegatron deal approved. So keep that in mind. There's a lot of talk about how some of the BFSI names, I mean, just look at Bandhan Bank, right? The Bandhan Bank is, and we should bring up that stock. It's trading at about 151. Now bring up the 5-year chart. During COVID lows, the stock was at 151. From there, it's traversed everywhere and come back to 151. So in some sense, some of the names are just languishing for like a number of years. Look at that. Done nothing for 5 years on a trot nearly, or 4 years on a trot. Tells you a story or two or what's happening to select names as well. So certainly points to ponder. But I mean, we've marked stocks. Let's first get in our analysts to try and figure out what to do in a scenario like this, and we'll keep on marking stocks during the course of the show. Kush Bora is with us. Kush, good afternoon. Thanks for joining in. How are you seeing the action today, Kush? Is this the final nail in the coffin of sorts, or is this the levels from where you would believe that the risk reward would be stacked in your favor if because the correction is now maybe overdone?
Hi, Neeraj. First, a very good afternoon to you and to all the viewers. Not really. I don't think the correction seems overdone right now. And just to put things in context, I mean, if we take the volatility aside, what we saw 2 days ago, the move that we saw today in the first half, if we just take the volatility aside, take a step back and take an objective view, then I think, Harsh will also vouch for this. We've been talking about this broad range of 23,500 and 23,900, and we still remain bang in the middle of that range. So for me, the risk reward ratio will be favorable when we move closer to 23,500 and see a rebound from there. And we've already done that twice in the last, 6 odd trading sessions, or rather, 10 odd trading sessions. So for me, until I get this range breakout, correct, either on the upside or on the downside, we will continue to perhaps, give a no trade kind of a view on the Nifty. Now, if I were to look for silver linings, then yes, there's a positive divergence setting up on the Nifty on the daily chart, suggesting that 23,500 being held for maybe a session or two could see some sort of short covering rally, and the Nifty could move to 23,800 and 24,000 levels. But I would wait for confirmation, from the price action rather than take a preemptive move. But as I said, as a silver lining, there is a technical indicator. But from the price action perspective, not much really. We still remain bang in the middle of the range, albeit the bias is a little negative.
What about the bank Nifty, Kush?
So Harsh, I think this is on cue, right? We spoke about Nifty being a no trade zone yesterday also, but Bank Nifty being a shorting candidate. Incidentally, we did initiate a put option call on our advisory today. That's paying rich dividends. I think that will continue to linger until the Bank Nifty takes out the 200-day moving average, which now sits at 50,700. No positive divergences on the Bank Nifty just yet. So I think the near-term pressure could well linger on the Bank Nifty. So I will maintain a short position on the Bank Nifty if I had one. I'm not initiating one because we've already seen a bit of a rebound from the low levels of the day. So any retest of 49,400 or thereabouts could perhaps trigger some more fresh shorting ideas. But Bank Nifty as a shorting candidate is very much intact, but that trade's played out in the morning, so I won't initiate it just yet. Maybe during the course of the show, before market ends, if some triggers do come about, then we could consider a short trade on the Bank Nifty again.
Considering that there is a bit of a recovery in the market as well, Kush, what are the stock recommendations for the day?
Sure. So Neeraj, I continue to go with a mix of long and short. On the long side, I've got Orchid Pharma. Some of the pharma names continue to surprise on the positive side, or at least consolidate. The stock is down about 0.5% or so, but I'm not too perturbed by this kind of a move, given that it held up quite a bit. Even when the markets are actually seeing quite a bit of correction. So Orchid Pharma remains a buy. 1925, 1970 are your targets. 1835 is the stop loss. On the short side, I've got Concor. Now, this is one stock that continues to pay on the downside, again slightly higher today, and mind you, this has also seen a bit of a drubbing today, but rebounded from the lows of the day. So Concor on the short side still intact. 745 is the first target. 737 is the second target. 745 incidentally is the low of the day today, and 763 or thereabouts is your stop loss. So Concor on the short side and Orchid Pharma on the long side.
Okay, so those are our picks for this afternoon. Thanks for that, Kush. Ambrish Baliga also joining us, independent market analyst. Talk to us about fundamentals. Ambrish, we continue to be jittery, to say the least, at least on the benchmark. And on the broader end of the spectrum, pressure is mounting as each day passes this January. Right. What's the sense like? Is there a cause for a larger correction at this point, or do you expect a bit of a rebound to start to play out?
I see. If you're talking of medium term, I clearly see a further correction because clearly if you look at the valuations, they are still expensive, especially in the mid cap and the small cap side of the market. And you look at the sort of macro numbers which have been coming. They have been to a certain extent disappointing. For example, the GDP growth forecast, that's been brought down. And now it's quite clear that we'll not have the Fed rate cuts happening. Q3 earnings, which is just about starting. Again, the expectation is that it will not be better than what we saw in Q2. In some cases, it can even be worse than what we saw in Q2. And I think January 20th, post that, we really don't know as to what sort of announcements can come from President Trump. So I think all these things are bothering the market, no doubt, and because of which we could see further lower levels. It's very much possible that we can see bounce backs in between, because it will not be a one-way, a downward street. But I'll not be surprised. In the next month and a half, if we see levels of closer to about 22,000 on the Nifty.
Okay, so that's Ambrish really expecting some bit of carnage. Ambrish, would you continue to buy on each decline, on each dip, or would you be happy to deploy only once a decentish correction happens?
No, see, I mean, although we have a view that the markets can go to 22,000, you can never be 100% sure that the markets will go to those levels. Okay, so whenever you get a decent dip, especially those down days are buying days, and normally whenever we buy something, we buy that in about 4 or 5 tranches. So, I mean, if you see a 150, 200 points sort of a shave off on Nifty on a particular day, and the stock list which you have, and there you're seeing that the prices are, I mean, coming closer to the target price at which you want to buy, that's the time you start buying. At least you buy one tranche at that point of time. The next big fall, buy the second tranche. And by the time the market goes on to those levels of 22,000, possibly you have bought, I mean, all the tranches. And in case it doesn't go to those levels which I'm talking about, at least you'd have bought 2 or 3 tranches in that fall. And then once you know that the market is again on a proper bounce back or possibly a new bull run is starting, then you finish off the next 2 tranches even at a higher level. I mean, it doesn't matter because your overall average would be lower in that case.
Okay. Amrish, stay on. Want to ask you about real estate, because real estate does seem to be one of the key themes in focus today. Signature Global's, Sobha, Ashiana Housing, all of them have released their Q3 updates, though on a weekday, the Nifty Realty itself is down. But Anushi Johnson to give us what stood out within each of these. Anushi.
So for real estate, we are looking at a mixed bag in terms of how the numbers have come out today. Now, Signature Global continues on the strong growth trajectory that it has been posting since a couple of quarters now. If you look at the pre-sales number, that stood at about 2,070 crore, which is about a 120% of a jump compared to last year. We've been seeing the company clocking in about 100% of a growth figure in the previous quarters as well. Collections is one area of focus that we should be watching out for. 1,080 crore, it is a 40% growth. But if we compare all these metrics to the FY25 guidance that the company has given, so pre-sales, they have a target of about 10,000 crore. So currently now their 9-month FY25 picture stands at about 8,670 crore. So 86.7% of guidance achieved in the 9-month period. While for collections, it's about 3,210. So 53.5% of guidance have been achieved, but the remaining now would be on the back of Q4 on how the collections would pan out here. So strong set of numbers for Signature Global. But if you look at Sobha has continued on a downward trajectory in terms of where their pre-sales numbers are concerned. It reported about a 27.9% of a drop here to 1,249.9 crore. However, in line with the industry trends that we are seeing for the price realizations, that continues on a stronger footing, seeing about a 16.5% growth in with the realization rates being at 13,663 per square feet. So strong note on the side of price realization, but pre-sales is one factor that we should continue to watch out for. Q4 would be in focus if there is some recovery in terms of new launches that we could be watching out for this quarter. They had launched Ayana in Bangalore with a total saleable area of around 11.3 square feet. So this is for Sobha. But what has surprised the markets today is Ashiana Housing. Very strong set of numbers they've clocked in. Area booked stood at about 6.75 lakh square feet, which is about 101.4% of growth, while the pre-sales value saw about 161.2% of a jump. So a whopping number of 454.31 crore is the figure that we are looking at. Earlier in this week, we had seen Macrotech reporting its number, wherein they had clocked in about a 30% plus growth for their pre-sales. So we will continue to watch out for the other business updates from other companies as to see how the Q3 and Q4 picture pans out for these real estate companies going forward.
Very interesting. Yeah, and all of those moves happening on the back of the pre-sales numbers itself. Let's pull up a Signature Global. Let's also have a zoom in at Ashiana, which is doing very well for itself. And also like to pull up Sobha, which is not doing as well. Amrish, what do you make of this real estate cycle? Do you expect it to have more legs? Do you expect it to get selective? Are there certain names you have in mind that you would play this cycle through? Because when you're looking at trends, pricing continues to go up and healthily. How should you, as an investor, look at this?
See, in real estate, you can't generalize. And now what we have seen, especially in the last year and a half, 2 years, that the premium properties are selling extremely well. But there is some amount of pain as far as affordable is concerned, because if you see the last 7, 8 years, it was affordable which was doing extremely well. And there was a bit of pain in the premium segment. But I think that's completely turned. Because what we have seen, especially in the last 1.5, 2 years, is that the rich have gotten richer and you have had new wealth be created. There were ESOPs across the CXOs, I mean, who have been buying properties, again, premium properties. Promoters have been like selling their stake, like in the open market. They've been buying properties which are worth about 50 crores or 100 crores. I mean, a lot of news we have heard on that. Whereas when it comes to middle class, I think they are finding it a bit difficult because the inflation is really pinching them quite hard, and especially in the last 1.5 years. So there's a very clear division that the companies which are mostly into the luxury properties, they're doing extremely well. Affordable, they're finding it a bit difficult. And I'm quite surprised the way Ashiana's numbers have come because Ashiana is more into affordable. I think we'll have to look a bit like deeper into it as to where the sort of sales have come from. But overall, this is the situation as far as the real estate is concerned.
Okay. Any names on your list, Kush, with regard to some of these big movers within the real estate pack?
So, Harsh, I think Ashiana has actually done quite well for itself, not just today. I mean, if you look at the mid-October base formation near the 300 mark, that's turned out to be a brilliant buying opportunity for anyone who would have invested at that price or around that time. Because from those level onwards, apart from some volatility along with the markets, the stocks actually gained, gone from strength to strength. So I think this move looks like it's here to stay. Near-term resistance around the 400 mark cannot be ruled out. It's proven to be so in the recent past. But other than that, I think Ashiana looks on a very strong footing. The one stock that is on my radar, and we've discussed this again as a time and again as a call. In fact, just about last week we discussed this as a call with targets of 890 and 920 is Anantraj. Today also, if you see, there is a very strong move on this one. Not sure if there is some specific news on this one, but with the kind of price and volume action you're seeing, there has to be. But on the whole, I know we continue to like Anantraj in this space.
Okay. Right. You've got some of these big buzzers. The pre-sales numbers look decently good. And that's the view coming in with regard to real estate. What's your take on ONGC, Ambrish, if I can ask you? What's the sense like? Second consecutive day of gains, top nifty gainer even today. Plenty of value is what at least analysts are suggesting, and they've continuously kept suggesting. This is not new. But what's the sense like on ONGC?
See, I mean, typically ONGC, the initial move is clearly, it goes with the oil prices, and we've seen that the oil prices have slowly started inching up. I think that's what is playing out, for the time being on ONGC. But then overall, in fact, I have a decent price target for this. I'm looking at levels of about 330, 340 over the next 6 to 8 months. So even despite the sort of a move which we have seen in the last few days, I think one can still buy at the current levels.
Okay, 3.5. It's been that consistent idea since morning for us. In fact, even yesterday, ONGC, and it's reaped rich dividends for sure. Kush, maybe you did answer, but I just want to ask a specific to you. For somebody who's a short-term trader, is it prudent to take money off the table, or are the charts looking so good that even a short-term trader should carry forth the longs? Amarish's fundamental view I've taken on board. I want the technical trading view.
So, Neeraj, 2 days ago, I was a little skeptical on ONGC when it was around 245, 250 mark. From there on, the stock's actually gone further high. So, to answer your very specific question, if you're a short-term trader, should you continue to hold on? My answer is yes. The reason being that, despite the kind of bump up that you saw on the back of good volumes from those 220, 230 odd levels, thereafter the follow-through has been quite exciting, not only in terms of the price movement, but also in terms of the volume action. Even in a market like this, the stock trading close to the high point of the day on the back of good volumes, I think this is one trade that you should continue to hold on to. Fresh positions a little skeptical because of the 280, 200 DMA resistance, but once that is taken out, it could go higher. If you've got an existing position, don't be in a hurry to book out. I think you can put a trailing stop loss around the 269 to 268 mark, and continue to ride this wave.
Okay. Well, let's focus on tech then. But actually, before tech, maybe Amrish, just one thing, and we'll talk about tech in a moment. Are you expecting something significant from any of the IT companies that you would be looking at personally?
No, surely not significant, but I'm expecting that at least the numbers should be slightly better. I mean, this is like at least one sector where I'm expecting the numbers to be slightly better than what we saw in Q2, and especially from the biggies like Infosys, your TCS, as well as HCL Tech.
Okay. Kush, quick 30-second view. Anything on IT?
HCL, among the big boys, TCS, Infosys, I would continue to avoid. Perhaps post-result, we'll see how this goes.
Okay, let's take a break on that note. Stay on, Jaban. We'll be back in moments from now. Stay tuned, viewers.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Back with India market close, and before we move any further, I think it's important to highlight what's happening to UBL, as I believe there is an issue in one of the states with regards to the supply of beer. Mahima Johnson to tell us what is the development and what is the impact on the same. Mahima, good afternoon.
Good afternoon, Neeraj. So basically what has happened is that United Breweries has decided to suspend supply of beer to Telangana Beverage Corporation with immediate effect. Now Telangana Beverage Corporation basically is conducting the IMFL and wholesale trade in and on behalf of the government of Telangana. Now this particular company has not revised the basic price of beer since 2019, and there are significant overdues that remain to be unpaid by Telangana Beverage Corporation, which is why United Breweries has decided to suspend the supply of beer so far in Telangana, and this will be from immediate effect. In terms of what has happened so far with regard to the price change in the beer, the Breweries Association of India had urged Telangana government to increase beer prices, and this is because the prices of raw material prices are going up, and to offset the inflation. We've seen that the production costs for all of these brewers went up by 35 to 40%. So the Brewers Association of India had already requested Telangana government to increase the prices of beer, because the price of beer have not been increased by 2019. And in terms of the impact on United Breweries, where in Q2 itself the volume growth majorly was driven by Telangana as a state, and which is why this will have a major impact on the company in terms of its volumes going forward. In Q4 we'll be able to see that, and the company was also kind of evaluating expanding capacity in Telangana. It kind of might hamper that decision as well. So overall this is the reason why the stock is also seeing tanking of around 4% in trade today.
Okay, yep, interesting. Thanks a lot for that, Mahima. And Amarish, before we thank you, any thoughts on this? I mean, it seemed that it is something that's happened from the state side, but it's actually something that the companies decided to do. There is a reaction on the stock though.
No, because see, the distribution is controlled by this company for the state, and Telangana is one of the largest consumer of liquor. For example, beer. I think the per capita consumption, if I'm not wrong, is about 11 liters. Whereas if you check for Andhra, it's just about 4.5 liters. So by far is the largest. Whatever developments have happened right now, I would say it's a short-term negative, because the sales will go down sharply because of this. But I think it's long-term positive because finally the state government will have to come around and negotiate because they cannot be seen not selling beer in that state at all. So there would be pressure from the consumers. So I think the government company will turn around, and I think that should be positive in the longer run for all the beer companies, including United Breweries. So I would say that because of this, in case we see a slightly deeper cut, that could be a buying opportunity.
Okay, Amrish, we're going to let you go on that note. Thank you so much for joining us, giving us all of those views. But we're also joined in, or rather, Kush, myself, Neeraj are also joined by Shivangi Sarda, analyst, equity derivatives and technical at MOFSL, as well as G. Chokalingam on the fundamental side, founder and MD Economics Research. Let me start off with you, Shivangi. What's the sense you're making of markets? We're seeing a bit of a recovery now this afternoon over the last maybe 15 to 20 minutes. What's the sense?
Very good afternoon. Thank you for having me. So we've seen that there has been wild swings in the market, almost so as the bulls and bears have been seen in a tug of war. And of course, January being January, the volatility index is also spiked up and acting up. Bears are in control, but there has been a good recovery in the last 1 hour. Overall upside remains still capped, and we are expecting, whatever bounce that we are witnessing, we're expecting some sort of consolidation here because there is some rejection at the higher levels as well. So 23,800, there are a lot of accumulation of the call writers. So this level would be an important level. Now, with a support of 23,500, this is the swings that we're expecting in the index. Today also it did not break 23,500, which is a plus for the index right now. But swings cannot be ruled out. I think option strategy based trades would be advised in this kind of a highly volatile market scenario. So stay hedged and stay ahead of the volatile swings.
Okay, stay hedged, stay ahead of the volatility. Kush, quick check with regard to your view. We've seen a bit of a bounce back, or rather we were already seeing it the last time we took your view, but now we're seeing a little bit of an updated graph intraday. What's the sense?
Fairly similar, Harsh, to what we spoke at about 2 p.m. This was a recovery that was underway. Would have been heartening to see the Nifty, move into the green territory. Wasn't to be, then those gains were again once again given up. Now, what's also happening is that the 23,500 mark technically has proved to be a bit of a support zone. But even from an options data perspective, for options expiring tomorrow, you will see a very strong base building up at around that level. So I think for a day or two, at least, that level should be respected unless, there is some unpleasant surprise and it gets taken out. So I think 23,500 from a near term should be respected. At least that's what the options data is suggesting. But 23,700 is starting to add on some base. So it could be a narrow range that we might trade in. And I think we'll take that, given the kind of volatility that we've seen over the last few sessions. Even if it does get a little silent around these levels, I'll take that. A bit of bias, continues to remain negative on the Bank Nifty. So Nifty is still a no trade kind of a zone. Bank Nifty will continue to look for shorting opportunities.
Excellent. Mr. Chokalingam, what's your sense with regard to where markets are at? You're expecting a deeper gash?
Generally, FIs do not come back in a big way when the budget is going to be presented. Already they have been selling. So my firm view is that till budget is presented, the foreign investors may not make any big move to invest in India. And also they will wait for the stability of the rupee. And third, all of us know the GDP numbers come from NSO, which is not encouraging in the short term. And, considering these reasons, I believe till end of January, that is till budget is presented, unfortunately, there could be a lot of volatility with the downward bias. And that might extend till March 31st also, because a lot of retail investors also tend to, bull market, when it starts correcting in the Jan-March quarter, a lot of retail investors start booking, losses and reducing the taxes and cleaning up the portfolio for tax purpose and, minimize the tax. So we have seen many times February, March also this extending. So I am little pessimistic on Jan-March, but beyond that, if you ask me, I am overly bullish. I believe once again, we can see a great wealth creating opportunity in FY 2026. That will see the reversal of interest rate cycle, that will see the recovery in the growth rate, that would also see the foreigners coming back to India because they cannot antagonize all the major countries in the world. So I am sure they would consider India as once again a great destination to invest.
Interesting. Shivangi, your picks this afternoon?
So on my radar, first up is PSC. We've seen that this stock has been very resilient. Any small declines have been utilized. It's respecting its 50 daily exponential moving averages as well. And we've seen that, somewhere volumes are adding up at these retracement levels, which indicates that buying is, visible here. So recommending a buy here. Now, all the capital market related stocks are poised for a good up move in the next quarter as well. So this is one stock which is to benefit. So 56.50 is the next targets that we're looking at for this stock with a stop of 53.20 levels. Now, the second pick on my radar is from, the pharma and pharmaceutical pack. We've seen that this stock, of course, has seen a lot of action. And related to that is, Max Healthcare, which is looking quite attractive. Now, this is one stock which has been, trending in an upward sloping channel, gave a breakout at its lifetime high levels as well. And recently, we've seen that, this stock is kind of increasing its total bed capacity by 84% in FY27 with 70% brownfield expansion. So this is all ensuring that the current infrastructure is being utilized efficiently. Of course, there's sustained growth and scale advantages will also be acting up for this stock. Technically, we've seen that the MACD is also giving a bullish crossover. And in this series so far, we've seen 36% open interest addition in this stock. So quite positive, quite lucrative for 1250 targets and a stop of 1180.
Okay. Interesting. Max Health out there on that list too. Shivangi, we've gotten a technical opinion on ONGC, presumably even Reliance. I wanted to know the derivative positions, if the derivative positions indicate anything about the kind of build-up that we've seen in the last couple of days, and would that mean something for ONGC?
So definitely there has been some sort of action over here, and we've seen that from the last 5 trading sessions, IVs have comparatively, cooled off, which clearly signifies that the bulls are becoming comfortable here. Now, the remarkable thing is that open interest addition has happened, but even at these levels, it's sustained, buying. There is no spike, so that makes it a comfortable, upside move. And there was a hurdle which the stock has surpassed, near about 265 odd levels. So there has been a lot of unwinding at these levels as well in this zone. So this is acting up positive for the stock. So derivative wise also there is quite a lot of call writers unwinding. So overall looks quite positive. And next up, for the targets that we're looking at for ONGC is 280 immediately and then positionally 290 levels.
Okay, interesting. Okay, watch out for that. Now let's shift focus to the auto space as well. And Mahindra announces the prices for the latest range of EVs. Puneet Johnson, to tell us about what is the pricing and how does it compare to its peers, and what could it mean potentially for demand, if at all? Or maybe we'll ask that to G. Chokalingam as well. But Puneet, tell us.
Well, thanks for that. So essentially, they've announced the pricing of the premium variants of electric vehicles. And within that as well, they've announced the pricing of the higher battery of 79 kilowatts. The BE6 will be priced on the top band at around 26.9 lakhs, so almost 27 lakhs. While the XEV9E will be priced at 30.5 lakhs on the Pack 3 variant. Now, what's essential is that when you compare it to someone like a Tata Curve, which is the nearest competitor, that's priced at around 17.4 to 19.2 lakhs. So definitely the top variant is something that's great. And what's also important is that while, bookings start from 14th of February, deliveries will be expected to start from March this year. And they will only be selling the top variant in the first few months, which is the phase 1 of manufacturing of this electric vehicle. That's something to watch out for. The other aspect is the battery comparison, and Mahindra has steadfastly said that they will be launching, they will be looking at range anxiety as something they want to solve, and hence the battery capacity is between 59 kilowatt hour and 79 kilowatt hour. In comparison, Tata is somewhere between 45 and 55 kilowatt hour, and that directly affects the range as well, because both Mahindra's models are above 650 kilometers in range, while that is something like a Tata Curve is about 502 kilometers. With that, the targets of brokerages is also something that's interesting, because Nuvama is estimating roughly 48,000 units to be sold in the fiscal year of 26 for Mahindra and Mahindra in terms of the electric vehicle only portfolio, and that essentially means roughly 5,000 units per month, and that's something that the company has also confirmed today when we spoke to them in the morning. What's also interesting is that Nomura is expecting that Tata Motors will have roughly about 72,000 vehicles sold in this particular year, which will be electric, coming to about 65 to 70% market share in this year. That is expected to grow up to almost 1 lakh by FY27. So both, despite Mahindra starting late in the EV race, they are expected to reach to Tata's level over the next 3 to 4 years. And what's lastly also on the valuation of the EV entities, because both the companies have raised private capital for the electric vehicle only arm. And in terms of valuation, while it's a little neck to neck, Mahindra is ahead in terms of valuation. So over the last fundraise that both these companies have done back in 2022, Tata Motors is valued at about $9.1 billion of the electric vehicle arm, while that of Mahindra is around $9.8 billion. So overall, while the price comparison is something different and premium for something like a Mahindra and Mahindra, addressing the issues of range anxiety with premium features is a strategy that they've taken. It'll be interesting to see what's the kind of foray they go into starting FY26 with the per month sales as well as the acceptance of the same.
Okay, interesting one there. Thanks for that, Puneet, for breaking that down for us. Mr. Chokalingam, within the auto pack, what do you believe will differentiate now going forward? Is it going to be the higher ticket, more premium kind of PVs, or is the cycle going to shift towards more economy?
It would be once again SUV. Temporarily it has dipped in the back end of 2024 calendar year. But once again, SUV can help. Of course, in the entire automobile sector, we saw Maruti and amount of picking up sales in December. But I believe it is a one-off event. I may be wrong, because when economic growth slips down, it is highly correlated with the auto sector. So therefore, the Jan results, Jan monthly sales would be very, very crucial. So I remain a little pessimistic about the auto sector in Jan March quarter. I doubt whether the pickups seen in December can be durable going forward. So therefore, I continue to recommend stocks in in the large cap space, focusing on banks, pharma, and select FMCG, and also stocks like L&T. They give me a lot more comfort than automobile stocks in the Sensex and Nifty.
Shivangi, if I can come to you with regard to some of the auto counters, if we can pull up something like a Maruti, it's done quite well, at least over the last week or so. What's the sense now going forward?
So out of the entire auto pack, I believe whatever underperformance that we've seen here from the last 2-3 months, I believe, of course, Maruti has seen a price volume surge in the last 1 week, and it's recouped most of its losses of the last 10 weeks. But at these levels, there has been good buying interest and a consolidation of the last 2-3 sessions as well, which is making it a comfortable buy from these levels. But of course, with Maruti, I'm also focusing on Tata Motors, which has been witnessing a spike in open interest, but the price has not risen so much, which is making it attractive at these levels. So both these stocks will be on my radar from the auto space. So definitely we could utilize buying at any dips.
Okay, and Kush, views with regard to this interesting space to be in?
Well, I think Mahindra and Mahindra is the only one that we continue to like. We've seen a spike in Maruti. We had also seen a spike in Eicher, but if you see, some kind of profit bookings come about from those levels as well. So need to be a little skeptical on some of these names. The only one that gives some sort of comfort is Mahindra and Mahindra. But again, that is also not from a trading perspective, given the kind of sideways moves that you're seeing, the RSI and the other momentum indicators also going sideways. It's perhaps more of a medium-term bet, but there is a safety net also that comes along with Mahindra and Mahindra. So with stop loss of 2975, about 3000 odd levels, for targets of anywhere higher from 3225 to 3300, I think Mahindra and Mahindra does look like a good buy, but as I said, from a medium-term perspective, not an immediate trading bet.
Okay. How do you find some of these EMS plays at this point, Mr. Chokkalingam? Interesting in terms of the traction that they are gaining with regard to business. But how do you, I know that you're more of the value investor, but how should one view valuations if you were to advise us or our viewers and tell us exactly how should one look at valuations in these high growth companies?
You mean new age companies?
EMS, EMS, Dixon Tech, Keynes Tech and the like.
Yeah, definitely. No, one has to accept, though we are value investors, we have to accept the structural change in two areas, both in terms of new businesses coming into the listed space of stock market, and then a lot of young investors, more than 15 crore investors have come into the market in the last 6-7 years. And since they deal with a lot of digital business activities, they also started liking this new age company. So these are two massive changes. Though, as you said, I have been biased for value investor, but I have looked at, how even person like me to learn from this. So what I learned, I can share. In this kind of new age businesses, the perception outweighs the fundamental. So the one lesson the young investors should keep in mind is not to become victim of the perception. So we saw some of these new businesses in renewable energy, how many young investors have lost 50 to 70%. So one is that is the learning, and second, what one can do, even people like us can make some compromise on the valuation of new age company because of the growth. Now, if you look at a company like say Zomato, so if profit is growing at 100%, and if you are confident of that kind of 100% growth for 1 or 2 more years, then you can give 100 PE. That is level one for conservative young investors who are looking at new age companies. Secondly, even if that is missing, which is the case in many cases, if P is say 100, at least see that the profit is growing consistently for the last few quarters at 50%. So beyond that, one has to keep in mind the kind of risk involved, because if P is 100 and profit is growing at 20-30%, then you may invest, but you should keep in mind that there is enormous risk. So these are the two things: reduce the anxiety and minimize, the role for perception. And second, at least, you see that the profit grows at least 50% of the PE ratio, the trailing PE ratio the company commands. I think one follows these two, enormous risk can be minimized. Even a profit opportunity could be, capitalized.
Fair point. Shifting focus, top 3 stocks on our radar today. Rucha joins in with the list. Rucha.
Thank you, Harsh. I'll start with WPIL, hit an intraday high of about 7%. Now, this is because the European arm acquired 100% stake in MISA, which is based out of Italy. Now, this will help the company expand its business of large pumps supply. Talking about the target company, well, this one is a leading Italian company in the business of large pumping station projects. So, good kind of synergies over here. Talking about the transaction, it is paid entirely in cash. However, amount is not disclosed by the company. Second one is Mazda, which hit an intraday high of about 3.5%. This is on the back of stock split news by the company. The stock split is in the ratio of 1:5. That is, one share of face value 10 will be split into 5 shares of ₹5 each. Record date set on 28th January 2025. Lastly, Equinox hit an intraday high of about 8%. This is after NCLT, that is National Company Law Appellate Tribunal, approved the merger with the Embassy Group, and this news actually came yesterday, after which the stock is continuously buzzing. So these are the top 3 stocks which are buzzing in trade.
Okay, Rucha, thanks for that. Equinox certainly has come off from the highs of the day, but over the last 2 or 3 days, I think it's done reasonably okay for itself. So bear this in mind. You know, it was interesting, real estate and all the updates that came in today or overnight. And I thought Ashiana Housing, that update looked very, very solid. I mean, Phoenix Mills is up because it's a part of the derivative space now. But I think the stock that really did well, based on the updates, is Ashiana Housing, up about 7% in trade. Mr. Chokalingam, do you have any views here?
Yeah, Ashiana House, I looked at it for medium to long term investment. It looks good on the basis of valuation.
Okay. Kush Bora, 7% higher. Can Ashiana do more?
In all likelihood, there is a good possibility, because as we discussed, the stock had a very good run, even before the kind of breakout move that we saw today, from around those 300 odd levels. So for me, Ashiana does continue to impress. As I said, there could be a near-term resistance around the 400 mark, but it could well be, a minor speed bump, rather than a pit stop, rather than a dead end. So I think Ashiana could continue to outperform. If you've got a position, continue to hold. If you don't, then you could still actually consider adding on, because the trajectory is pointing north for this one. The first target will be 400. Once that is taken out, you're looking at a 416 kind of a level as well. So from a near-term perspective, despite the kind of moves that it's made today, on the basis of momentum, Ashiana does look like a good buy from here. Stop loss comes in at 370.
Okay. Any of these names on your list, Shivangi? Something like an Ashiana, WPIL, Equinox. What's the sense coming in? Even something like an ITI, I'd be curious to understand as to where should it go from here. It's up, what, I think 140, 150% over the last 2 months?
Yes, absolutely. There has been a spike in most of the stocks that you just discussed. ITI has also seen like a surge, but there was some sort of rejection at the higher levels. There has been profit booking and declines thereafter. So I think, volumes have obviously added up, but they're, as compared to the other stock, they're, still thin. I would recommend actually, being with the heavyweights as of now, with the markets kind of turning very volatile. So my take would be to be with the safer names and, play this volatile swing this way, rather than being with stocks that have already seen a good spike in the recent near term.
Okay. So those are on some of the other buzzing stocks, but what's buzzing, in fact, under significant pressure is Dixon Tech. Puneet joins in with a bull versus bear on this one. We've spoken and we've taken Mr. Chokalingam's view, but this is going to be an interesting one. Puneet.
Well, thanks for that. So definitely the stock is under pressure today, and while there's not any particular fundamental reasons, we look at what's the bull case as well as the bear case scenario for a stock like Dixon Technologies. While we have seen a strong run up of about 168% in the past year, some correction at a very high valuation is what being seen today. But when you look at the first bull case scenario, is of course the electronic components PLI scheme that's expected to be announced over the next couple of months. There is an outlay of about 25,000 crores that's expected as per media reports, but it will be a beneficiary for something like a Dixon as well as the other players in the EMS space as well, because that's expected to boost margins significantly, and Dixon will be one of the biggest beneficiaries because more than 80% of the revenues come from the mobile segment. And as per a report by Nomura, they have mentioned that additions of components in the mobiles that they manufacture currently will increase EBITDA margin dramatically, and the bill of materials essentially will go up from 11% to 27%, and essentially boost revenues by almost double currently or what they are expecting. But on the bear case scenario is of course the low margin mobile business that is the lion's share of the revenue currently. For FY24 basis, it was almost 80%, and brokerages are estimating this to grow to 88% of their total revenues because of decent growth in the other segment, but the hyper growth in something like a mobile segment as well. So that's going to be one of the key things to watch out for, with the components PLI being one of the biggest positive triggers going forward as well. When you look at the second bull case as well as the bear case scenario, is continuing with the mobile theme, that mobiles are expected to have, that Dixon Technology is expected to have a 30% market share in India for all mobile phones manufactured. Essentially 3 out of 10 mobile phones manufactured will be done by Dixon Technologies, despite having more than 19 players that manufacture mobiles in the country. Apart from that, home appliances segment has been one of the key segments that has degrown, and that's one of the issues because the hyper growth in something like a mobiles has not been followed up by the other segments. Hence, the margins have been around the 4% range of the total revenues. When you look at the third bull case as well as the bear case scenario, it's talking about, a larger share of revenues coming from components going forward. That's what the company has estimated. While on the bear case, they have mentioned that they will not be looking to enter the semiconductor space for any kind of manufacturing. That's something like a Keynes technology is already called out, and that's essentially leaving 50% of any kind of components that are manufactured within any electronic item. So the company has steadfastly said that they will be looking at the non-semiconductor components, which is roughly 50% of the total cost of any kind of mobile phone or refrigerator. Well, they might be restricting themselves to that. They're essentially looking to increase the share from that non-semiconductor component. Finally, on valuations, that is, of course, currently at heightened pressure. But, brokerages are estimating that revenues from the current level of 16,000 crores will go up by 5x to almost 80,000 crores by FY27. That's the biggest bull case coming in. But current valuation at 200 times price to earnings might be pricing in some of that. And if the EBITDA margins don't come through over the next 3 years, that will be one of the key disappointments, because the other players have already moved to a 7 to 8% EBITDA margin price range, while Dixon currently is at 4% because of the high share of mobile. So that's something that we try to encapsulate with the trigger being the electronic components PLI. But essentially, strong revenue growth projected over the next 3 years. Would margins follow is the key question to watch out for.
Well, margins is something we look out for on the fundamental side. We've obviously taken views from Mr. Chokalingam as well. He's spoken about how risks also need to be built into some of these valuations. But Shivangi, let me come to you on some of these names with regard to EMS. Any of them looking interesting on charts, and what's happening today? You're seeing some of these really getting beaten.
Absolutely. We've seen, good names like Dixon, breaking more than 8% intraday. And we've seen that there has been a sharp sell-off in most of the names. Overall, I believe till the time Dixon holds above 16,500, it is still, lucrative to add positions here. This is a level of the upward sloping trend line on the weekly basis. It's also, nearing its 50 daily exponential moving averages, but we will have to, I believe, wait for some more time for this short covering move to again, favor this stock. But overall, this is the strongest out of the entire pack, and this should be kept in radar to utilize at these dips.
Okay. So that's the technical check also coming in on some of the EMS plays. Let's take a short break. On the other side, we're going to get you top buy today, sell tomorrow picks. So stay tuned.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open. on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
And now we're saying we're going to train 10 million people over the next 5 years. As part of the AI mission MOU that we've just signed, we're saying we're going to train 500,000 people. We're going to set up centers of excellence. We're going to build AI productivity labs across 20 NTSIs, the National Tech Skilling Institutes in the country, with the government, to really take it to the grassroots. Don't keep it in Delhi, Mumbai, Bangalore. Really take it to the grassroots and get women developers on it, get our tier 2, tier 3 city developers on it, so that India itself can lift.
Just for the clarity's sake, this is different from the AI skilling of 20 million people by 2025. Is that different?
No, so the announcement we made is 10 million people to be skilled in the next 5 years.
Okay.
And then there's also a MOU that we signed with the AI mission on 500,000 people, which is part of the 10 million commitment. But that we will focus with the government to make sure that we're going after the right areas where we can. That will include public sector officials, that will include teachers across the country.
So on the AI skilling part, how's the impact so far? Like, because it's this year itself, you started already. So how's the impact so far? What is the progress there?
So, in fact, as I said, right, we've trained 2.4 million people already. A lot of them women developers, tier 2, tier 3 cities, and this is stuff that's already happened, and that's the reason you're seeing demand and supply both come up in India, right? So, the impact. In fact, I'll give you just 4 or 5 partnerships that we announced just in the last 24 hours, which I'm super excited about. RailTel is an example, right? Which is saying, listen, can we drive digital transformation across railways in the country, and not just railways but public sector, which is super exciting. Upgrad, which is again another skilling partnership for 3 years. Can we certify people in Gen AI with Upgrad? Mahindra Group, can we take auto, farm, finance, and really transform those sectors? Apollo Hospitals, healthcare, can we build for the world, healthcare for the world out of India? Bajaj Finance, like really drive digital transformation for their large customer base. So all of that is happening, and that's just in the last 24 hours, but a lot more coming.
Incredible. You also kind of mentioned...
Keep going.
You also kind of mentioned that AI models will only be the smarter and cheaper as we go ahead. What will be India's contribution in that?
I actually said they're the dumbest and the most expensive today than they'll ever be, because they're only getting smarter every day and they're getting cheaper. If you just look at GPT-4 now, it's just incredible drop in terms of pricing and usage ability. To your point on what would be India's role, and I think this is the conversation we had with Jitinji and Satya on the stage, and I think the way Satya said, listen, we have an option to reframe what frontier models means. And I think the interesting conversation there is it's not just about building technology, but it's also about diffusing technology and deploying it and driving adoption. So if India can do both, which is let's take the best of what the world's producing, let's make sure that it works in our context. And of course, sometimes we have to build, sometimes we have to use and tweak that, but then also diffuse and drive adoption like we are. And I think that once that cycle comes together, that flywheel will really move us forward.
Absolutely. What making me more curious also here is that, of course, we are all aware about the 3 billion announcement coming in. This is a small chunk in a way out of 80 billion commitment globally. So why Microsoft is not that bullish? I mean, I think
Microsoft is super bullish. In fact, I'm so excited. And by the way, this is just for the next 2 calendar years.
Okay.
And again, we're constantly investing where we're seeing demand signals, where we're seeing ecosystems come together. This is a very specific investment that we want to make over the next 2 years to build data centers, AI capacity, really drive investments in skilling. But I can promise you, given the demand signals, our ability to constantly bring more investments and invest in the right areas to move India forward is something that I'm super excited about.
Also around that AI regulation, government has been talking about. However, they are very clear that there should not be any separate regulation. We are not a governing body as far as AI is concerned. What's your take on that, on the entire regulation aspect of artificial intelligence?
I think when you're building technologies that can change the world, you have to build them responsibly. So I think our focus is to make sure that we build AI secure by design, responsible by default, not as an afterthought. I think the government is very innovation friendly and pro-innovation. In some areas, there might be need for regulation, but we're constantly working with the government to make sure that we provide input, best practices, ideas, like we do. And we also do this with industry bodies and the government. So we'll constantly get this dialogue going and make sure that we bring the best to India.
Sure. As you know that, India has a, track record, has a growing digital economy. Where, how the Microsoft kind of corporation going to have a contribution in the overall transformation in the digital economy, which is really booming in India?
Our mission in India is AI for everyone, and that has 3 parts. One is how do we bring the best of Microsoft, the investments in data centers, technology, people, skilling, Microsoft products portfolio, to really make sure the Indian enterprises, digital businesses, startups, SMBs are getting access to the best technology. That's the first part. Second is do stuff that moves the country forward. Really make a dent. And again, Satya said this right, we have to earn our right to operate in our country every day. And there's no franchise value in tech. You have to constantly build for the country. Third is build India's most diverse, most inclusive technology team. We've got now close to 25,000 engineers in India, but constantly build for the world from India. So that's how we're contributing. These investments are just one part of it. But the impact that we're driving, 800 plus customers on Azure OpenAI, co-pilots I spoke about, there's a ton of momentum that we're creating, and we're super thrilled about it.
Last question I would like to touch upon privacy part of it, especially on the co-pilot. You said it's going to act as a guardian angel and coaches. So what is the privacy angle to that? And also, isn't that a part of entire AI becoming more overbearing?
I hope it's the opposite, which is AI simplifies the clutter and drudgery in our lives and gives us a very clean, calming experience. And I think it will do that. So I don't think it'll be overwhelming. I think to your point around privacy and data, I think just our focus at Microsoft is to uphold data privacy, security, safeguards. Customers have to own their data and control their data, and that's the mission, and that's priority number one. And we're fully focused on that. And as part of every conversation, the way we build our products, the way we deploy them, the way the government conversation that you had, completely focused on that. And then finally, if we bring more intelligence into these tools, we bring more empathy, more agency, they will actually reduce the clutter. In fact, AI's ability to check AI and drive security is incredible, right? So can we bring these AI tools to drive a more secure environment for our customers, much more cleaner, much more simpler, really bring the joy back, really bring the creativity back in our jobs.
Thank you so much, Puneet, for all the, your assessment on the announcement and everything. And thanks for taking out time for us.
Thank you for doing this. Really enjoyed the conversation.
Pleasure meeting you.
Cheers.
Well, right. Mr. Chokalingam, not sure if you caught the entirety of that conversation, but what's the sense like? How best should an Indian investor play the AI theme?
It is too early. I don't think there are many stocks available. Of course, in the early stage, they should be very cautious because we have seen many times in the past a lot of perception created when any company changes the name, and whenever the theme plays out, new theme plays out, there are many small companies change the name and try to exploit. So to that extent, they should be cautious. But otherwise, in my knowledge, limited knowledge, I have not come across any great idea. On the other hand, I see little more risk coming for large IT companies. I think they may create opportunity, they may also create more threat for them. And that's my viewpoint on AI.
Okay, I want to switch focus on Reliance, the big boy firing today. We had a note coming in from Bernstein. Yesterday too, we had views coming through. Earlier this week, we had CLSA also come out with a note. 1520 is the target price that Bernstein has given. 25% upside. Of course, 2% move today. What Bernstein is suggesting is there's a favorable setup in 2025 after what has been a difficult 2024. The recovery is expected across businesses. They're expecting Jio ARPU to go up, plus likely a Jio listing should also unlock some value. Retail to revert to double-digit growth, and increase in GRM margins should aid the oil and gas segment. And the risk reward therefore looks attractive on the back of all of this. At 10.1 times EV to EBITDA, that's a discount to what it has traded at traditionally. Mr. Chokalingam, views with regard to Reliance, is 2025 going to be that year?
Yeah, we have a coverage, we have a buy rating, and I agree with this report to a large extent. Additional point is that the management also said that they believe in doubling the value per shareholder. And towards that end, they already unlocked the value in terms of Jio Financial. Now we can expect Jio Mobile to list and unlock some cash for company. It should be handy for reducing the debt. And also post-budget, I believe the consumption story should get revived. That should be positive for Reliance Retail, because I am of the strong view that the budget would address, enabling the middle class, lower middle class to have a higher disposable income in terms of tax concession. That should give a tremendous boost, and therefore I continue to reiterate my buy recommendation on Reliance Industry.
Okay. Technically, how does it look like, Kush Bora?
Incidentally, just today we've initiated a positional long call on Reliance Industries to our advisory for targets of 340 and 410, stop loss being 1200. So I think that just answers your question, right? So, but turning bullish on Reliance from these levels.
Turning bullish from these levels on Reliance. So that's interesting. Okay. Well, there is more news and updates. Zomato and Swiggy have launched new apps for quick food delivery service that will ensure delivery in 10 minutes. Mahima is here with that. Mahima, sorry, what's new in this? I thought we anyways had 10-minute delivery.
No, so Zomato's Blinkit had a 10 minutes delivery which was launched under the brand name of Bistro, but Zomato food delivery app will now have a separate 10 to 15 minutes delivery. Zomato had earlier scrapped its 10-minute delivery service in January 2023, and Zomato basically the difference between Zomato and Swiggy will be that it was actually in fact a difference. Now it will not be a difference because Zomato has different riders for different apps, and Blinkit Bistro will have a different delivery guy, whereas Zomato will have a different delivery guy, so their cost per user because of this goes up. Now in terms of Swiggy has also launched a new app called Snack for a 15-minute delivery. Swiggy already is delivering in 10 minutes under the brand name of Bolt, but now they are launching a separate app. Swiggy has never before this launched a separate app for different services, but now they are launching a new app. And Bolt remains a separate tab under Swiggy's main app. The new app launch basically shows a change in their strategy. And so far, Instamart, Dine Bolt are all housed under the main app. Now, Swiggy, being an integrated app, had the advantage of having a low cost per user. But now, if they are launching a separate app, it's something that will be a key thing to watch out for will be how they will integrate the services and the delivery guys as well. In terms of the recent 10-minute delivery launches, Ola has also joined the race by adding Ola Dash, the 10-minute food delivery. Zepto Cafe is already delivering in the 10 minutes in 10 minutes in Mumbai and Bengaluru. Swish is another startup in Bengaluru which is delivering in 10 minutes, and Zing is an NCR-based startup which is delivering in 10 minutes. Now, how are they doing this 10 minutes delivery? Basically, Zomato and Swiggy are delivering from restaurants within 2 kilometers, and for Zepto, they have their own cafes from where they are delivering the food. Lastly, some questions here are yet to be addressed, and these questions are how affordable this 10 to 15 minutes delivery is, how profitable this 10 to 15 minutes delivery is, and how sustainable it will be, and how much of a variety can they introduce in this 10-minute delivery platform, and lastly, how competitive will it go from here on. So these are the few questions to be answered, and something to be looked out for once the results and more details come in.
Okay, Mr. Chokalingam, would you fancy a Zomato? Would you fancy a Swiggy?
Personally, I would not recommend investing in either of them, but I have studied both of them.
Okay.
Those who want to invest, Zomato looks better than Swiggy. Fabulous performance in H1. So I just did a sensitivity analysis of the kind of growth it has maintained in Q2. So I extrapolated for FY27. So if it is able to manage to grow, not the same level like Q2, even 100% profit growth for 2 more years, and then there is some justification to buy the stock at this level. So relatively safer than many other new age companies in terms of growth and also in terms of balance sheet strength. There's a lot of cash, nearly 11,500 crore, including the bonds and debentures. So therefore, it makes a lot of sense as compared to Swiggy.
Okay, Kush, your pick.
You mean the app or the stock?
Either. Or both.
For the app, it's Swiggy, but for stock, it's Zomato. It's currently in a bit of a downturn. 240 remains to be a good support zone. If that is held on to, then I think you could see a rebound. So just be on the lookout for the 240 support zone. If that's respected, this could just turn out to be a good buying opportunity on Zomato.
Okay. 250 and counting on this one, so watch out for that. Okay, on to switching stories now. Republican lawmaker Lance Gooden has written to the Biden administration and challenged the investigation of Gautam Adani companies. Let's go across to Vishy, who gets us the detail of this letter. Vishy, what does the letter have to say?
Right, Neeraj. So this letter sent by Lance Gooden, who's a Republican lawmaker from Texas, he has raised questions against the Department of Justice. Especially, this letter is addressed to the Attorney General Merrick Garland of the United States of America. So essentially, what Lance Gooden is saying is that this indictment of Adani Group companies is actually complete abeyance of public outcry. What he's suggesting is that US is better served if the US legal system is focused towards the problems happens within the country, and that any foreign investor or anything which happens in a foreign jurisdiction is not something that the US Attorney General needs to concern themselves with. So in a comment, he has pointed out that such reckless acts of pursuit against its top industrialists could start a harmful narrative against India's growth. He's also saying that not respecting India's authority over this matter could strain and even permanently damage our international relations with a strategically, economically and politically important ally. So, strong words coming in from this US lawmaker. He's essentially saying that the US Attorney General needs to focus on real threats, which are violent crime, economic espionage and the China CCP influence. He's saying that the current indictment is an unwelcome and politically charged atmosphere. It creates that for investors, and that will undermine President Trump's commitment to revive the economy with increased investments. What Lance Gooden is also saying is that given the timing of this indictment, which is coming towards the end of President Joe Biden's tenure and the start of Donald Trump's tenure, it raises concerns that the only true goal here is to actually disrupt President Trump's commitments towards economic growth. And these are all important points, considering that a lot of noise was being made at the time when the indictment was announced. And now within the US, lawmakers themselves are disagreeing whether such an entire process needs to even be done by the Attorney General.
Well, quite a tall thing and a very interesting one. Thanks, Vishy, for bringing this to us as well. They not necessarily be stock moving. I mean, today, because of this, it's not necessary that the Adani Group stocks would be up and active, but keep them at the back of the mind. Really, Kushpora, and any of these stand out today for you?
Adani Enterprises does. Also one of the reasons is that this is the only stock in this table that hasn't really covered up the gap. From when the news came about now that this is out of the window. I think move towards 2,800 cannot be ruled out. But I wouldn't suggest that it's a near-term trade, as you rightly pointed out. Not stock moving. Also, technically, it's stuck in a band between the 20 and the 50-day moving average. But from a medium-term perspective, with the stop loss around the 2350 mark for targets of for eventual, or rather the second target of 2,800, Adani Enterprises yet to cover that gap. So looks like there is a trade to be made here, but from a medium-term perspective.
Okay, BTST, STBT, Kush.
For BTST, I have IFB Industries today. We've discussed this stock somewhere late December. The stock had a very good run. It was consolidating with a negative bias, but that was largely due to the market moves, and it's held on to its own in the sense the 20-day moving average has been respected for the most part when the market's been so choppy, so volatile. Today it's broken up above that 1950, 1975 resistance band on the back of good volumes. I think there are good days to come ahead for this stock. So despite the kind of 4.5-5% move today, I think there's a fair bit of upside left in this. 2055, 2100 are the revised targets on this one. 1955 is where you place the stop loss. The reason I say revised targets is because the last time around we discussed this. The second target was 2020, and it came very close to that today. So it could still be considered for a second target of 2100. Stop loss now 1955.
Okay, so those are STBT, BTST ideas, but Paytm's cracked over 8% in trade now. You're looking at a play with regard to India payments. Paytm might just be the stock to actually go after. But that's according to Bernstein's senior analyst, Pranav Gundlapalli. Here's what he had to say.
See, I think for Paytm and the overall payment space, what we are seeing is a pickup in the payment margins. I think both a stronger volume growth on the UPI front and a stabilization or maybe even an improvement in payment margins is what makes us bullish. And secondly, specifically for Paytm, I think once, if we are to assume that the asset quality troubles bottom out, then Paytm becomes a better way to play that theme because they will be direct beneficiaries of a pickup in the lending disbursals versus, say, a lender like an SBI card, where one would need to wait out for the credit cost impact to play out and then see an earnings rebound. The pickup in disbursals will show a lot faster, a lot more cleanly in the case of Paytm, and hence our preference for Paytm over SBI cards. And even the longer term, we are more bullish on UPI platforms compared to monoline credit card business.
Okay. Mr. Chokalingam, any views on Paytm though? Down today, And I mean, multiple reasons why this could be. I mean, some people are, of course, even talking about how the NPCI data suggests that there was virtually no market share gains for Paytm in the month of December. How do you view Paytm as a stock?
I believe it's a great opportunity to book profit for those who are like it.
Sorry, great opportunity to
book profit at
to
current
book
level.
profit. But sir, it's down 8% today. So today is actually not a great opportunity, right? It's down 8% today.
No, I am not talking about intra-week trader.
Okay.
There are a lot of people who bought around 360 also. So it's a great opportunity because as you also mentioned, the December numbers were not impressive. And secondly, I also saw the proposal of getting into lending, all that. And look at the banks and credit card companies with a branch network with a lot of relationship managers. Of late, they are struggling in minimizing the NPA. So the NPAs has been growing in unsecured credit segment. So I am not that confident that digital company can make much better progress than the traditional lenders. So therefore, I would give a sell call on Paytm.
Sell call on Paytm. Kush, Paytm, your view?
I'm actually looking for a buying opportunity on this one on declines. The reason being that the stock had a practical one-way run from that 350 mark and almost about 1050 odd levels. It had hit without any kind of major speed bumps. So, and there were negative divergences cropping up. There was the overheated territory that the stock had reached, and also being in the derivative segment, the 1000 call option was also starting to act up. So there were a few technical reasons, coupled with the fact that, as I said, the stock had a vertical rise. So some profit booking was par for the course. Now a strong support zone for this one comes in at 850. This is a level which stock had respected, somewhere in the July of 24 before, breaking down. So again, that level will act up. Also, there is a rising channel support which comes in. So again, the level comes to 845, 850 thereabouts. So as long as that level is held, I think the stock will perhaps resume its uptrend. If that is broken, then perhaps you're looking at a near to a medium term kind of a downward move. But up until that is held, I think this is more of a profit booking dip, after this stellar run that the stock has seen.
Okay, so some bit of profit booking after the strong run the stock has seen. That's the technical view coming in. What to watch out for tomorrow? US crude oil inventory will come through. Data with regard to US unemployment claims, vehicle sales, as well as US's FOMC minutes of the last Fed meeting. Mind you, focus will very quickly shift to this month's Fed meeting as well. You have China CPI as well as PPI data which will also come through, and some of those macro factors need to be looked at. But Kush, let me come to you with regard to another stock which the heavyweight HDFC Bank down 1% now. What's the sense like on charts on this one?
Well, now it's a bit of a near-term concern, and the reason being that while 1800 to 1700 was the broad band, which the stock was respecting, today it's broken below that and below the 20-day moving average as well. So that's the first technical sign of worry, so to speak. Now, if we do see a bit of a rebound in the next couple of days, then perhaps this will just be a flash in the pan kind of a dip. But if we do sustain below the 1700 mark, 1710 mark for some time, I think that the stock could head to 1645 levels also. So right now, I'll be a little watchful on this one. We are constructive on HDFC Bank from a 6 to a 12 month kind of a perspective. But any fresh buying should be initiated once the stock stems this fall and shows some kind of profits. So I will wait and watch. If these support zones are held, about 1700 is reclaimed, tomorrow, maybe day after, then perhaps this could be a near-term buying opportunity. Otherwise, 1645 is the next support zone to watch for.
Understood. Okay, we're just about a minute away from close. I'm going to thank both Kush as well as Mr. Chokalingam for joining us this afternoon. Thank you so much, gentlemen, for giving us all of those views. Quickly on to the Nifty. Let's have the intraday chart right up, and we'll see how we're closing in at. Oh well, we've seen a very decentish recovery intraday. From those lows, we've done fairly well for ourselves, and we've done nearly 300 points now. 200 points nearly from the day's lows on the Nifty. So not bad at all in that sense. Let's look at the heat map, and likely the same candidates will crop up in terms of the gainers and the losers. Well, the breadth definitely has improved on the Nifty, but you look at some of the losers. largely the same names where we started this show. Apollo Hospitals now down 4%. ONGC, the winner. ITC up 2% now. Asian Paints also doing fairly well. So some of those counters are doing well. IT, well, TCS up nearly 2%. Reliance up nearly 2% as well, the heavyweight. Let's pull up the contributors, the major ones on the Nifty. And there you go, TCS now suddenly featuring because of that spike. Let's pull up the Nifty IT, see how that has gone about intraday. We've closed for the day. Well, that's the spike. Nifty IT has done ever so well from those lows, around 0.5% higher on the Nifty IT. Let's pull up the Nifty Bank as well intraday if we can have a look at it before we move on. Well, not much of a move on the Nifty Bank. So it's actually an IT-led rally today. It's some of the IT stocks which have contributed to gains on the Nifty 50. Let's pull up the sectoral heat map before we look at advanced decline, move to broader markets, because we've seen some bit of recovery there as well. So 0.5% on the IT, 0.5% on FMCG. So both of those doing fairly well for themselves. Outside of that, you have pretty much most indices languishing. The India VIX has calmed down a little bit after yesterday's move, as well as day before yesterday's move. The metal index is down 1% or thereabouts. The Nifty Bank is around 0.75% lower, and Nifty Auto, where we started at least the 2 p.m. show, is 0.5% or so lower. Let's pull up the advanced decline, look at the breadth, whether there's been any improvement there. There has been clearly a bit of improvement for sure towards the fag end of the day. The Nifty mid cap, if we can, intraday, and we likely have seen a bounce from those lows of the day. We have a little bit, 1% lower on the Nifty mid cap, the Nifty small cap as well, similar kind of a move, but far lower in terms of the bounce, around 1.4% lower on the Nifty small cap. So pain yet there, especially at the broader end of the spectrum. Let's look at the BSE 500 top gainers, top losers. Those are some names for you. Credit Access doing well along with some MFI plays. Dixon seeing some real pain in trade, but you look at the broader end and you look at some of the losers here. 8% on Paytm, 8% on Apar Industries, 8% on Dixon. KEC International down 7 despite a 1,000 crore order win. Jubilant down 6 today. Sobha down 6 after that update. So really some big movers in trade today. But stay tuned, more action on the other side. For now, from Neeraj, myself, everyone who puts the show together, thanks so much for watching and thanks for staying tuned.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Years of history of being in the technology, and being so different, we really need to approach it differently. So from productivity, you said, the framework in my mind is learn it,
use it and build it, because many people talk about AI, but do we really know ins and outs of that AI? So we are spending a lot of energy and time to ensure that every employee gets skilled on AI. And that's one of the reasons why Microsoft actually is committing to do AI skilling about 10 million in the next 5 years or till 2030, right? Because we really value the skilling need of AI because it's a new technology. Second is you have to use it and you have to learn it, just like any other technology. So we are encouraging our employees to learn and use AI tools, whether it's for writing code for GitHub Copilot, for example, or for even testing. GitHub Copilot can help you with that. And then, of course, as an engineering team, we need to leverage this product to build AI and do more AI. And that's where we are building, for example, the Copilot. So that's what framework we are using.
Absolutely. Talking about skills, very important announcement today only by the Microsoft about, skilling 5 lakh students and teachers by, 2026. So what's your take on that? How that will help in shaping the AI infrastructure in India?
Yeah. See, as I was telling before, it's so new that we all have to have this mindset, growth mindset, which is you have to learn it all now, not know it all, because what you thought we know is not very useful moving forward in technology. So we are very committed to doing 5 lakhs or for 1 year, 2026, but really our bigger umbrella is 10 million skilling 10 million people in the next 5 years by 2030.
Adding to that, are you already seeing the impact of skilling?
Yeah.
Because that is the requirement, as far as AI is concerned.
No,
are you seeing the impact on ground?
Yeah, I am seeing. In fact, just 2 weeks back, I met somebody, an employee in Microsoft, who was part of our CSR skilling. She got a job in Microsoft because she took the AI skilling for security. That helped her develop the interest. Then she went and did more skilling on her own. So these are all like what we are doing, maybe it's 101, the first level. But that creates interest for people to go learn more. And now she's employed in Microsoft. This is a real example. So I was real story, actually, yeah.
Sure. You've been with the Microsoft for over 25 years. So what are the biggest lessons you have sort of learned about fostering technological innovation in terms of fast evolving market like, digital economy, or you can say artificial intelligence? What's your lessons?
No, this is a very, very deep question, and I do that for a living. So I will share I would say there are 3 learnings, especially for a profound technology like generative AI. Number 1, you have to begin with understanding the customer. And understanding the customer, where you are one with the customer, you know exactly what she needs and what her unmet needs are. That's the beginning. Then you have to understand the technology so that you can use the technology to solve it. That's the first bucket. The second bucket, I would say, is the following. Every technology that has existed will get reimagined in the face of AI. Every technology. Every solution that you use, you can reimagine in the AI way. Second, new solution will get built that was not possible ever. So I think that is exciting as an engineer to me, right? And third, I think that's where I think the trick is. The good or bad news that nobody knows what's going to work because you're so new. So what you have to do is fail fast. Look at the customer need, look at the technology, build something. Let the users use it and pay attention to whether it's working or not working and iterate fast. So failure is okay. And then you have to slowly evolve it to reach what I would say as a technology person, product market fit. That is the journey, or that's the script I would say that all of us need to just embrace.
Absolutely, but being a technology person, you are into product development.
Yes.
I'm understanding as far as my understanding goes.
Yeah.
But how are you seeing in terms of the whole hot debate around privacy, around the regulations?
Yeah.
What's your take? Since you are the part of the entire journey, how are you seeing that?
No, that's a very good question, and we take that privacy and your data very seriously. We as Microsoft, we really believe that your data is something that you own and you should control. And that's why we want to make sure that our products gives the end users the control of managing their data. And in fact, we so strongly believe it, we are a big advocate for transparency. We have to make the use of the data very transparent to the user so they can make the right decision whether they want to use this or not. So as a company, we absolutely are committed to ensuring privacy and your data is yours.
What makes Microsoft stand out in comparison to other corporations? Since again you are with the company since the beginning.
Yeah.
What makes it like different from the other tech giants?
I'll tell you why I feel today I'm as excited of working in technology as the first week, by the way, because I would say there are three things that really stand out for me. Number one, Microsoft gives all the employees a platform to have global impact. The things we build, every citizen in this country, 140 crore, has the power to use it. And I think that is very satisfying. That's, I think, is one, the impact I can have. The second is the kind of technology I get to work with. In the 30 years that I've been here, almost there has been a dozen changes in the technology. I started with CC++, went into building applications, then distributed computing, then internet, then cloud and mobile, now AI. So every 3 years, it seems like I am a student. Right now, by the way, young kids from college who's coming out and joining myself is teaching me how to build LLM. And I love it because every day I learn something new. I feel great because that gives me the satisfaction. I'm a better engineer, better human being that day. So that keeps me going.
Thank you, Rajiv, for sharing your incredible journey, and pleasure talking to you.
Thank you so much. Thank you.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
You're watching Market Express, a bit-sized wrap of all the news and market action today, and I am Aditya Rao. Let's get straight into the show with market updates. Nifty recovers nearly 200 points from the day's low but fails to end the day in green. Nifty closed largely flat below 23,700 mark, while Sensex managed to remain above 78,000 mark with a flat closing. Most sectoral indices end the day in red. Pharma, financials and banks were the top losing sectors. However, Nifty Oil and Gas and IT, along with the FMCG, ended the day with gains. Nifty Oil and Gas was the top sectoral gainer for second day in a row with over 1.5% gains. The Nifty IT posted a stellar recovery from the day's low, leading the recovery in benchmarks today. LTI Mindtree, TCS, HCL Tech were the top IT gainers. There are a bunch of new launches in the hotly competitive food delivery space. Segment leader Zomato launched a 15-minute food delivery service in some locations like Mumbai and Bengaluru. This is more or less a relaunch of a service that Zomato had shut down 2 years ago. Zomato is competing with Swiggy's Bolt, Magic Pin and Zepto Cafe, but the strategy is still unclear. Because just last month, Zomato's Blinkit had introduced a 10-minute food delivery service called Bistro. Later in the day, Swiggy also announced that they have launched a separate app called Snack for quick food delivery. This is likely to be a rethink strategy since its quick food delivery service Bolt is already available as a tab within the Swiggy app. To an anticipated launch now, India's largest car maker Maruti Suzuki is set to unveil its Made in India for the World SUV e-Vitara. The vehicle production will commence at Suzuki Motor Gujarat in the spring season of 2025. The model will compete with the Tata Curve EV and MG's ZS EV. The company unveiled its first electric SUV e-Vitara in Milan. M&M is not far behind in the EV race. The company has announced pricing for its new electric vehicles. The top variant of BE6 is priced at 26.9 lakh rupees and XEV 9e top variant costs 30.5 lakh rupees. Booking for both the models will open on February 14th, with deliveries expected to begin by March 2025. Market regulator SEBI has pulled up Ola Electric for announcing its expansion plans on social media before informing the exchanges. SEBI has sent a warning letter to Ola Electric over timely disclosures. Ola Electric CEO Bhavesh Agrawal announced company's expansion plans on social media platform X.com on December 2nd. The company shared information with the BSE and NSE later during the day. The actual expansion took place on December 25th. The World Economic Forum predicts that by 2030, 22% jobs will be disrupted, but 170 million new roles will be created. This amounts to a net gain of 78 million jobs. The fastest growing jobs will be in technology, data, AI, and core economy roles like delivery, care, education, and farming. However, the skill gap remains a major challenge, with nearly 40% of the jobs with the skill set to change, highlighting the need of both tech and soft skills in the future job market. Dennis Coates, the founder of Bet365, an online gaming company, becomes UK's richest businesswoman. This is despite a 45% pay cut. Coates encashed £150 million last year in the salary and dividends. She owns 58% stake in Bet365, which equals to £64 million. Despite the sharp drop in her earnings last year, Coates' compensation remains far ahead of many global CEOs. NSE announced that it will launch futures and options contracts for 6 more securities starting January 31st. The newly included securities for trading are Castrol India, Gland Pharma, NBCC India, the Phoenix Mills, Solar Industries India, and Torrent Power. Last month, the NSE had announced the exclusion of futures and options contract for 16 securities. Signature Global recorded its highest ever 9-month pre-sales at 8,670 crore rupees in the first 9 months of FY25. There has been a 178% increase in the company's pre-sale on a yearly basis. With this, company has achieved 87% of its sales guidance of 10,000 crore rupees of FY25. Most of the pre-sales have come from successful launch of projects in Gurugram and Haryana and more. Tata Steel's crude steel production increased up to 6% in Q3 FY25 at 5.68 million tons. This is soon after the company started operations of new blast furnace at Kalinagar, Tata Steel's India deliveries also increased by 8% on a yearly basis to 5.3 million tons. Now, this was aided by steady sales in the domestic market and strategic presence in the exports. Shares of Shobha Limited dropped by over 3% after its Q3 business update. Year-on-year total sales fell 29% to rupees 1,389 crore from rupees 1,952 crores. However, total sales rose 18% as compared to the previous quarter. The sales value also dropped 28% to 1,250 crore but increased 27% on sequential basis. Indian Banking Association and Finance Industry Development Council have suggested certain taxation reforms to the Government of India at a pre-budget consultation. Sources told NDTV Profit that the suggestions have been made with an aim to reduce operational burden on the lenders. IBA is a key representative body for banks, while FIDC represents non-banking financial companies. The banking industry body has asked the government to exclude banks from the ambit of paying tax deducted at source or TDS on certain transactions. The gems and jewelry sector seeks a 1% reduction in the goods and services tax based on revenue equivalence ratio. The demand for reduction in GST is aimed at easing the industry's cost burden in the upcoming budget. All India Gems and Jewelry Domestic Council Chairman Rakesh Rokre said that the rationalization of taxes is needed to support the business. Government's pre-budget exercises kick off in full swing. The Commerce Ministry makes a pitch to boost the domestic EV industry. The government believes that the need to address apprehensions regarding affordability and efficiency of EV infra. Remember that EV industry is demanding infrastructure status for a very long time now. Let's take a look at few brokerage calls now. HSBC has retained a buy rating on Bharti Airtel with a target at 1,940 rupees and an upside of 22% potential. The brokerage firm expects dividend of the company to rise by 114% in FY25. The estimated dividend per share to increase by 4 times to 34 rupees by FY27. Growth levers of the company are intact and average revenue per user is rising. More people are opting for broadband connections. Jefferies is bullish on the auto space. The brokerage firm has retained a buy rating for several stocks like M&M, Eicher, Hero MotoCorp, Bajaj Auto. The brokerage firm prefers two-wheelers and tractors and expects the two-wheelers and tractor volumes to grow at 13 to 15% CAGR. The brokerage firm top picks are M&M, Eicher and TVS Motor. Goldman Sachs has a positive call on FMCG major ITC. It has given a target of 500 rupees on the stock post the demerger adjustment, which was earlier 525 rupees. Goldman likes ITC's investment thesis, which is based on a steady recovery in cigarette business profit. Goldman highlights some risks like alternative cigarette products, regulatory restrictions on cigarettes. It also believes that lower than expected margins of FMCG business is a key challenge for the company. Dr. Reddy shares gained today after Nuvama upgraded its rating to buy with 14% upside potential. Investors are worried about the loss of its Revlimid patent, which contributed 40% to the FY24 operating profit. To reduce the impact, the company plans to cut R&D spending and launch new products. These steps are aimed at offsetting 80% of the revenue loss. Motilal Oswal remains optimistic about India's growth story in the medium and long run. It remains biased towards large caps with a 76% allocation. It is overweight on BFSI, IT, industrials, healthcare and real estate. It is underweight on oil and gas, cement, automobiles and metals. L&T's heavy engineering arm secures multiple orders in Q3 across domestic and international markets. The overseas market order is for LNG equipment in the USA. The company bags orders in Saudi Arabia and Kuwait as well. Domestically, the company signs 3 urea reactor orders, establishing presence in the fertilizer space. NTPC Green ends higher. The company gets a project of 1,000 megawatt capacity from Uttar Pradesh Corporation. Additionally, it incorporates a new joint venture called NTPC UP Green. The company even signs an MOU with Bihar government. The MOU is for renewable energy projects and green hydrogen mobility services. GMR Power gets order to install, integrate and maintain 75.7 lakh smart meters across various zones in Uttar Pradesh. The project is worth 3,467 crores. Smart meters order will be executed by GMR Smart Electricity Distributions in partnership with Bosch Global Software Technologies. The order will be funded via debt, equity and internal accruals. IREDA has also sanctioned rupees 2,128 crore loan for the project via 3 SPVs. The shares of United Breweries fell over 7% following the announcement that it would suspend the supply of beer to Telangana. UBL contributed 4,500 crore rupees to Telangana's annual revenue. United Breweries is known for its flagship Kingfisher brand and is one of the largest brewers. The company urges Telangana government to take swift action and ensure availability of products. M. Narayanan is said to be the new ISRO chairman. Speaking to NDTV, he says that he hopes to take ISRO to greater heights, and Narayanan played a key role in India's development of the cryogenic engine. He will also be working as the Secretary of Department of Space, and he will have a tenure of 2 years. Delhi continues to shiver and the temperature is likely to dip even further in the national capital. IMD expects the temperature to drop as low as 6 degrees Celsius. Thick fog continues to disrupt transport and daily lives of the residents. Over 300 flights were delayed yesterday. Delhi Airport has also issued an advisory of aircrafts amid the low visibility concern. And not just Delhi, a cold wave warning has been issued for various parts of North India. Trump has threatened to use economic force to make Canada the 51st US state. Trudeau retorted with a fierce reply on X.com, promptly shutting down the threat. In other news from Canada's political turmoil, since the resignation of Justin Trudeau, politician Anita Anand is being considered as his replacement. If elected, she will be the first woman of Indian descent to become the Prime Minister of Canada. And that's a wrap on Market Express today. Stay tuned to NDTV Profit for more news and updates. Lots more coming up.
The world of capital markets and trading post-Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay.
Benchmarks end flat, fluctuating in the last hour. IT stocks help recovery from day's low. All sectoral indices barring oil and gas, FMCG and IT end with losses. Broader markets underperform benchmarks. Competition heats up in the food delivery race. Zomato and Swiggy both join the food delivery race with new apps for quick service that will ensure delivery in 15 minutes. Republican lawmaker Lance Gooden writes to Biden administration, challenges probe into Gautam Adani's companies, says such reckless acts of pursuit against its top industrialists could start a harmful narrative against India's growth. Microsoft to partner with the government on skilling 5 lakh students and teachers by 2026 to also establish an AI Center of Excellence to promote rural AI innovation, says Satya Nadella during his Microsoft AI tour. Ahead of Davos, World Economic Forum predicts disruption in 22% of jobs by 2030, but 170 million new roles will be created. However, the skill gap remains a major challenge, with nearly 40% of job skills set to change. Ola Electric in hot water again. SEBI pulls up company for announcing expansion plans on social media first and not on the exchanges. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahugna. For the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, benchmarks ended flat, fluctuating in the last hour as IT stocks helped recovery from day's low. All sectoral indices barring oil and gas, FMCG and IT end with losses. Broader markets underperform benchmarks. Harsh is here with the wrap of all the action on the bourses.
Well, muted day for markets, to say the very least. We were around 0.1% lower at close, but that's not how the day transpired. Let's pull up the Nifty index intraday, and we'll see a 200-point jump from the low of the day. So we really saw a jump, and therefore we've done well. It may seem better than what one would have expected halfway through the day. Let's look at some stocks which have done well. Let's pull up the Nifty 50 heat map, and IT stocks really turned a corner midway through the day. RIL did well for itself. ITC was up 2% as well. Some auto names, something like a Maruti, was standing out, but outside of that, the breadth of the market, at least on the Nifty, was even Steven in that sense, which is much better than how the larger market fared. Let's look at the contributors and thereafter quickly move across and look at the Nifty IT, because that was a big recoverer in trade. Those are some contributors for you. HDFC, ICICI, the top laggards, but outside of that, IT as well as Reliance with a little bit of ITC contribution aided the index. Let's pull up, as I did mention, there you go, Nifty IT. Those were the type of gains that we saw on the IT index. Let's look at the Nifty IT intraday as well. From the bottom, it has done very, very well for itself in trade. There you go. That was what led the rally today. 0.6% higher from the lows of the day. So again, positive with regard to where IT is concerned. But let's look at the advanced decline ratio, the breadth of the market, because that improved midway through the day again, and therefore let's look at the Nifty mid cap as well as small cap intraday. The Nifty mid cap closed around 1% or thereabouts lower, so off the day's lows for sure, but the Nifty small cap, just no recovery there, and that's how it's played out. The BSE 500 top gainers, top losers. Of course, the market largely muted on the back of GDP, which was a tough number, as well as global cues, which were not favorable, at least in trade today. Those are some big movers in trade today, both sides, positive and negative.
Viewers, IT sector is all set to kick off the earnings season this week with TCS. The sector is expected to report strong revenues on the back of banking and financial sector vertical. Additionally, wage hikes and rupee depreciation is likely to impact the sector's Q3 earnings as well. Rucha joins us to now tell us what the street is penciling in from the pack. Rucha, take it away.
Yes, TCS kicks off the third quarter earnings season by reporting tomorrow. Let's look at what to expect from the IT space. Number one is BFSI, that is the banking sector, is expected to support revenue growth. Now remember that most of the management were talking about how banking is reviving. Number two is the wage hike, which could affect margins of companies like Wipro, Infosys, as well as LTIMindtree. However, Infosys, whether they will come out with the hikes this time or postpone is what we have to look out for. However, depreciation of rupee against dollar is expected to help margin. Remember that rupee hit a record low, so this could also aid the top line of IT companies. But furloughs are expected to impact the top line as well because of lower number of working days. So this one might negatively affect. So we'll have to check whether furloughs are the same as the same time last quarter, or a little bit of more is what we have to watch out for over here. But let's move on to what are the particular elements to be watched out for in the companies. Infosys HCL Technologies guidance for FY25. Yes, this one is to be watched out for. Third quarter guidance of Wipro, demand trends as well as discretionary spending uptick. Remember that discretionary spending was still under pressure as mentioned by Accenture. So yes, what the Indian IT companies are talking about, this will be a key thing to watch out for. But also green trends in the BFSI space, of course, but green shoots in consulting business. Now, this one will be important for Wipro because remember that Accenture mentioned about how consulting is picking up for them. So this might be very important for Wipro. And lastly, yes, hiring, wage plans, as I had talked about, and management's perspective on how Trump policy changes would affect them. So this is what we'll have to hear from the management, what they are expecting and what could likely be the impact for them on the top line and the bottom line. This is a key picture of the earnings calendar. TCS tomorrow, HCL, Infosys and the other companies next week. HCL, Infosys on the same day, and Tech Mahindra and Wipro as well on the same day. So busy week, busy time next week is what we expect from the IT season.
Absolutely, Rucha. Busy. It will be a very busy week from the next week onwards. So now the new administration change in the US will be beneficial for Indian IT is what Moshe Katri of Wedbush Security believes. Listen in.
In general, the sentiment is probably a bit more positive. A lot of this is a function of the fact that you have a new administration that's coming in. They're probably going to be a bit more business friendly. So the sentiment is important here. The quarter should be fine. And obviously you have some recent movements on the FX side that should help margins. These are going to be tailwinds for margins. That's going to be a positive. But you're dealing with other things, right? There's some debate about H-1B visa programs. What does that mean for the sector? Are we going to go through a cap? That could be an issue down the road. The macro itself remains pretty fluid, right? In terms of economic activity, the policy of the new administration. So, as you said, there are a lot of different factors that you really have to kind of incorporate into the sector to kind of get a feel on what happens during the next 6 to 12 months. But I would say net, despite this fluid kind of situation, I would say, compared to last year, we seem to be in better shape in terms of pipeline activity, focus on discretionary spend. These should be, I would say, favorable for the next 6 to 12 months.
Viewers, Republican lawmaker Lance Gooden has written to the Biden administration and challenged the investigation of Gautam Adani's companies. Let's go across to Vishy, who gets us details of the letter.
So this letter sent by Lance Gooden, who's a Republican lawmaker from Texas, he has raised questions against the Department of Justice. Especially this letter is addressed to the Attorney General Merrick Garland of the United States of America. So essentially what Lance Gooden is saying is that this indictment of Adani Group companies is actually in abeyance, complete abeyance of public outcry. What he's suggesting is that US is better served if the US legal system is focused towards the problems within the country, and that any foreign investor or anything which happens in a foreign jurisdiction is not something that the US Attorney General needs to concern themselves with. So in a comment, he has pointed out that such reckless acts of pursuit against its top industrialists could start a harmful narrative against India's growth. He's also saying that not respecting India's authority over this matter could strain and even permanently damage our international relations with a strategically, economically and politically important ally. So strong words coming in from this US lawmaker. He's essentially saying that the US Attorney General needs to focus on real threats, which are violent crime, economic espionage and the China CCP influence. He's saying that the current indictment is an unwelcome and politically charged atmosphere. It creates that for investors, and that will undermine President Trump's commitment to revive the economy with increased investments. What Lance Gooden is also saying is that given the timing of this indictment, which is coming towards the end of President Joe Biden's tenure and the start of Donald Trump's tenure, it raises concerns that the only true goal here is to actually disrupt President Trump's commitments towards economic growth. And these are all important points, considering that a lot of noise was being made at the time when the indictment was announced. And now within the US, lawmakers themselves are disagreeing whether such an entire process needs to even be done by the Attorney General.
Right, Vishy. Thanks for that. Now, Ola Electric receives SEBI warning over disclosure violation. The regulator pulls up the EV maker for announcing expansion plans on social media first and not on the exchanges. Tushar is joining us with more details on this.
Exactly. What has happened was on 2nd December at about 9:58 a.m., Ola's Electric's founder Bhavish Aggarwal put out a message on X, formerly Twitter, about the expansion plans of the company to grow the number of stores by fourfold by December 20th. But the stock exchanges were informed about 4 hours later in the afternoon. That has not gone down well with SEBI. The market regulator actually said that this is in violation of the listing and disclosure norms that the market regulator has. Remember, Ola Electric listed only earlier this year in July. And it's only been a few months since it has become a listed stock. But again, these are the certain criteria that every listed company has to follow in India. So that's something maybe the company has to learn. In a related development, Ola Electric has received a relief of sorts from the Karnataka High Court about sourcing of the document that the CCPA had asked from the company. Now Ola Electric has received about 6 more weeks to give these documents to the CCPA as per the Karnataka High Court. So a good news and a bad news, but we see that the stock is reacting much more to the bad news relating to the company.
Absolutely, Tushar. Now, Maruti Suzuki is set to unveil its Made in India for the World e-born SUV e-Vitara at the Bharat Mobility Global Auto Show 2025. Puneet is joining us with more on this.
While Maruti has been late to the party, it's better late than never specifically. While the pricing is one of the major things when you speak about any kind of launch from Maruti Suzuki, this might be more of a premium launch on the SUV side. That's what's expected. And while we've seen other launches which you discussed in the morning of M&M as well, with the Born Electric EV starting at around 18.9 lakhs, the curve is at 17. MG is a price between 13 and 17. So somewhere in the middle is where Maruti would want to find its sweet spot. Apart from that, the company's also unveiled E4Me, which is a vision for their electric vehicle future in the country as well as for the world. This will be, of course, a comprehensive infrastructure also for its electric vehicles, and this is what is expected from something like a Maruti Suzuki, because they not only build a car, they want to build a whole infrastructure around it, and that's what's expected from this particular launch as well. This was, of course, this will be the first strategic showcase of the the electric SUV in the country. Just for some context, Suzuki Motors had unveiled this first electric SUV e-Vitara in Italy in Milan Auto Show. This, of course, is expected to go for mass production in spring of 2025. And the e-Vitara has also developed a new platform which has been developed by 3 global companies, which is, of course, Suzuki, Toyota, as well as Daihatsu Motors, all 3 of course from Japan as well. Now, this will be, of course, competing, as I mentioned, with the Tata Curve as well as the Mahindra Mahindra & Mahindra, the Dawn Electric as well as the XEV9, as well as MG in a very big way, and is also expected to rival, Hyundai Creta, which is also expected to launch in this particular time. But as you rightly said, the pricing will be one of the key factors to watch out for.
Thanks, Puneet, for that. Now, Mahindra & Mahindra has unveiled a new EV and battery assembly facility at its plant near Pune, marking a significant step in its electric overdrive. Spanning a large portion of the 2.83 square kilometer Chakan plant, the EV hub is powered by over 1,000 robots for highly automated manufacturing. It features an automated press shop, an AI-driven body shop, and a robotic paint shop. M&M's first electric origin SUVs, the BE6 and XEV9e, are being assembled at this facility. Mahindra & Mahindra is upbeat about its new electric vehicles, the BE6 and the XEV9e. The company has announced prices for the top variants of both. NDTV's Anirban Mitra caught up with Vijay Ram Nakra of M&M and found out the rationale behind higher pricing and the attractive EMI options the company is offering for new cars.
As we did that, we also were mindful to say if we want to democratize this and get maximum customers to own it, then we need to make it affordable even in terms of purchase. And hence the pricing. And number two, equally important, when 85-90% of vehicles today are bought on finance, what we ensured is we came up with a fantastic finance package offering from Mahindra Finance that allows the customer to buy these products, the Pack 3, at the same EMI as you would pay to buy the entry-level Pack 1. So you get the high-end product with all the features, the best range, but at a very affordable EMI, which you would pay for Pack 1.
Viewers wondering what to order for a quick pick-me-up during an office break? Well, now you have two more options to choose from apart from Zepto, Cafe, Bolt and the existing others. Zomato and Swiggy have joined the food delivery race with new apps for quick service that will ensure delivery in 15 minutes. Let's go over to Mahima with more on this.
Right, so both Zomato and Swiggy were already, ordering within the 10-minute delivery time frame. But now what Zomato has done is, Zomato has launched a 15-minute delivery service via its Zomato app. Prior to this, Zomato's Blinkit had launched a 10-minute food delivery service under the brand name of Bistro in the last month. Zomato had scrapped the 10-minute food delivery service in January 2023, and now that Zomato is launching this, Zomato has different apps for different services. And hence the riders for different apps are also different, which is why the cost per user for Zomato, is kind of higher as compared to Swiggy. Swiggy, on the other hand, has launched a new app called Snack, which will deliver food in the 15-minute time frame. Swiggy already offers quick food delivery via Bolt on their integrated app. Bolt remains a separate tab under its main app. A new app launch shows a change in Swiggy's strategy. Swiggy has never separated its app like Zomato does, but now it has launched a new app under the brand name of Snack. Till now, Instamart, Dine Out, Bolt were housed under the main app. Swiggy had a cost per user advantage because of its integrated app, because the riders were common across all different services, which it might now lose. Moving on to the recent 10-minute food delivery launches, well, Ola started a 10-minute food delivery launch via Ola Dash. Zepto Cafe already delivers in 10 minutes. Swish is a Bangalore startup that delivers in 10 minutes. And lastly, Zing is an NCR-based startup which also delivers in 10 minutes. Next, moving on to how does this 10-minute food delivery work? Well, Zomato and Swiggy both deliver from restaurants within just the area of 2 kilometers, and Zepto, on the other hand, has its own cafe from where it delivers. Lastly, there are a few questions with respect to this quick 10 to 15 minute food delivery need to be addressed. That is, first one being how affordable this delivery is, how profitable this delivery is, how sustainable it will be, and how much variety can one get within a time frame of 10 to 15 minutes. And lastly, how competitive it will be, because everybody is kind of racing into the 10 to 15 minute food delivery space.
Right, Mahima. Now with that, Microsoft Chairman and CEO Satya Nadella announces cloud and AI-led strategic partnerships with the government. The company is also collaborating with the Ministry of Electronics and Information Technology under the India AI mission, which aims to position India as a global leader in artificial intelligence.
is our mission to empower every person and every organization in India to achieve more. And in order to do that, even if you have the technology, ultimately, it is about being able to scale the human capital, right? The scaling laws of technology is one thing. It's about scaling of the human skills in any community, in any country, is the most important thing to be able to harness that, right? So that's really what our goal is, and it's great to see, the LinkedIn data shows tremendous progress around skilling that's already happening around AI in India. We were very excited yesterday to announce that we are going to train 10 million people by 2030 around AI skills. And today, I'm really excited to announce with the Ministry of Electronics and IT that we are going to do skilling of 500,000 rural population around AI skills. And I think that idea of inclusive growth is fantastic to see. So that's really a little bit of a broad view of these three platforms and what I think it'll entail for India as an opportunity to have real impact across the length and breadth of this country, across every sector of this economy, and we are deeply committed to that progress and to that impact.
Viewers, on the sidelines of the blockbuster announcement of Microsoft's $3 billion investment in India, my colleague Shrimi caught up with Puneet Chandok, president at Microsoft India. And he said India today is one of the most exciting markets for artificial intelligence, and that we are the talent capital of the world when it comes to AI. He also spoke on government's regulation on AI. Let's listen into a slice of that conversation.
I think Microsoft is super bullish. In fact, I'm so excited. And by the way, this is just for the next 2 calendar years.
Okay.
And again, we're constantly investing where we're seeing demand signals, where we're seeing ecosystems come together. This is a very specific investment that we want to make over the next 2 years to build data centers, AI capacity, really drive investments in skilling. But I can promise you, given the demand signals, our ability to constantly bring more investments and invest in the right areas to move India forward is something that I'm super excited about. I think the government is very innovation friendly and pro-innovation. In some areas, there might be need for regulation, but we're constantly working with the government to make sure that we provide input, best practices, ideas, like we do. And we also do this with industry bodies and the government. So we'll constantly get this dialogue going and make sure that we bring the best to India.
Ahead of Davos, World Economic Forum report says that the Indian employers are outpacing global adoption of key technologies. This comes as the country leads in AI enrollment numbers. Pallavi has more. Pallavi, what are the other highlights of the report with respect to India?
Indian employers are outpacing their global peers in adoption of key technologies. That's the takeaway from the Future of Jobs Report 2025 published by the World Economic Forum. The report says that over a third of Indian employers are expecting semiconductors and computing tech, and over a fifth of these employers are expecting quantum and encryption to transform their operations. Now, the report also highlights increased digital access, geopolitical tensions and climate mitigation efforts as primary trends that are going to be shaping the future of jobs in India by 2030. Companies in India are also investing heavily in AI, in robotics, autonomous systems, energy technologies, and aligning with their global peers. That's according to the report, which also adds that the country's fastest growing job roles include big data specialists, AI and machine learning specialists, and security management specialists that are all reflective of these broader trends. Now, globally, the report predicts that over 22% of the jobs will see disruptions by 2030, with about 170 million new job roles created and almost 92 million displaced.
Thanks, Pallavi, for that. Now, with the Election Commission announcing 5th February as the polling date for Delhi, the battle for the national capital is heating up. Aam Aadmi Party, which is in the pole position in Delhi, is facing massive corruption allegations. To understand whether that will dent the party's prospects in the national capital, tune into The Big Question today evening at 6 p.m, where we ask if BJP can finally end end its over 2-decade losing streak in the national capital?
Assembly elections are concerned, they are always on a much more aggressive and very strong wicket to start with. Having said that, it doesn't mean that they are not having issues of anti-incumbency in the last 10 years. There is a set of anti-incumbency, but to their luck and to their advantage, they have Arvind Kejriwal and his leadership popularity ratings, which are unparalleled as far as when compared to other Delhi leaders, either of Congress or the BJP are concerned. He is almost having the same kind of lead over others, like Prime Minister Modi enjoys the prime ministerial rating over all other candidates, including Rahul Gandhi.
So catch the whole discussion at 6 p.m. today on the big decision. Now that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The world of capital markets and trading post-Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post-Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open.
Hello and welcome to KYC. Today our focus is on Rainbow Children's Medicare Limited. It's a hospital chain which deals with child care, childbirth and the like. In simplest of terms, established in 1999 in South India. Let's pull up some data with regard to the company. It was started as a small clinic and thereafter has forayed and has grown extremely sharply. In terms of the locations, etc., we'll come to, but let's first focus in on what it actually does. It operates a multi-speciality pediatric, obstetrics and gynecology hospital chain. The hospital chain focuses on all of the following care in terms of, largely in terms of childbirth. And it currently has a presence in 5 states, across 6 cities, has 19 hospitals and 1900 plus, to be absolutely specific, 1935 beds. And that's how it's stacking up at the end of Q2 FY25. In terms of the business itself, you're looking at a size of around 16,500 crore in terms of market cap. You're also seeing that it got listed in 2022. If you can have the 5-year chart of the company, you'll see it's given a very, very strong return. Since since May of 2022, the stock has gone from 450 odd to 1620. So from the date of listing, it's given very strong gains to shareholders in the hospital space, and a healthy return in terms of return ratios as well that the company offers. But let's dive deeper into this one. Let's try and see and zoom in, because on every one of KYC shows, we try and rate each company on the basis of 8 performance parameters. The first one being the income statement, then it's the balance sheet, how healthy is the balance sheet, return ratios is the third, how cash flows have stacked up historically last 3 years, as well as what one can expect going forward is the fourth parameter. The fifth one is on shareholding, how much is the promoter holding, and sixth focuses on street cred, how the performance of the stock has been. This one, of course, has been very, very strong. We'll try and break those numbers down as well. Street coverage, how many analysts track it, how do analysts view the company? That's the seventh parameter, street coverage. And eighth one is the valuation picture. This company versus others, how do valuations stack up in relative terms? Is it a good investment to make at this point? So we'll try and break all of that down. Joining me for that is Puneet Javeri. Puneet, hopefully we'll break this down in a nice and healthy manner for viewers. Let's first start off with the income statement. And the income statement, smaller company, and therefore growth has been very good, reflecting on that income statement over the last 3 years odd. The revenue CAGR has been around 24%, strong revenue growth. It's doubled in the last maybe 3 years odd in terms of revenue. From 650 crore, the revenue has gone to 1300 crore in FY24, and it grows at a fairly healthy clip even in FY25. In fact, FY25's Q2 numbers were extremely strong. One of the quarters they clocked around a 450 crore rupee top line. So therefore, the growth, the revenue growth in that sense looks quite good. You've seen a 24% CAGR, 3-year CAGR on the top line. EBITDA also very similar kind of growth, 30% growth on EBITDA. So some amount of operational efficiency also kicking through. And your EBITDA margins as per the revised Ind AS is at 33%. Earlier was operating at around 27-28% as per earlier Ind AS, but currently at 33%. PAT CAGR as a result, on a low base of just about 39 crore in FY21, PAT has zoomed to 218 crore, and that's why you've seen that 76% CAGR in terms of profit after tax. Can that sustain, grow? What's the direction in which it will go is something we'll have to zoom in on better. But that is, of course, forward guidance, what one can expect going forward. The second one is with regard to the balance sheet, and I'm going to try to break this down into 3 metrics. One is the shareholders' equity. Healthy at this point, 1367 crore of shareholders' equity. A large component of that is premium. Some amount of that premium is attributable to the IPO itself, which happened 2.5 years ago. But a large component of the premium is also profitability, which continues to accrue. Mind you, 218 crore of profit in FY24, likely already sitting in that number of 1367 crore as of September 2024. So that's one metric. The other one is the gross debt. A large part of the gross debt, it's a debt-free company largely, but a large part of the gross debt is lease liabilities. Generally, land is leased, building is leased, and therefore some bit of this debt reflecting here is lease liabilities, or rather large part of it, 700 crore plus is lease liabilities, and therefore the gross debt is largely zero. We'll have to ask management as to what the capital allocation strategy is going forward, what the growth strategy is, and how they intend to fund growth. That will be an interesting conversation, and we have the management with us shortly. The third piece on the balance sheet is the cash and bank balances. They've got investments which are quite sizable in that sense, but the cash bank balance is just about 26 crore odd, which is also healthy for a company of this size. Decently healthy cash and bank balance sitting in. One more thing I want to just highlight as part of top line and balance sheet is that there's a 50-50 split between the revenue which comes in from insurers and revenue which comes directly from customers, which is uninsured treatment that the hospital chain is currently servicing. And therefore, it's kind of a 50-50 split where 50% is coming straight from insurers. So some amount of visibility even in terms of cash flow there. Now, coming straight to cash flow, because that's the important metric. Cash flow from operations has grown again very healthy clip, largely in line with that EBITDA number, 30% growth. But you're looking at net cash flow, which is negative. Fair point there, because what you will see in fast growing businesses is all the cash flow that comes in gets invested fairly quickly. And therefore, the important number to track here is the cash flow from operations, which is growing healthily in line with EBITDA. And the second metric is going to be return ratios, because once that cash is invested, what's the kind of return that the company is generating on that? And Puneet's going to break that down for us.
Well, definitely, because the return ratios, while as you already said, it's maintained at a very strong clip. The ROE is around 19%, so it's been very steady over the last few years as well. I think post that FY21 blip, and that was guaranteed accrued to the pandemic, it was a one-time effect. When you look at the return on capital employed ratio as well, that's also very strong at about 18.2%. That's another key positive for this company as well. And for the industry as a whole, as a hospital chain, it is expected to maintain a decent clip. Because of the other peers also investing capital very quickly, as you rightly said, Harsh. But it's maintained at a good 18.2%. Let me move on quickly to the shareholding as well, because that's another aspect to look at. It's been steady at around 49.8% for the promoters, while we have seen strong participation from FIIs, specifically around 25% of the shareholding is with the FIIs. There has been decent interest in terms of DIs as well as from the public as well, public investors as well, in terms of this company. Finally, when you look at the street cred as well, as you rightly said, Harsh, from May 22, the stocks been almost up about 2.5 times or 254% since listing in May 2022. It's given, when you look at the returns CAGR on a yearly basis, about 54%. So it's done very well for us investors who participated in the IPO and henceforth as well. So definitely a key aspect. Of course, you rightly mentioned that the company is a very high growing company. So the investments have been higher, and that's the reason for the negligible dividend yield of about 0.19%. But I think the reason we've given it, of course, a thumbs up is, of course, it's opening newer hospitals as well and requires that kind of capital. So definitely on that, the dividend yield will be accepted by the investors because it's a high growth company. But Harsh, what about the street cred as well? What is the analyst currently thinking on the street according to for this company specifically?
Yeah, absolutely, Puneet. So interesting point made there that dividends generally, I'll just cap that point off. Dividends generally are lower for fast growing companies. Also, the important metric to track when dividends are low is the return ratios. And return ratios here are higher teens.
Yeah.
And therefore, they're deploying cash at a far faster rate than your average company, or rather the average returns offered by companies in the listed space. And therefore, that dividend number is not so bad. Let's look at though the street coverage. There are 11 analysts which track this one. 9 of them have a buy rating on it, but the upside is what the key is, just about 2%. And therefore, while 80+% analysts have a buy call, the upside is absolutely muted. Therefore, the next 12 months, analysts don't expect much, even though they're quite constructive on the business per se in the longer term. But Puneet, let's talk about valuations here, because likely that's the reason why analysts are not so bullish on this one.
And definitely, because over the last 6 to 7 years, we've seen number of very nice hospitals get and list in the market as well. So when you compare not just on valuation but also on the occupancy, on the ARPOB, of course, is average revenue per operating bed, as well as the kind of capacity and bed capacity that they hold in the current hospital is another key metric to track. When you look at the ARPOB for a company like Rainbow is the highest among the 5 that we've taken in this particular comparison, and that's also because of the niche that they operate in the pediatric space. That's of course giving them a premium compared to others in terms of the average revenue per operating bed. And essentially, when you look at the bed capacity as well, while it is currently at around 1900 and it's lowest among the 5 that we've compared it with, it's interesting that the company is looking to increase the capacity by almost 50% over the next 3 to 4 years and going to almost 2900 installed beds at that particular time. Currently, the occupancy would be slightly something that is a slight worry because of it's fallen by around 7.5% to come in at 47%. So it was around the 55% range mark in FY23, and as of FY24 end, they've come in at roughly around 47%. So that occupancy is one of the key things. But of course, it's bear in mind that this is a niche business of constructed around the pediatric care as well as the gynecology that Harsh spoke about. So that's one of the key things as well. When you finally compare it to the valuation, there we'll see a stark difference and a premium to someone like a Rainbow based on the other peers as well. So you see KIMS is another hospital that's gotten that kind of premium. They're also operating other hospitals and entering key states like Maharashtra while increasing the presence in the south. Yatharth is another one which is present in the western. But when you look at the other peers as well, comparing it to an Aster DM or a Shelby, it is kind of asking for that premium because of the higher ARPOB or the average revenue per operating bed, while also having a clear path to growth expansion over the next 3 years. So while the valuation has been at a premium compared to the other peers, it seems that the street is quite happy with the company's niche focus as well as higher margins as well.
But what stands out for me, Puneet, as part of that is the ARPOB. I mean, the ARPOB is at 56,000 rupees when others have a range of around 30 to 43,000. So it's nearly 25% higher than everyone else. Whether that can sustain or not is one question, but that is possibly one of the reasons why you're seeing the kind of valuation picture that you're seeing on Rainbow versus others. Not looking as expensive when you're looking at that ARPOB number, which is generally the right metric to look at. Also, occupancy is slightly lower, which is understandable because the space is niche. But let's sum all of this up. Let's look at each of these metrics. Income statement, such strong growth, right? And therefore is a positive. Balance sheet is healthy at this point. Very little debt in that sense. Return ratios are very strong, high teens. You're looking at cash flow, which has grown largely in line with your EBITDA. Shareholding 50% owned by promoters and therefore continues to be quite well held. FII's good interest being seen over quarters. If you look at the FII trend, very good interest in that sense. Street cred, well, it's been a very good wealth compounder, 26% in the last 12 months. And multi-bagger in the last 2.5 years. Street coverage is, flattish, and that's largely because of the fact that the upside here does not seem all that lucrative with just a 2% upside, and the valuation picture is negative largely because you're seeing that it's one of the most expensive hospital chains in that sense. So 6.5 on 8 is what Rainbow Children gets as part of what we have analyzed today. But let's quickly look at SWOT, Puneet. Strengths, weaknesses, opportunities, threats. I'll start with strengths. One, it's well recognized, right? It's a profitable company and it's in a very niche market. So what you're seeing is a company which is high margin, high growth in a niche market. Always difficult to replicate as a business, and that's one of the key strengths that it has. Pediatrics, not too many listed companies and not too many companies only altogether, and therefore that is one of the key strengths of Rainbow.
But on the weakness side, of course, the valuation is one of them, but can't complain too much on valuations. It is getting rewarded for the kind of business they've built, and the falling occupancy is something that we'll quiz management also about, because from FY22 to 24 there has been a drop to 47% as well. But on the opportunity side, there is quite a bit that we should also
it provides a range of services, right, Puneet? You have a customer come in. You can provide him with far more services, which currently it does not provide because it focuses on childcare. And therefore, you have a larger window of opportunity available for it to grow in terms of its service offering. Second is the scope for expansion. Currently focused on very limited geographies. We spoke about 5 states, but just about 6 cities. And therefore, the scope for expansion is very, very large in a high return kind of a business. And therefore, you have free cash flow coming in, which you can always utilize for the purpose of growth and expansion.
Well, the other part is, of course, the competitive intensity that's been increasing around the city, because certain, multi-specialty hospitals are getting into the space, and they're also entering the southern market as well, which is a big growth driver for the company. While the company's entry into the North Indian market has been slightly delayed, it's expected to start construction in March of 2025. So that's been one of the key things. But we will also be speaking about this to the management as well, Harsh, because the North Indian market is something that's, a very big growth driver going forward as well.
Well, yes, absolutely. So let's bring on board the management. Let's not delay this. Vikas Maheshwari, who's the CFO at Rainbow Hospital, talking to us live. Welcome, Mr. Maheshwari. It's good having you here. And it'll be great getting your perspective. So we've tried to break down your company, of course. The attempt here is to try and understand what the growth could be over the next 3 years. What's your sense and where will the growth come from? Existing hospitals versus new hospitals? Just break it up for us.
Yeah, thank you. Thanks for inviting us and wish you a happy new year to you.
Wishing you a very, very happy new year, sir.
Yes. Thank you very much. So as far as the growth is concerned, it will be on the 3 legs. One is the existing units, which we have the matured units. We keep adding the doctors, we keep adding the specialties. So the growth will come from there. 1/4 of our units are new units, which has to grow and mature. Which in our language, the mature and non-mature is less than 5 years. So we feel that another leg of the growth will come from there as they keep on growing for the capacity which we have added. And the third growth will come from the new units which we have planned. In the next 3.5 years time, we are thinking of adding 1,000 beds. We have already laid out the plan for roughly close to 800 beds in our geographies. Out of that, in the 4 years, 3.5 years, you will see these capacities keeps coming up. So the growth will come from there. Broadly, on all these 3 legs or the growth drivers which we have just laid out, we believe that we should be able to grow our company based on the capex plan which we have listed at around 15 to 18% growth or mid-teen to high teens growth over a period of 3 to 4 years time.
Funding plan, Mr. Maheshwari.
So we have a very healthy balance sheet. I was looking at your presentations. So we have a very large investments also, which is invested into the debt funds, etc. So that the cash is 25 crores, but close to roughly 575 crore rupees we have invested into the debt funds, and the company is generating very healthy cash flow of around 350 crore rupees every year, and it will keep on growing as the company grows. So as far as the capex is concerned, it will be funded internally through the existing cash balance of 600 crores rupees plus our internal accruals going forward. And with this, whatever the capex plans we laid out, we believe that we will always remain a cash surplus company.
Mr. Maheshwari, good morning and thank you so much for joining us today. It's Puneet this side. I just wanted to ask your expansion into the North Indian market. I think you are opening 2 hospitals in Gurgaon. Wanted to understand because you've been focused on the south and steadily deepening your presence in cities like Hyderabad, but the North Indian market is of course very difficult to operate in because of the kind of competitive intensity there is there, while the company has also taken its time to go there. Just wanted to understand because just looking at some stats, the North Indian market does account for 60% of India's annual childbirth. So wanted to understand what's been the company strategy, because these all will come only in FY28. So what would lead the growth in the next 3 years, as well as your thoughts on the North Indian market as well and your entry into the same?
So let me complete this in a different way. The growth from the south market, we are adding capacity in our existing market, which is Bangalore. 2 hospitals are opening this calendar year. We are opening 1 hospital at Rajmundry, which will also get opened first half of this hospital. So the growth will come from there. At the same time, we are expanding our footprint in Tamil Nadu, which is Coimbatore. We are putting up some hospital, which will get operationalized next 18 to 24 months time. And then the bigger one, which is the North India, which will come. But in the interim period, obviously, we keep looking at opportunities where we can put up the hospital where the healthcare requirement is there. So as and when we identify, we'll keep on adding. So that will drive the growth in the interim period, where the biggest capex or the biggest capacity of 400 beds, which is coming in the Gurgaon. What we believe is that the Gurgaon is going to be the capital for the healthcare for the whole North India. It is an advantage north now because the government focus is also too much is on the North India, putting up the facility in terms of the infrastructures, road conditions, connectivity, etc. is is much larger improving. The most of the capex or the infrastructures earlier was developed in the South India. Now the type of infrastructures, road, etc. is getting built up, and the connectivity across all the North Indian states is much larger. Say for example, example, Gurgaon to Jaipur or Lucknow or Kanpur, it is less than 5-6 hours, right? And in case of emergency, the people can drive down, reach out, or they can take the flight, medical ambulances, and then land out at Delhi. This is one part, because we believe that whatever our peer group is also doing, they are putting up the large facilities in Gurgaon. We believe that the Gurgaon is going to be the hub, which was earlier the Delhi or other micro market locations. But I think Gurgaon will become a much larger hub, as in South India. If you come, there are the 4 or 5 large cities like Chennai, Hyderabad, Bangalore, Vizag, and obviously Coimbatore in the Kerala, 2 cities which has developed as a healthcare hub. I think the Gurgaon is moving towards that. And in the next 5-6 years, we'll look at Gurgaon as a hub where the whole North India will flock for the healthcare. At the same time, in the pediatric space in the North India, there is nothing actually. So we believe we have a very high hope, and based on the discussion which we had and the internal assessment we have done, we have a high conviction of putting up that capex. And that capex, for that we have already procured the land, and few approvals have come, few approvals are expected, which we believe that it should be coming by February end, and the March we will do the groundbreaking. From there, it should take 2 years time to build that hospitals. We are putting up 2 hospitals. There one will be the larger multi-specialty, super specialty hospital of 300 plus beds. Another will be 100 plus beds.
And what about your ARPOB, sir? Because it's sharply higher than some of the other competitors. Is that number sustainable, 56,000 rupees odd? And what should one make of your return ratios? Would you continue to maintain a healthy return ratio, late teens kind of number? Is that the aspiration?
Yeah, so first is ARPOB. We believe that ARPOB we will be able to maintain and keep it growing inflation adjusted. Right now we have at around 55,000 rupees of the ARPOB. I think we will be definitely able to maintain that and keep it growing as a inflation adjusted. This is one. Second, as far as what was your second question on
your return ratios, sir? You're
return
clocking
ratios,
very healthy ratios. Is that sustainable?
Yeah, we are very financially disciplined company. Any project which we take up, we ensure that the return ratios are at 20% of the northward in terms of ROC. So any project which doesn't yield the returns below 20% of the ROC, we generally don't take it up. And what else?
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first 2 months I couldn't move, and move as in I could move but slowly and etc. But I couldn't talk at all.
What next for Zerodha?
I think last year was probably the peak of the broking industry.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The world of capital markets and trading post Zerodha is probably never going to be the same. Was the idea to change things down because you loved trading?
I think the best case outcome was 100,000 customers forever.
In early 2024, you had a stroke. Was that your biggest challenge that you've ever faced?
The first 2 months I couldn't move, and move as in I could.
Hi, thanks so much for joining in. You're watching NDTV Profit. I'm Alex Matthew, and we're discussing Your Money Matters on NDTV Profit because for us at NDTV Profit, your money matters. It's really simple. We discuss everything related to your money, not just your investments, but also your expenses on things like travel, luxury, and even health. On today's episode, I want to talk to a cohort of individuals that is growing by the day. It is part of what a lot of people have dubbed the gig economy, and it exploded on the scene during the COVID-19 pandemic, where unfortunately a lot of people lost their jobs and so had to find alternative employment. And the thing is, that employment kind of stuck and people didn't want to go back to their 9-to-5s. And so the number of people in the gig economy who are freelancers, who are consultants and doing multiple jobs has actually gone up. The thing is, the way that you plan your finances if you are a freelancer is very different from somebody who's earning a regular paycheck. So we'll talk about what you need to bear in mind, the pros and cons, and the significant benefits that you can accrue over the course of the time that you continue to work. Joining me on the program is Santosh Joseph. Santosh, always a pleasure speaking to you, and thanks so much for joining me in studio.
Thanks, Alex. Glad to be back to join you.
Let's talk about let's define this cohort, because a lot of people